This meeting is being recorded. Let me see here. Continue. There we go. Okay. Good. All right. What are takeaways? Takeaways. What would you guys say right now in the 2 hours we've been going at this? What is your biggest takeaway that you've learned thus far? Anybody? Yes. Open up an LLC. Yes. Yes. That is huge.
Make sure as a business owner you open an account and you build your credit.
Yes, ma'am. There it is.
And there's different avenues too to work, and get residuals.
Yes, different ways to make residual income. Correct. Somebody on TV land said something.
Business lines of credit and different sources of leads from your credit, health insurance, and obviously it leads a long way. Your names match up from your credit to your health to your life insurance. 100%. So that adds up. I was wondering, it's like, why are you doing two other things that now it adds up?
Exactly. Guys, I like it because it, even from we talk a lot about passive income. This is a way for you to start generating income from multiple different streams. You start generating income from your life sales, then your annuity sales, then you got some credit repair residuals that are coming in, then you got some health insurance residuals that are coming in, you got some Medicare residuals coming in. You don't have to be the pro at everything. And I'm being fully transparent with you guys. I am not the pro at Medicare. I'm not the pro at credit repair. I know how to find the business and then refer it off. Natalia handles everything with credit repair. Every single piece, every aspect, she does all of that. From the enrollment to the interview. So if you have somebody, get in contact with Natalia, do a 3-way call. She'll schedule a meeting with the client, do the whole presentation for you, right? I know health insurance fairly well because I used to work health insurance years and years ago. But that's really it. Like, Medicare is not my space. I'll tell you who's really good at Medicare is Howard. Howard's really good in the Medicare space. So I leverage him for those types of meetings. E-commerce that we're doing right now, I leverage Carlos Colon with that. Just so you know, with Carlos, we've already done one transaction. We're doing one sale. We've got another one on the way from a client that we talked to yesterday here. I did a review with Caesar on a client that we did a $300,000 rollover with the client. And she says to me, she says, listen, I got another $140,000. What could we do with it? I just don't, she's like, I didn't give it to you because I don't want to tie it up for long term. I said, okay, well, let me talk to you about a short-term opportunity. And so I talked to her about the credit, e-commerce and how it works. And she was like, oh, hell yeah, I want that. So you know what I did? I already matched her up to go talk to Carlos. You got to leverage that in business. Honestly, you got to leverage that and know that, you don't have to be the master of everything. If there's one thing that I still touch myself and do myself, it's life and annuity. That is my space. That's my space. That's where I'm the most dangerous. But e-commerce, send to Carlos. Medicare, send to Howard. Credit, boom, send to Natalia. It's kind of cool. And I want this for everybody. I genuinely do. It's kind of cool to look in a business account and you see commissions coming in from multiple different streams. Not different insurance companies, different streams. This is coming from this, 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 because you're helping clients with other necessities outside of just insurance. When I opened up TKO, I'll tell you what was a lot of the stuff that was happening behind the scenes before TKO even opened up. At Practice Company, I said to myself, I wonder how many top 25 lists I collect on a yearly basis. You ever ask yourself that question when you were at Practice Company? How many top 25s do you think the office that you were working at collects on a yearly basis? And we're only pitching one solution. And what was the solution? Recruit them. I go, do you know how many people in there could leverage credit repair or health insurance necessities or e-commerce? How many people there have a financial need outside of just being recruited? I go, there's one benefit that recruiting gives us. It's the ability to create massive distribution. Jarvis just then took it and 10x'd it. Honestly, that's all that it did. I wish that every single top 25 I collected over the last 5 years that I was at Practice Company, I would have put into some type of Excel file. You know how big that list would have been if I would have just popped all those in as a lead into Jarvis and let Jarvis handle the rest? Think about that. And that's kind of why TKO is not TKO agency. It's TKO Financial Network. I want us to be multiple different networks that provide financial solutions based on what the client needs. I'm working right now with Minor Ramos, who's really doing an amazing job with Infinite Banking and Velocity Banking in building a platform for you guys where you can leverage Velocity Banking as a way to find infinite banking cases. Guys, Velocity Banking is a phenomenal tool that you can use when you sit with a client and go, listen, let's do a budget analysis. Let's really, I mean, tell me you pay this much every month in this, great. This credit card, what's your interest? It's this interest. This one's what's your interest? This is, and then pop all that information into a software, and the software say to you, boom, this client spends $1,000 a month on unsecured monthly bills. If you take that $1,000 and pop it into an infinite banking whole life plan, and then take that money right back out later to pay that same debt and keep the interest, you can show the client. Imagine if you could show a client how to make 4% on their monthly bills. So instead of paying the money directly to the bill, put it into something that makes 4% and then pay the bill. $1,000 a month. Now you're selling 12,000 AP cases with Middle America. I mean, think about it yourself. Check the page. Think about this yourself. How many bills do you guys think you pay on a monthly basis that come from a debt that you pay? Just think about it. Like a credit card, a card payment, you know what I mean? A loan, a personal loan, a student loan, something that you pay and there's interest charged. If you added that up, could it get to $800 a month or $1,000 a month? So now imagine if we taught that person to redirect that to something that earns them 4 to 6% and then pays the bill. Earn 4 to 6% and then pay the bill. That'd be like me saying to you this right now. I'd say to Zavala, you give me the money that you pay every month to pay your bills. You give it to me. I'm gonna give you 4% interest of what you gave me, and then I'm gonna pay your bills. Would you let me do it? Of course, make money on your own money. All of these are networks. Health insurance network, Medicare network, credit repair network, e-commerce network, and all of it, I'm not gonna lie, I leverage to find what? Life and annuity. Because life and annuity pays more than anything else. It does, it genuinely pays. You could not get me to become a health insurance agent. No disrespect to them. You could not get me to become a credit repair agent. I know the benefit of it and I leverage it, but the place I'm at 90% of my time, life and annuity. But what's crazy is, how do I find life and annuity? You know how I find life and annuity? I find it through credit repair conversations. I find it through health insurance conversations. I find it through e-commerce conversations, and I find it through recruiting conversations. Go to my social media and take a look at what I am advertising. I'm always advertising something outside of life and annuity. I don't know, it just works. But I find life and annuity opportunities through it. I find it. I don't know why. You talk life insurance, people are like, right? You say, but look, I can offer you health insurance at a very low cost to protect your family. Oh, wait, I want to know more. And then boom. You want to know, look, I'll give you a tip, and I'll get right into the next session because we're going to do illustrations right now. Health insurance. You know, health insurance has a monthly payment and a deductible. All health insurance, monthly payment and the deductible. The deductible is usually what, 5,000, 6,000, right? A lot of people are like, man, that's kind of high. I don't have that money. Mr. Client, what if for an extra $30 a month? So your health insurance is, $50. What if for an extra $30 a month, I can make sure that deductible is paid for you in the event that you develop cancer, stroke, or heart attack? Would that make sense for you? I'll repeat it. You run a health insurance quote, it's $20 a month, but it's a $5,000 deductible. Mr. Client, what if for an extra $30 more a month, if you develop a chronic or critical illness like a cancer, a stroke, a heart attack, an organ transplant, you got to go to the hospital. I can make sure that deductible is paid for you. You don't got to come up with the money. There's an insurance company that'll pay that deductible for you and replace your income while you're away on medical leave. Would you do it? Think about it. Would you? You know what I just sold them? A term insurance policy with living benefits. That's what I sold them. Because what does living benefit do? Living benefit says we'll give you lump sum cash that you can use in the event that you develop what? Cancer, stroke, a heart attack, an organ transplant, ALS, cystic fibrosis, 40% burns of the body, right? Brain trauma, paralyzation. So if that happens, your health insurance says pay the deductible and we'll pay all the medical bills. But your living benefit says here's your lump sum money. Replace your income while you're not working and pay that deductible so the health insurance could kick in for an extra 30 more bucks a month. You know what the client says? I can do that. I don't got to worry about that $5,000 deductible. Not if it's any of the list of these things right here. And let's be real. I'll tell you, me personally, I have health insurance for me and my kids. We're all perfectly healthy. None of us take medication. None of us have any pre-existing conditions. I have health insurance in case, excuse my French, shit happens. So something big happens, I know the most I got to pay is the deductible. But I also know that my life insurance pretty much pays the deductible. And then it replaces my income while I'm bedside taking care of my kids or while I'm in the hospital and being taken care of. For some of the biggest things that can put us down, cancer, strokes, heart attacks, you know what I mean? Like, so when I sell health, it's such an easy sale. It's such an easy sale to sell a term life insurance policy afterwards. And how I introduce it is the way I just showed you. Mr. Klein, you have a $5,000 deductible. What if I could get that $5,000 deductible paid for completely for you in the event that you develop cancer, stroke, or heart attack, but it costs you an extra $30 more a month? Your health insurance right now, I'm quoting you at is 30 bucks. So instead of paying 30, you pay 60, but now you have a zero deductible in the event of this list of things. I'll do it. Oh, and by the way, I'm going to replace your income while you're away. Right? Now it's almost like a disability insurance too. I'll do it. Okay. So I need to do a fact finder on every client. You want to know what's something that's made me more money than anything else has? I don't just go in to service what they need. I go in and I fact find the heck out of them. Tony, do you do a budget? Yes, I do a budget on every client. I need to know where your money's going, what discretionary you have. Tony, do you ask, their debts? Do you ask them how much debt they have and what their monthly payments are and what's credit card bill versus mortgage? Yes, I ask them all that because I want to see if there's an opportunity there. Because if I could free up $800 a month in bills, that $800 a month can now fund an IUL. I'm always going towards the insurance side of it eventually. That's my goal. I got to find money to go there. But that was just a credit repair client. I don't care. Just because they wanted credit doesn't mean that there's not other options there that they don't know about that they need. I just got to find it. My meeting, people always ask me, how many meetings does it take for you to close? 2. Because my first one is just fact finding. If I don't fact find it, if I go in just for the sale in the first meeting, I'm only going in as a transactional sales rep, meaning I'm only going to cater to what they told me they need. But I didn't really take the time that I needed behind the scenes, away from them, to really look at the case and analyze it and go, okay, wait a minute, there's something here. Wait, there's something there. Wait, there's something here. And you might question and say to yourself, well, what if they ask you why you're asking all those questions? They only wanted credit, but now you're asking them all these other questions. Or they only wanted health, but now you're asking them all these other questions. It's a simple answer. Mr. Client, I'm a fiduciary underwriter. I have to make sure I'm providing you a solid recommendation. So I need to know what your financial outlook looks today before I submit this application. Is that okay with you? Sure, no problem. Which, by the way, I don't get that asked often, just so you know. I really don't. I really don't. You ask them, they tell you. You ask them, they tell you. You'd be amazed how many people, complete strangers, will tell you their entire life. I'm not even playing with you. I've met with people that are like, listen, I did this last week with my lover, and then I did this the week prior with my wife. And I'm like, wait, what? Well, you don't even know me. They just want to tell you their stories, especially their finances. So stop worrying about it's confidential. I'm going to feel awkward asking them. Ask them. Your job is to do a financial colonoscopy on every single person that you meet with. I want to know everything about you financially. I do. I want to know it. I want to know it. Contingent beneficiaries, that's another great place I make sales. Contingent beneficiaries. Think about it. Contingent beneficiaries never spouse. It's always either a cousin, a parent, or an adult child, a grandchild. But now you're working in the family tree, So every single person I meet with, if you come to me by health or your credit or e-commerce, I'm going to do a full fact finder on you so that I could find the insurance opportunities. That one little itty bitty case that Nefertari brought me on. Hey, Tony, can you help me replace a 15-year term policy? She's paying $36 a month. That's what it was. That's what it started out as. Yeah, of course, no problem. I'll help you with it. Let's fact find. Oh, what are you? I'm a veterinarian. How much income do you have coming in? I have this much coming in. How much money do you have? Let's do a budget. This is how much is left over. What are you doing with the rest of your money? Well, you know, she tells me her story and this and that. Okay. Well, let me show you the different types of insurances that exist. Here's term, here's GUL, here's IO. Which of the three you're interested in? Oh, I really like the way that one works. Okay. Well, let's talk about retirement. You think she said to me, no, we only want to talk insurance? No, she said, no, okay, let's talk retirement. Well, what's your goal? What are you trying to accomplish? How much you looking to put away in savings? Oh, I could afford this much in savings. Well, what if I could use that savings to provide the insurance that you need while also providing for the savings that you need? I can knock out two birds with one stone. Oh, I like that. $220 a month on an IUL and $20 a month on a term. Nefertari did 2 sales in that meeting. And while I'm taking the application, do you have any assets? Well, yeah, I got 85 grand in an old 401k. Wait, what? What are you doing with that money right now? Oh, I don't know. It's just there. What if I could show you better ways to grow that money, more control of that money, less fees in that money? Would that make sense? Yes, it would. By the way, I'm flying into Chicago on Thursday. Maybe we can meet on Friday for a cup of coffee. Sure. We meet. 100. She says, I don't have 85. I apologize. I was like, oh, okay. She's like, I have 95. All right, cool. Guess what? I already have all her info for the life. I have everything. I just need her to tell me yes. Send me a picture of your statement and tell me, yes, I have everything I need to submit your annuity. Boom, 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 boom. How's your health insurance? The more things you sell your clients, the stickier they become to you. If they only bought one thing, it's easy for them to untether themselves from you. But if they bought 4 or 5 things from you, they're not leaving you. That's too hard of an untethering. You know why bank accounts love selling debit cards and credit cards? You know why banks love offering the ability to log in and create online bill pay? That is the biggest retention system that they use. So you can get pissed as hell at them because you just paid $105 in NSF charges from 3 transactions at $2 a piece, but you paid $35 each. I hate you. You're not going to refund me my money. I'm leaving. And then you log in and you're like, damn, I got like 15 things tied to this damn bank. My mortgage comes out, my car payment comes out. I got to get a new credit card for this. My Apple Pay's connected, my this, my that. There's so much connected. You're like, you know what? I'll stay. Because you're so tethered to them. Those are called sticky sales. Those are called sticky sales. You sell them this, you sell them this, you sell them this, you sell them this. Their relationship with you is now so crucial. They're not gonna, another agent could come by, you ain't gonna get him. There's too much that they would have to untether and they're too busy to untether it all. That's what it does for you. So you try to obtain as much as you can. Boom, boom, boom. I don't try to go after everything in one meeting. I don't. I want to meet the needs of what they asked me for, but I want to make sure I find something before the end of the meeting so it gives me merit to do another meeting. Find something to do another meeting. Find something to do another meeting. And I'm boom, 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 boom. Statistically, you'll sell people 4 to 6 times in their history with you. In their career with you, you'll sell them 4 to 6 times. If you're not teeing up your term insurance clients for an annual conversation about converting it into an IUL, you're missing out on more income. So don't think just because you sold them a term that you shouldn't at one point on a delivery sell them an IUL or show them an IUL. This is what your term could turn into. You know what? Do you think maybe next year we can have a conversation about converting a part of your term into an IUL? Can I challenge you by next year to come up with an extra $200 a month in savings? Yes, I can. Okay, I'm going to hold you to it. I'm going to hold you to it, right? By the way, let's do a quick budget. Well, if we could pay this off and this off and this off, guess what? Next year, you have an extra $200 a month. How did you do that? Well, it's a concept called velocity banking. I have the software for it. Awesome. Let's do it. You might make only chump change on that, consultation for velocity banking, right? But if you get to do a 2,400 AP rollover, a conversion next year, guaranteed approved. Hey, at a 95% contract, you just make $2,000 in commissions next year. Is it worth it? Of course it is. You'll make 4 to 6 sales on every single client if you do right by them in the first one, and you're trying to take care of holistically all of their needs. I'll give you one more tip. We'll get into illustrations. You guys are like this. When you sell a client on a policy, let's say you do a dime analysis and it's a $450,000 insurance, right, that they need. When they approve, Go to the underwriter, say, Mr. Underwriter, how much more insurance can this person get without any more medical underwriting? How much more? Right? And you know what the underwriter's gonna say? Well, you know, we approved them for 700,000, but they only wanted 450. Okay, so there's another 250,000 that the client could get if they wanted, right? Yes, no medical underwriting, just ready to go. Just sign the app and go. Yes, okay, cool. No problem, thank you. You know what I'm doing on delivery? I'm coming with a $250,000 term. And I'm saying, I got great news for you, Mr. Client. Here's your $450,000 of insurance that you want. But I just want you to know, for an extra 20 more bucks, they've already approved you for an additional 250,000. Ready to go. I mean, is the $20 a month worth it to keep it and use it at McDonald's and 7-Eleven? Or maybe you can apply that 20 bucks towards the extra 250,000. What do you want to do, Mr. Client? Oh, that's it? Yeah, go ahead, get it. Okay, cool, no problem. I'll send you the application in the next 24 hours to sign. It's already approved, ready to go. Done. Second policy sale. All because you took the time to ask the underwriter, how much more additional insurance can this client get? Already approved without having to do another bit of underwriting. No more, no medical, no, just how much additional insurance is already approved? Even if you're selling them a 10-year term or a 15-year term, they weren't going to have it to begin with. So, you know, that extra sales, an extra 20, 30 bucks. But look, 30 bucks is 360 of annual premium. 95% contracts, extra 300 bucks. 300 bucks bought into leads is $150 worth of aged leads. I mean, there's 150 aged leads. One of those sales, bam, there's another 1,000, there's another 2,000, there's another 3,000. Everything I look at like that. I look at it like there's a dollar sign there that I could flip. There's a dollar sign there that I could flip. There's a dollar sign there that I could flip. That's the mindset you got to kind of go in. Those are where you find little here, little here, little here, little here. Now you're multi-selling 2, 3, 4. Ask Howard and Nicole how often I turn in an application and it's like 4 or 5 apps. You know what I mean? Like boom, boom, boom. If they just bought a turn, you know what's another thing I'll do? I'll bring with me a small little kid IUL to the delivery meeting. Delivery meetings and fact-finding meetings are so big and nobody takes advantage of them. In this industry, the way they should. Delivery, a lot of people think delivery meetings, oh, I'm just gonna go and deliver the policy. No, I'm gonna go in and fact find again, I'm gonna find more money. Yesterday, I went with Caesar to go deliver a policy. And we were there for an hour and a half. You know what we did before we left? I scheduled a meeting on Monday to talk to her daughter. We scheduled a virtual BMP with hopefully what's gonna be 10 to 15 people in August of people that she knows that she wants to talk about these products and services to. We found an additional $140,000 that's sitting in her savings account, of which I said to her, how much of it are you willing to leave for long-term? She's gonna think about it. I said, add that money back, add that money into your annuity that we just delivered to you. But whatever short-term you have, let's look into e-commerce. That wasn't a fact-finding meeting, that was a delivery. That's delivery policy. So in deliveries, you can bring with you the extra terms or bring with you a kid IUL. You know, I noticed you got a couple children. I just want to show you something. Maybe it makes sense, maybe it doesn't, but it's something that a lot of my clients take advantage of. And here's how it works. It's just, you know, you have 3 kids, I put them at 40 bucks a month. You know, I can bring that down if you want to bring that up, but I just want to show you how it works. Look what it does. Boom, 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 and boom, 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 boom. Is this something that would make sense for you? Yeah, I love it. You want to take advantage of it? It's another opportunity to try to make another sale. Yes, cool. All I need is the kids' information because I already have yours. I already have your address, your bank account, your social, your license. I already have everything. I just need your kids. Give me their date of birth, give me their social, give me their height and weight, give me their doctor. Out the door. Boom. 5 minutes. Found another opportunity. Oh, I can't afford it. Let me ask you a question. Is this something, this is a plan that a lot of grandparents love to do. Is this something that maybe their grandparents would be interested in doing for your children? Oh my God, my mom would love doing something like this. Okay, well, are you opposed to me sitting down and chatting with her about it? Kid policies could be funded by grandparents. Yeah. Grandparents love doing that stuff, y'all. They love doing that stuff. I'm throwing out these nuggets to you guys so that you guys can understand. Health insurance, credit repair, Medicare, delivery meetings, fact-finding meetings, that's your gold. That is your absolute gold in this business. That's where you find so many stinking opportunities. Contingent beneficiaries, so many stinking opportunities, guys. 4, 5, 6 sales per household. It's there. It's there if you go looking for it. And along the way, you know what I'm also trying to find? Recruiting opportunities too. Mr. Klein, we just did a budget. You don't have an expense problem. You got an income problem. We can find ways to make you some extra money. An extra $1,000 benefit. Yes, it would. Well, let me show you how it works. You can do it as a referral partner or as a part-time partner. Which one do you want to do? Referral sources sometimes are great sources, guys. I got tons of referral sources. People who have licenses, they would never show up to a training like this. But you know what they love doing? Referring me to people to call. Because they love receiving a referral commission. They love it. I do the work, boom. They love it. Or I pass it off. I just recently passed one off to Rubiel that he's working. I went into the group channel. Anybody here bilingual? I got a client. I can't take care of him. Anybody want him? Go. Tax accountants, tax preparers. Those are huge. Huge. From January to March, you know how busy they are? Clients coming in like a revolving door. Boom, 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 boom. You know what I tell a tax preparer? I go, let me put one of my agents in your office. You tell that agent how much of a tax refund the client's getting and give them their date of birth. So here's a scenario. Client gets back $5,000. She's 36 years old. Miss, look, listen, let's offer her two options. Here's one option. Instead of getting $5,000 back, you get $4,400 back, but you also get a $500,000 life insurance policy paid for the entire year with living benefits and everything, the bells and whistles. That's one option. Instead of $5,000, they get $4,400 back plus $500,000 worth of life insurance with living benefits, or they get the full $5,000 back now. Let's just talk to them. If you show 10 people and 2 of them buy, use the $1,200 annual premium. What did I sell? I annualized a term policy. I just paid the whole year off with whatever, with $600 of their $5,000 refund. That's all I did. And then you know what I do next year when they do their taxes? Pay the annual premium again. That's it. Because let's be real, a lot of middle Americans, when money's in their pocket, it burns a hole in them. That money's already called for before they left the door. So I got to try to capitalize now before you leave. You're getting $5,000 back. I just want 600 of it. I'm not going to tell them $50 a month. No, that's a chargeback waiting to happen. No, 600. So instead of $5,000 back, get 4,600 back. You know what your tax preparer is going to do? They're going to open up their entire book of business to you. Just because their license, you get to split that 600 with them. Now they're making money just for doing taxes. Give one of my agents a desk to work in your office, and just make sure that person is the second to last person they meet before they get their tax return. Oh, that's all you got to do. That's it. Cool. I like that. Boom. Now all of a sudden when taxes is over, hey, listen, what if I could run a campaign with everybody that's a client of yours? A text message blast campaign, an email blast campaign, letting them know some of the services that we offer. What if only 5% of your clientele signs up? How many clients do you have? Well, I got 5,000. What's 5% of that? Think about it. It's 250 people. So if 250 people sign up for one policy at 600 points, 600 AP, it's $50 a month. That's a lot of premium we're splitting just by opening up. Now, do we have a software that'll do that? That'll text message all these people at one time and voicemail? Oh my God, we do. And it costs $52.50 a month. Like, it can't get any easier. These are resources you want to take advantage of. Okay? Any questions real quick before I move into illustrations with Howard? Q&A? Nobody?
Would you consider basically helping the client out with their W-4 forms and changing their allowances?
Would I consider it?
Or do you think they probably won't make the payments and they'll be like, oh, I have a bunch of extra money?
I don't know. I get it. It's a place to find money. Wow, stop. It's a place to find money. I would probably do it with a tax account just to see how much extra money they're going to have left over. And I'd make sure that they'd be willing to take that extra money and put it into some type of saving strategy on EFT. But it's it's finding money. That's all you're doing. You're just finding money. Yeah. Okay. All right, guys. So here's what I want to do. We've got a little bit of time left here. We're going to do a training on illustrations. Okay. We're going to take lunch. I think the next thing after this is lunch, right? If I'm not mistaken. Hang on. Illustrations and then lunch. Lunch was supposed to be 12:45, which is 11:45. That's good. Okay. So we'll start lunch at 1 o'clock. Eastern time, which would be, I know I'm so confused. Eastern time, 12 o'clock Central time. So we got 40 minutes left. Okay. I'm going to tell you a little bit about the person. I talk about him often, but genuinely, I'm going to tell you right now, TKO would not be where it's at if it wasn't for this individual. Okay. Howard is someone that I've known for several years now. And he's got so much potential. He's really become one of the biggest assets that I've had the pleasure of being able to work with. He handles everything that has to do with illustration design for my personal practice, everything that has to do with application submission for my personal practice, because I needed more leverage in order to really run this organization. I needed to find ways to not focus so much on my personal business while still having a personal practice. And as a result, he's become a beast in how to do illustrations. I think, quite frankly, he's even better than me at it. Sometimes I'll do the illustration and he'll email me, he'll text me, hey, by the way, why did you do it this way? And then I'll look at it and I'll be like, oh yeah, like he's just really become that great of a person. I am not an analytical person. I think people who know me know that. I'm not the detail person. I'm not. I'm very action, go forward, big picture. He can really hone in on the details. So people that are very technical and structured, I like having around me, but I like having them around me where they do it versus coming to me. Because if you have a technical conversation with me, I'm brain paralyzed. But listen, he's one of the greatest resources that I've had. He's also the individual that, to be quite frank, allows Jarvis to be alive, because there's a whole different language you need to have with software developers. Just so you guys know, it's a whole nother language. And we got an amazing development team up in California, but I only communicate with them because I could talk English to Howard, and then Howard could talk technology to them. And because of that, it's there. It's there. So if you're not taking advantage of his Thursday night classes, he's doing Thursday night classes starting at 9 p.m. Eastern time. So that's 8 p.m. Central where you guys are at, on Jarvis. He's just doing a Q&A session with people. And I would encourage you, if you already have Jarvis, sit in on it, because there's always updates. If you don't have Jarvis, sit in on it so you can consider whether that's something you should do. But I'm going to bring Howard up here to do some quick illustrations here. Howard, can you hear me?
I can.
You can. Oh, he's awesome. Let's give Howard a big round of applause. He allows TKO to exist as well, too. My friend Howard, do you have screen sharing ability, or do I need to give it to you?
Probably need to give it to me.
I'm going in right now. Make co-host.
Probably need to close everything down on my screen that's up there.
Here's what's really cool about Howard. He's from South Africa, so he's got a really cool accent. His wife's name is also Tony, T-O-N-I. So at nighttime when he's dreaming, he screams Tony. We don't know if he's thinking about me, or if he's thinking about his wife. We have no idea. I have zero idea as to who it is. And we're okay with that. We're okay with that. It's like a Tony and I share Howard kind of scenario. So, all right, tonight's training that I'm going to be doing is really going to be simplified. I'm going to go back to final expense and mortgage protection. They're great programs. They pay very, very high. They approve very, very quick, and there's a market for it with the leads. So what I'm going to have Howard do is, Howard, let's look at Americo for final expense and the continuation program. Okay, I'll give the scenario, you run the illustrations. And then let's also look at, Oxford for final expense as well. And then we'll do a GUL with Anico. Let me write that down. So Americo, Oxford, and Anico, GUL with Anico. Okay. So while you're over there logging in and screen sharing, let me tell you a little bit about the products that Americo has. Pros and cons. I'm very kind of objective, as much as I can. What do I like about Americo? Quick approval, and they're very lenient in underwriting. But a couple of things you need to understand. If the client's been declined already once, you do not go to Americo. They will not approve if they've already been declined recently, and insurance companies can pull up the records if they've been declined by any company. Okay. Americo's lenient on underwriting. Americo is really it has speed in their corner. So if you got a client that wants speed, that's a great company to go to. Okay. Americo's really good with smokers who want to quit. They'll give them non-smoker ratings, even though they're smokers, for a period of, I believe, 12 months, maybe 24 months, the first year or 2 years. Howard can confirm what that is.
Yeah.
First year, there you go.
Generally 3 years.
Oh, there you go. So what happens is, after that time period has expired, the client's required to do a saliva exam. And if they test nicotine, then the rating goes up, right? So what the insurance company is basically saying, hey, Mr. Client, we're going to give you a shot. at a non-smoker rating. We're going to give this non-smoker rating to you for a 3-year period. On the 3rd year, however, I need you to do a saliva swab. And if nicotine doesn't show up, you'll remain as a non-smoker. But if it does show up, your price is going to go up. So you got 3 years to quit smoking. Does that make sense? It's pretty cool. I like it, right? There's a mobile. If you notice, he's on the mobile site. He's not even logged in. He's on the mobile site, which means you can run the quotes right there from your phone. Okay. And Howard, if you can, after this, post on the Voxer the link to that. But there's a mobile site right there for you to run the quotes. The 2 products there you want to look at, one of them is called the Eagle Premier. That's their final expense. It's up to $30,000 of insurance. Okay. And the other one that I like is their continuation plan. Their continuation plan, so that you guys know what it is, it's a 30-year term. But what happens is after the 30 years is up, 10% of whatever amount of insurance they signed up for becomes a final expense, and that remains for the rest of their life. That's pretty cool. We actually have that. It's pretty cool, pretty cost effective. I like the way that it works. So for example, Sandra, you got like 300,000 on that plan, if I'm not mistaken. So the way it works is she has $300,000 of insurance right now for 30 years. Living benefits as well. And it was like 5-minute approval. Pretty cool, right? After the 30 years expires, instead of having 0 insurance, she'll have 30,000, which is 10% of the 300,000. She'll have 30,000 left over as final expense that she can continue to pay for the rest of her life and leave behind for her family. Why does that make sense? I'm not going to tell you Sandra's age, but she's in her 30s. So 30 years from now, she'll be in her 60s, 61, right? Make it at the lowest possible. Got to get some brownie points wherever I can. But that's a perfect final expense solution for that person at that particular time. That's a great option. It's also great for mortgage protection liens. If you think about it, pay off your mortgage for 30, have your mortgage protected for 30 years. You have a $300,000 mortgage, there's a $300,000 policy, living benefits and death benefit. But then after that 30-year period is up, instead of feeling like you lost everything, at least keep 10% of it as a final expense plan, right? So let's run a couple scenarios. Let's first do the Eagle Premier. So you notice it's pretty simple. Pick the state. We'll pick, let's pick Illinois. We're in Chicago, why not? We'll go right there to the Eagle Premier series. That's their final expense product. All right, let's just say it's a 55-year-old male, non-smoker. It's pretty simple, kind of black and white. Let me do this as well. Hang on, I want to move this somewhere else. Can I move it up? Yeah, I'll go there. Okay, let's do that. Okay. All right, there we go. 10,000. Run it. My conversations, guys, with final expense clients is very easy. You got to keep it simple. I don't want to be stereotypical here, but I'm going to be very real, because sales is somewhat of an art. You got to really understand emotional intelligence. When you're dealing with clients that are 65, 70, 75 years of age, sometimes they have a harder time processing complex financial conversations. Simplify it down for them. They signed up for final expense. Guys, they're not thinking the way we are. We're in our 30s, 20s, 30s, and 40s in this room. When we think insurance, we think 300, 400, 500,000 because we got to pay off the mortgage, leave behind for the kids. A 65-year-old doesn't think that way. A 65-year-old says, my kids are grown. They're already living in their own houses. They got their own family. I just don't want to be a burden to them when I leave. I don't want that bill of the cremation costs or the funeral costs to be a burden. I just don't want that. That's why they call it final expense. Final expense is a marketing name. What this product really is, it's a whole life policy. I had that conversation with Juan 2 nights ago. It's a whole life policy that we call final expense, because the only thing that the 65, 70-year-old thinks about is making sure they're not a burden to their family when they pass away. So don't look at it and be like, oh my God, 10,000 of insurance costs $46 a month. I know I can get 500,000 of insurance for that. Don't think about it that way. To them, they're saying for $46 a month, I'm not a burden the day I pass away. That's covered. That's done. That meets their needs. So I want you to think about your life. Think about what you prioritize right now, and then go back 10 years ago. Did you prioritize the same thing 10 years ago? It was a very different priority, wasn't it? Right? I'm 37. I know at 27, I was not thinking about building a multi-million-dollar empire, and helping people generate 150 to 200. I wasn't thinking that. If I go back 10 more years from that, I was 17. A totally different Tony 17, totally different Tony 27, totally different Tony 37. You know what that means? At 65, I'm gonna be totally different too. I have a whole different outlook on life.
Yeah, you'll be bald by then. Oh, sorry. Whoops.
Yeah, but you get what I'm saying, guys? You got to put yourself in their situation. They're 65 to 70 years old. Chances are they're on a fixed income. The wealth of America in their 60s and 70s, they have an advisor that they're getting referred to. Anybody in their 60s and 70s that's putting their information on a lead system that we're calling, I promise you, is middle America to poverty America. Their income is $900 to $1,400 a month, and it's Social Security. They are on a fixed income. So low cost to them is important. Don't think, oh, I got to do a full presentation, explain how the IUL works. No. Mr. Klein, I'm going to show you how final expense works. It's very simple. You want to know my talk track for this? It's simple. It's very simple. I can get you up to $40,000 of insurance. It'll cost you anywhere from $50 to $150 a month. And as long as you pay it every single month, when you pass away, we leave the insurance to your family. If you happen to live really long and you put more money into it than the insurance policy actually allows, then we'll give your family more insurance to make sure. Actually, no, I apologize. Hang on, what is this? That beep kicked in. If you happen to live really long and you put enough money in there where you've put dollar for dollar how much insurance you have, you don't have to make any more payment this time.
Yeah.
So what are we really doing? We're prepaying the funeral costs. That's what you're doing. You want $15,000 protection? Either you have the $15,000 now, or you start putting $75 a month towards the 15. We'll give you $15,000 of coverage from day one. The moment you've put in enough money where you've Sorry, can you hear me now? Somebody unmuted me. Okay, there we go. The moment you've put in the $15,000, you no longer have to make any more payments. But if something happens to you prematurely before you've put away your $15,000, this insurance will pay $15,000. Pretty simple, right? You know what I'm waiting to hear them say? Is there any way I can get more insurance? If they say it, then I can have a conversation about a GUL. But if they don't say it, trust me, guys, I'm meeting their needs. That's what they're on a fixed income. They're just blessed to be able to look at their family in the face and say, hey, the funeral costs are covered. You don't got to worry about that. Notice I didn't talk living benefits. No. When you make a monthly payment, when you pass away, the funeral costs are covered. 15,000, 20, whatever you think it's going to cost for that. And all you're doing is you're prepaying in advance. You make your payment, you're covered from day one. If you happen to pay into this plan enough money to where that total amount is the full 15,000 of insurance that you want, you don't have to make any more payments and the 15,000 is ready to go. Oh, I like that. How do I apply? We can apply right now. Not a problem. Takes us 5 minutes to figure it out. Now, if we apply right now, Mr. Client, they're going to draft money today, if not tomorrow. Is that something you're prepared for? Yes, it is. Okay, perfect. Mr. Client, just by the way, I need to know who would be your contingent beneficiaries because it's important that I let them know what type of policy this is and what it does and what the protocol is, right? I need to know who those people are. Now, all of a sudden I'm working. Now, you know what a 70-year-old refers you to? A 40-year-old. They're 30-year-old, they're children that they had 30 years ago. Now that's a sweet spot. Now you're talking IULs, GULs, rollovers, kid policies. That's how you work down the family tree. But that's a final expense conversation. It's very boom, boom. You can have final expense meetings in one meeting. You can transact in one meeting. Matter of fact, I'm going to tell you this. If you're working leads, you should try to close final expense in one meeting. You know why? Your leads, however exclusive they are, I promise you there's 5, 6 other agents calling behind you. Because you might say, oh, it's exclusive to me. That marketing company is exclusive, but you don't know if that client filled out 4 or 5 other questionnaires from 3 or 4 other marketing companies. There's other agents that are hungry. Question is, who's hungrier, you or them? Transact in that one meeting. Once you've transacted, then you can go back afterwards in the delivery and fact find a little bit more, build a little bit more rapport, do more things with them, right? But look how quick that quote was done, bam. Let's say I'm the client, Howard, and I say, you know what, I can afford a little bit more than that. I can afford 75. Can you tell me how much 75 a month could get me? How simple it is. He's in the mobile app, so it looks the same on your phone. So you saw what he did there? He switched it to use premium amount. So rather than inputting the face amount, he's putting in the monthly amount and letting the computer tell me how much insurance I can get for that amount. Run, and bam. Where's the number? There it is. 19,688. Mr. Klein, for 75, I can get you 19.6 of coverage. Does that fit within your budget? Yes, it does. This kind of works the exact same. It'll be here.
All assuming we can get you qualified and at the rate that we're submitting you at.
Say that again, I'm sorry.
That's assuming we can get you qualified and we can get you qualified at the right rate. They might knock you up or knock you down.
There you go. Mr. Klein, just so you know as well too, I'm authorized to offer you a state-approved legal packet that will include a last will and testament, a medical care directive, and a power of attorney, and an emergency contact list if this is something you should decide to take action to. Right? Oh, that'd be great. What does that do? Well, you could assign this to your estate, or you could assign this to a will, and you can have that packet there, right? That protects you in the event you pass. A power of attorney lets someone control your financial assets while you're alive. A last will directs the money to who you want it to go to. A medical care directive directs someone to be responsible for the last decisions if you're in the hospital and unable to make your own decisions. Oh, you mean I get that? Yes, that's something that typically an estate planner charges for. We provide it for you at no cost to all of our clients. I'd really like that. Perfect. Let's apply for this, get you approved, and we'll schedule a second meeting to do this and that, to do that analysis. You know what I do now in the second meeting? I block off an hour and I do I fill out that whole thing. I want to know who your emergency contacts are. I want to know who your beneficiary is. I want to know who your contingent, I want to know all that stuff. Do you know why? Those are referrals. Those are absolutely referrals. Do these people know you have this policy? No, they don't. Would it make sense if they had a chance to, see and know what this policy can do in the event of? Mr. Klein, do you know how many people have life insurance where their beneficiaries don't know anything about it? They pass away and years go by before they find out that there was actually some financial resources to help during that trying time in their life. It's my job to make sure that they know who I am, what my number is, what the protocol is, what this does and what it doesn't do. It's called the Kaizen Soulmate packet right there. Simple. That's another meeting. It's another sale. That's what it is. That's the added value you bring. Which, by the way, when people tell me no for final expense leads, I'm not interested, I make sure that I address this free packet first before they tell me no again. No, I'm not interested. That's fine. I just want you to know I'm mainly calling because you qualify for a free legal document, which includes a last will and testament, a medical care directive, and a power of attorney. These are typically $500 to $1,000 worth. This is a state-approved packet that you qualify for. You could use this with your existing insurance or any future insurances that you purchase. Are you sure you're not interested in at least receiving this package? Oh, wait, I didn't know I get that. Yeah, I can meet. Another meeting, another opportunity. And yes, sometimes you're going to give the packet away for free and nobody's going to do anything. But if it's another meeting, it's another opportunity. People act very differently on the phone than they do face-to-face. You get emotional intelligence when you're face-to-face with them. You really do. They can see your expression, your body language. You can build trust with them, and then maybe they'll open up and talk to you about their insurances. So this is all for leads. Oh, I already have insurance. That's awesome. Mr. Klein, I just want you to know my specialty is helping you save 20 to 30% on your monthly premiums on that existing insurance. Let me ask you a question. If I could help reduce the cost of your current insurance, would that benefit your budget? Yes, it would. Great. I see here that you're located on a 123 ABC Avenue. Is that right? Yes, it is. Mr. Klein, I'm actually scheduled to be out that way tomorrow at 4 o'clock. I've got a client to meet that lives in that neighborhood. Are you available at 5? Yes, of course. Great. I'll even bring with me this legal packet that I just explained to you. Now I'm talking to existing clients. What am I trying to do? Trying to find them a better insurance policy. Just because they have insurance doesn't mean you're out the door. If you could find them better insurance, as I love this industry and I hate this industry at the same time. Anybody can get this license. I've seen some grimy insurance agents selling some grimy products. You sit down with the client, they're like, oh no, I'm only paying 20 bucks a month. I have $500,000 of coverage. I'm like, you're 70? No, let me see. Oh, that's an accident policy, Mr. Client. they're only going to pay out if you pass away from an accident. So unless you like bungee jumping, this might not be for you. I wasn't aware of that. I know. I'm glad we had a chance to meet, though. I'm going to get you some good coverage. I'm going to be very realistic with you, too. I can't get you a $500,000, Mr. Klein, for $20, but I can get you 15,000 for $50. That's the reality. Why did they sell that to me? Because they wanted to make a commission and never see you again. I apologize for that. On behalf of the industry, I apologize. It's the truth, though. I'm being very real. That happens so many times. But that's how I handle final expense sales. I don't have insurance. Great, you have this legal packet you qualify for. You sure you don't want to meet? I have insurance. Great, I specialize in saving you 20 to 30% on your monthly premiums. Would a reduction of 20 to 30% help your budget? Yes, it would. Great. I see you're located here. Yes. I have a 4 o'clock meeting around that area. Even if I don't, I have a meeting in that area. You understand? I have a 4 o'clock meeting there tomorrow, actually. I got to stop by to see a client. Do you mind if I stop and see you around 5? Sure, no problem. Come by. Okay, I'll be there between 5 and 5:30. I'm not sure how long my meeting's going to go. Cool. By the way, with COVID-19 going on right now, I just want to be very respectful. Do you need me to bring a mask? Would you care to meet outside? I want to make sure that you feel comfortable. Oh, no. You know what some people say? Oh, I don't give a damn about that crap. Come on over. Some people are like, no, please bring a mask, bring hand sanitizer, bring gloves, bring water goggles. You know, like, okay, I got you. No problem. You got to be respectful towards it. Mr. Klein, if you want, I could just pull up to the front and we could just do everything over the phone. I'm going to physically be present because if you decide to take action, I need to make sure that you are who you say you are, but I can do it over the phone, no problem. How good are you with technology? Are you okay with do a virtual meeting? Sometimes you come across those people in that age bracket that they're pretty decent with technology. My grandmother's 78 years old. Bro, she gets through Facebook. I have no idea how she does it. She's a beast in that world. I'm like, abuela, what are you doing? You know, most of them aren't though. So you got to be willing to take that stride and go see them. Right? And then be willing to meet with their kids and their grandkids. Those guys are decision makers. They're important. If the kids feel comfortable with you, mom and dad will get the policy. If the kids don't feel comfortable with you, I promise you, mom and dad ain't getting nothing. Nothing. But that's how I do it. Look how easy it was to run that quote. Look how easy it was. Anybody want to run a quote? Anybody have a potential client in their 50s that they want to sell final expense to? Anybody? TV land? You got?
She's between 7 and 10 on her
Okay. Howard, America, we got a diabetic. A1C levels between 7 and 10. I think that's a good number though. 7 and 10 is a good number.
10 is a decline for national.
Really? Okay. Howard, what do you know about that, bud?
What? Repeat that?
America, how do they treat diabetes? A1C levels between 7 and 10.
Tell you now.
He's checking now.
As long as there's no complications, majority of them are pretty good. As soon as you start getting into diabetic complications, then you need to start looking around. And you also need to find out if they're on insulin or not, because that also has an impact with the carrier.
The two biggest things with diabetes, have they had issues that were emergency like? Did they have massive drops that required them to go to the hospital? 1. And 2, are they insulin dependent? Just because someone's diabetic doesn't mean it's a decline. If they can show a pattern of responsible health behaviors where they can monitor it, track it, and maintain it, it's not a big deal. It's not. Does that make sense?
So to give you an idea, if they've had, for like America, they don't mind if they're on pills or insulin. But if they've had, an amputation, or they've been in a diabetic coma, or they've had neuropathy or nephropathy, or any complications, then they're going to be guaranteed issue. And as soon as they're guaranteed issue, you're better off moving to one of our guaranteed issue carriers.
There you go. Guaranteed issued carriers, just so you guys understand, are insurance companies that will approve a policy no matter what. But they're typically pretty expensive, and they do not pay high commissions to the field, just so you know. Guaranteed issued companies, Great Western, Gerber.
And Gerber.
Who?
Those are 3.
I don't know if they do.
Who?
If they do, I don't know anything about it. Okay. Okay. I don't know. I'm not saying you're right or wrong. I don't know if Foresters has a guaranteed issued platform. Okay. Everyone we've gone to, you know who's really good to talk to for guaranteed issue? Kenneth Lamberson. Kenny Lamberson on the Voxer. He's one of our VPs in California. For whatever reason, he's doing a decent amount of that. Great Western and Gerber are two companies you want to leverage for guaranteed issue. They're only going to advance about 50% commission, just so you know. They won't do a 9-month advance. Comps are low, so don't expect your normal 90, 100, 110. That's going to be more probably in the 40, 50 range. Okay. But again, it's a solution for someone that needs coverage.
So how much
Well, if they no, he's saying if they decline, then go guaranteed. So let's. You want me to run yours? Yeah, Howard. Let's run real quick an Americo Eagle Premier. How old's the client? 58-year-old male or female? 58-year-old female. State of Illinois. Illinois.
How much coverage?
Do you know how much coverage or what their budget is?
She had a small policy she wanted to.
Let's look at 20K right now.
Non-smoker, just diabetes.
Non-smoker, diabetes, correct.
72.
$72 a month. Tell me what that wow is. Wow good, wow bad. Wow good? There you go. Guaranteed issue will be pricey. I'm telling you now. Yeah, guaranteed issue is a pricey product. That's why I recommend first apply and see if they can get something like this. If they can get declined, you don't got to worry about guaranteed issue with declines. They're expecting their clientele has been declined elsewhere before. What I'm saying is don't go to Americo if they've already been declined. Americo does not look at clients that have already been declined. They don't look at clients who had Americo in the past, I think 6 months ago or less. They won't. They'll consider it an internal replacement, and for whatever reason, they won't write them up. Okay? 30K max is Eagle Premier. Correct, Howard?
No, Eagle Premier is 30,000 Eagle Premier, 60 to 80. It starts at 2,000.
So just so you guys know, I'll give a little bit of behind the scenes. We're putting together a Google sheet that'll have is like a cheat sheet of which companies accept which medical conditions, what their face values are, and stuff like that. It's taken us a while. I have one, but it's got to be updated. Howard's also got one. His is like technical to the 10th power. But once we have it, we're going to put it on Google Sheet, and it'll be on our website, so you can click it and you'll always be able to look there and kind of have your cheat sheet of which company to go with. 50 to 80, I believe, is Americo.
No, Americo starts at 60.
Oh, there you go, 60. 60 starts at 60 years of age for Americo.
60.
Oh yeah, wait a minute.
Sorry, it could be 50, yeah.
Okay, yeah, 50. I was going to say 50.
Yeah.
50s are typical for final expense. There's a few companies that'll do it at 45 years of age. I want to say Great Western has final expense at 45 starting. Don't quote me on that though.
Great Western is 40.
There you go, 40. Look at that.
But that's guaranteed.
Didn't I tell you? Howard's better at a lot of this stuff than me. I mean, I love the fact that Howard's such an amazing resource. And, let's respect his time for sure, though. I want to edify him, but I don't want his phone to get blown up with a bunch of questions that, I will tell you this, a lot of this stuff is just you guys calling sales support and learning. There's nothing wrong with that. There's nothing wrong with saying, I want to learn a little bit more about Americo. Call sales support. Someone on salary is paid to just educate you on the products. They'll gladly do it, no problem. That's a lot of how we learned it, to be honest with you. That's how I learned it. That's how Howard learns it. Yeah. Okay. Cool. All right. So now let's run a quick continuation plan. And by the way, so you know, Eagle Premier's product, TKO pays 5% higher than FFL on every level. Just so you know, kind of a decent recruiting technique there for you. Okay, 5 points higher on every level than FFL pays out. If you're contracted with the company, they do require you to be blacked out for 6 months. You can't write them for 6 months in order to transfer the contract, just so you know. But if you contracted with them and you never wrote anything, you can easily transfer it over. Aetna is the only company where if you contracted with them, the 6-month clock starts no matter what, even if you wrote business or you didn't write business. Americo doesn't, okay? All right, so continuation is for your mortgage protection lead. Aged leads, just so you guys know, the $2 leads are state bound, which means we will try as hard as we can to get you the lead to come from your county where you locally live, but I can't give you that guarantee. I can guarantee you that it will be within the state. So my advice when you're buying aged leads, buy mortgage protection leads instead of final expense. Why? Mortgage protection is going to be a client between 20 and 50. They're much more, there's a higher likelihood that they're good on technology. There's a higher likelihood because you're dealing with a younger market. So now you can set up a virtual meeting and write the business up, even if like Illinois from tip to tip is what, a good 11-hour drive. You might get a lead that's 11 hours away. If it's final expense, you might have shot yourself in the foot if they're not good with technology and they're old school and they want to see you face to face. But if they're younger, there's a higher likelihood you can do a virtual meeting with them, right? That's why I recommend getting mortgage for lead. So this is a great product. How I sell the product is very simple. Mr. Client, how much life insurance, how much was the mortgage that you recently took out? $300,000. Okay. In addition to the $300,000 mortgage that you want protected, is there any additional dollars that you want to leave behind in cash to your family? Well, I'd love to leave another, I'd love to leave another 50,000, right? Or, you just have that dialogue with them. Okay, so it sounds like you need this much insurance. Let me explain to you how this product works. This product will give you life insurance and living benefits for 30 years, the duration of your mortgage. As your mortgage decreases, this insurance still stays at the original amount, which is a big advantage to you, okay? Now, after the 30-year period is up, Mr. Client, your house is paid off, which is great. Your insurance, instead of totally canceling and disappearing and you not having anything in place, you'll get to keep 10% of your original insurance, and that'll last you for the rest of your life. So if you got $300,000 of insurance, guess what, Mr. Client? You'll have $30,000 that'll last you for the rest of your life to help cover the final expenses. So you can leave your house now as an asset to your family while not burdening them with the funeral costs. How does that sound, Mr. Client? That sounds great. Let's run a quote.
And you're 30 years older, and the chances of you getting that amount of insurance that in 30 years' time, with any health issues that you have, your premiums are going to be out of the roof. You're not going to be able to afford $30,000 coverage.
There he goes. See? What he's saying is, and you're getting a guarantee of 30 years of final expense 30 years from now. Because 30 years from now, you don't know how your health changes. Maybe you don't qualify. Maybe it's ridiculously expensive. This gives you the guarantee you have that covered and protected no matter what. It's a pretty cool plan. So let's say this person is 35 years old, a 35-year-old male. Okay. How old are you, sir? 40. Let's do a 40-year-old male. All right. I think the maximum amount is 300,000. Am I right with that, Howard?
We can check.
I think 300,000 is the max face value you can do.
400.
Oh, there we go. 400,000. I stand corrected. So let's go ahead and let's put what dollar amount would you like to move? 400? Okay. Let's do 400,000. And then you can pick 15-year, 20-year, 25-year, 30-year. As a disclosure to you guys, rule of thumb, a lot of companies do not pay higher commissions on 15 to 20-year plans. So if you're looking at it and you're like, oh, I'm a 110% contract agent, you might not be 110 if you sell a 15-year plan. Okay, so they change the lower. So let's do a 30-year plan, and let's go ahead and run it. And $217 a month, $217.55 per month. So notice, look, face value 400,000, right? But continuation death benefit is 40,000. So you get $40,000 of final expense insurance. This has death benefit and living benefits, just so you guys know. So remember what I said. I'm going to be very objective as I can. Americo, positive, quick approval, very lenient in their underwriting requirements, and the non-smoker. Negative to Americo, they could be a little bit more pricier. Any company that's flexible in certain underwriting offsets it with the cost. So yes, it's a little bit more pricey. So you got to really be selective on which client you want to bring this to. I'm going to tell you right now, mortgage protection, I'm either selling this if the person is urgent or has medical issues, or I'm leaning into a GUL, either from American National or North American. But that requires more underwriting. It's not going to be fast. They got to be patient. They might have to do a medical exam. Why would I lean to the GUL for mortgage protection lien? Because the GUL has a return of premium rider on the 25th year. So my solicitation to that is different. My sale to that is, Mr. Klein, on the 25th year, what if you could cancel this insurance, get all the money that you ever paid into it back, and then use that money to pay off the remaining balance of your mortgage? So you just cut your mortgage from a 30-year mortgage to a 25-year mortgage, or a 30-year mortgage to a 20-year mortgage. If I could help you shrink your mortgage from 30 years to 20 years, would you allow me to? Yes, of course. Well, that's how a GUL works. You get what I'm saying? If you don't want the return, you'll keep the GUL all the way to age 100, no problem. And that could be your final expense coverage. So pros and cons, right? Pro to Americo is quick underwriting, easy on approvals. They're very lenient in underwriting requirements. Okay. Non-smokers, I mean, smokers are good here. They'll get non-smoker ratings, but it's a little pricey. If price is of concern to that person, then I'm going to lean towards a GUL. What's a pro to a GUL? Good pricing, right? Higher face value than 400,000 and go to $1 million with that, non-medical. But what's the con? They could go through full underwriting. It could take longer to approve, and they might be asked to do a full medical. So you have those tools there. You know what I like to do with the client? I like to offer it to them. Let them pick. You know what I don't like to do? I don't want to bring this as the only solution. And I'll tell you why. I recently acquired a client from social media. Okay. He had $500,000 of insurance term with 75% ROP. He was spending $250 a month. Simplified issue. But the client says to me, I'm perfectly healthy. I go to the gym all the time. There's nothing wrong with me. I said, Mr. Client, are you willing to let me underwrite you? But here's the difference. I'm not going to approve you in 5 minutes. I'm probably going to approve you in 30 days. But I'll tell you this, if you're healthy as you say you are, that same $250 you're spending, I'll get you twice the coverage. Twice. Would you let me? Of course I would. Okay, let's look at it. And that's exactly what I did. I doubled his insurance for the same amount of money he was paying. I put a $500,000 term, and I put a $500,000 GUL in place. Got him $1 million of coverage for the same amount of money he was spending. But it took me 4 weeks to underwrite him. But you know what I like to do? Mr. Klein, here's your choices. Which of the two do you prefer? Some people like speed. There's some people completely, utterly scared to death of needles. Give me something that's non-needle. Okay, Americo, we're going. But they gotta at least know the differences. I'm not married to any one company, guys. I'm married to the client. What do you want? You tell me and I'll rock it. So for mortgage protection, I'm typically showing this for continuation, or I'm addressing a GUL. That's to answer the mortgage protection need. Again, I'm still going to fact find. And in my fact finder, if I find other opportunities, I'm going to then dig for other opportunities. But I want them to know in my first meeting, I was focused on what they originally wanted to talk about. Thank you. Make sense? Good? Okay. I'm going to run one more illustration, then we'll take a quick lunch. Cool? Yes. Yes.
So even though it turns into the 10%.
Yes, ma'am. Yes. So if he wants it to last forever, he's got to be willing to make those payments. Yes. Okay. Cool. All right. Let's go into. Let me see here real quick. Americo, Oxford. We don't have time for Oxford. Let's go into Anico. Can we go into Anico real quick and run a GUL since I just talked about that? So just so you know, Anico also has a mobile quoting app, which we'll get to you, but he's actually logging into the carrier, which is okay. My advice for all of you all, if you're going to be out in the field, either have an iPad with data. I have an iPad with actual data that I pay monthly for, so I always have internet wherever I go. or bring a laptop with you and have a hotspot. Remember, you're getting to an older market. They don't always have internet. Honestly, I don't want to deal with that internet stuff. No, they don't want it. You got to have something with you. Have it with you, ready to go. Okay. The hotspots are like $20 a month. Like it's well worth the investment. I'm not going to tell you. You might say, well, I have hotspot on my phone. It's different. The actual juice boxes, the little jet packs, actually have a higher data capacity than your phone. If you can and your only choice is that, then so be it. But if you can get one, get one. All right. So hang on. I got to move this. Can you, it doesn't look 100% on our screen. Oh, there it is. Okay. So this is the mobile app.
This is the mobile app, but I've accessed it from the Aneco website.
Do me a favor though, take it out of full screen mode and move it a little bit to the left because the format on my screen doesn't show the same. It kind of chopped off a portion of it. Thank you. How organized he is. If you look at my desktop, it's a freaking hurricane. All right, let's do the same thing. So a 40-year-old, give me your date of birth, my friend. No, your date of birth. 3/15/81. Male, Illinois. Perfect. Perfect. Continue. All right, let's do 400,000 as well. Preferred non-tobacco. Let's do monthly payment. Calculate. All right, so guaranteed till 95 is $223 a month. Guaranteed till age 100, $245 a month. You notice the price is pretty similar. So what's the difference? The first one is 30 years and then turns into a final expense, but it's fast underwriting. Anybody with medical, questionable things, I'd rather go Americo. Someone perfectly healthy, let's go this one. This one will last you till 95, the full face amount. It doesn't drop down to 10%, it goes the full amount. But it also has a return of premium option on the 20th year and the 25th year. So on the 20th year, you're 40, right? So when you're 60 or when you're 65, on those 2 given years, if you wanted to cancel the insurance completely, you could cancel it and get a full refund of all your money. Mr. Klein, do you know what that number looks like? And I always do this, guys. I take out my phone and I type it up, right? 223.89, 12 months, 20 years. That's $53,733 that you get back guaranteed. I like that word, right? Say guaranteed, right? Guaranteed on the 20th year. And if you say, hey, if you don't want to do it on the 20th year, you get the same option in the 25th year, but you can add 5 more years worth of payments, so your return is going to be even greater. Now, if you don't want the return, you just keep making your payment, and you have a guarantee of insurance until age 95 with Mr. Client living benefits. A lot of my clients love the fact that you can use this money to pay for a nurse to take care of you in your 80s. That way the children could be the supervisors of the nurses versus becoming your nurses. Mr. Klein, wouldn't you agree that it's a very different feeling when your child is carrying you because you can't handle on your own versus when you used to carry your child, right? Think about it. When a parent holds a child cries. When a child holds the parent, who cries? It's a very different feeling. And that's the conversation I'm having. You notice the emotional kind of conversation I'm having in that process? I want them to think about that. Do you want your children to bear the burden of taking care of you later on when you're 80? Or do you want to be able to, you have this as a resource? You can use this to pay for a nurse to take care of you if you want. And if you don't need a nurse, you leave this behind as a death benefit to your family. Either case, you're doing it for your kids. Which of the two makes sense, Mr. Client? Oh, I really like this one. Great, let's go. So mortgage protection, those are the 2 options I'm showing. You see how simple I keep it? Keep it simple, stupid. Honestly. And if I do a budget and I find out they really have some assets, I'll then present IULs. But look, 225, that's 324, that's 2,700 AP. And I didn't sell an IUL. 2700 AP, I didn't sell an IUL. Or 2700 AP on Americo's term, and I didn't sell an IUL. So for those of you that think the IUL is the only thing you want to push, sometimes the IUL isn't the right answer. IUL might complicate things. What do you mean? The market, the index, the this, the that, how does it work? What if I do that? No, black and white, here's that word. Guaranteed. I like saying that word. I do a lot of GUL business because I focus on the insurance coverages versus the asset accumulation first. I'm not an investment advisor. I'm a life insurance agent. Let's take care of those needs. Make sense? Good. Any questions before we break for lunch? That is good. Okay. So here's, yes.
Yeah. So as far as the smokers, they what is some of the rules would be for people that are not nicotine smokers, but they are, like, for some states that are legal now?
Marijuana. Marijuana, for most companies, treated as a tobacco user. And I will tell you this. No. You want to call the company and see what their stance are with it. Number one. Number two, if they got to get a medical done, I would recommend that they stop marijuana use for a while and at least make sure that marijuana doesn't show up in their system when they do their blood. Just be a little extra precautions. If they ask what the frequency of marijuana use is, about once a week. Okay. Okay. But yes, disclose it that way. Make sure they know about it.
Yeah.
But there's some companies that are zero tolerance to it. Some companies now are becoming a lot more flexible to it. Anaco will rate you as a smoker. Some companies will fully outright decline you if it pops up and you lied about it. So, you know what I'm saying? You gotta be willing to have that kind of conversation with them. How I have the conversation with the client is simple. I go, listen, I don't get paid unless you get covered. So trust me, I'm on your side. So it's better you tell me what you got going on, so I know how to present it to the insurance company versus thinking I represent the insurance company. You want to lie to me about it. You don't want that. Cool. Any other questions? Everybody's good? Okay. We're all here, thankfully enough. I don't know who it was, but I do got to thank him. I think it was Rubiel. We have lunch. That's Rubiel. Okay. So Rubiel provided everybody here with lunch, guys, just so you guys know. Okay. So let me show you guys this. Look at the squad. Look at the squad. Say what's up. Hey. So let's break for lunch. It's 1:10 Eastern time, 12:10 Central time. We're gonna do a short lunch, guys. We're a little bit behind, so we're gonna be back in 50 minutes. So those of you guys in TV land, take 50 minutes. If you're home, grab a quick bite to eat. Try not to eat anything heavy on carb because you'll become lethargic for the second half. Those of you that are here, enjoy lunch. Okay, and if there's carbs, it is. We'll do what it should do. But I'm gonna still be on. I'm just gonna mute it. We'll be back on at 2 p.m. Eastern time, back on 1 p.m. Central time. Thanks so much, guys. I appreciate you. There we go. We're back from lunch. So, guys, hop on and turn on your cameras as you can. We're gonna go ahead and get this started. We've got a couple more sessions to go, and I want to make sure I bring value to you guys. The best lessons I ever learned was from the mistakes that I made. I look at joint work, and this is my view on joint work, right? I believe in a 50-50 split. I believe in that market exchange principle. And I look at it and I think to myself, the trainer's getting a 50% cut, but the trainee, if they're really maximizing what they're learning, is getting an education that they can redo over and over and over and over and over again, years to come. My trainers that I can tell you had a big impact in my business, in my career, were 100% the trainers that are willing to go to the field with me. And those are the ones that I did. I split business with them easily. But there's some presentations that even to this day right now, I learned them 10 years ago from people that are no longer with me. You know what I mean? They're in business somewhere else. We say hi to each other here and then. You know what I mean? One gentleman I can tell you off rip, his name is Von Hoban. He's not that much older than me. He's maybe a year or two older than me. He's from Indiana. Pale white guy, red freckles, red hair. He's the guy who trained me when I was at Northwestern Mutual. And I went with him on the field as many times as I could. And every time I brought him to the field, I valued his time and split it 50-50. But there's presentations that I do now. Every time I do it, he pops into my head. I know I learned it from him. And I take that information and I just give it back. Best way to make money in this industry, genuinely, is that as of a field trainer, right? There's a lot of ways. If you guys notice, I keep giving you guys tips on how to find clients, The best method I find clientele is through recruiting and training. The absolute best method. Yesterday's a perfect example. I've never been to Chicago, never. This is my first time here, but I came here and I trained Nefertari. We did $100,000 rollover. How did I find that rollover? I mean, I found it, right, through the fact-finding process, but realistically, it rooted from what? The recruiting. Nefertari was recruited by Lizette, right? Lizette recruited by Yasmin. Yasmin recruited by Rubiel. Rubiel recruited by me, you know? And other than, none of that would have happened if the recruiting didn't start. But you can't just recruit to recruit. When you're recruiting to say to yourself, okay, let me train this person. Let me work with this person. Let me show them something. You know what I mean? I scheduled with Nefertari. I said to her, I go, listen, when we submit these applications, I'm going to have you work with Howard, who submits the applications. You can learn how to submit it. You know, if you come to our Saturday training sessions on underwriting, you'll learn how to underwrite it. Don't just sit in on my field presentation. That's not enough. Any field trainer that only wants to show you what they do on the field, but they don't want to show you what behind the scenes, is a greedy trainer. They're greedy because at the end of the day, what they're basically saying is, I'm going to teach you enough where you feel like you're learning something from me, but not enough where you could do it on your own. If you need me, then there's something going on, right? Like when Caesar and I did, you know, the first couple of annuities, I had Caesar submit the application and I walked him through the process. And this is what we're doing next. And this is what we're doing. And you got to collect it. And I was always constantly on top of him. Hey, did you collect funds? Hey, you need to get delivery receipts, right? Like he touched it, felt it, exposed himself to all of it, to the point where I'm predicting, you know, the next 2 or 3 annuities that he finds, as long as they're not from his warm market of people that know him and they're from outside of his warm market, he'll probably run on his own because we've done enough. And that's what it's supposed to be. That's exactly what it's supposed to be. You know what I mean? Your warm market is different. Like, look, if my warm market reaches out to me right now, I don't work it. I don't. I pass the ball off to somebody else. Like my parents know me as the kid from Miami that used to, you know, leave his house in the middle of the night, take a bus down to South Beach and party till 4 a.m. and come back and go to school at 7. Like that's who they remember. They'll never give me that kind of credibility. You know, they'll call me and say, hey, do you know somebody who can help me with 401ks? I'll be like, what? For real? I can help you. No, mijo. No, you know, not you. Refer me to some. Okay, good. Let me refer you to my guy, Caesar. I'll overwrite it. I'm okay. You know what I mean? Like your natural market it's different. But when you get into other people's markets, be the pro, be the expert, learn. That's what I like about it. Some people say to me, oh, I'm on a tight budget. I can't buy leads. Okay, well, recruit 10 people who can buy leads. You recruit 10 guys who can buy leads. They all buy leads, but they all want something from you. They want to learn how to make money from those leads. So now they take you to the field, and what are they doing? They're splitting business with you, 50-50. So you want free leads? Recruit people who need to learn how to work leads. Nothing wrong with that. They're earning income while they're learning, and they're learning to eventually one day do it on their own. There's absolutely zero wrong with that. Wrong to me, working somebody's market who doesn't have a license. Wrong to me, you know, doing the back office scenes like running illustrations, you know, underwriting, doing all that stuff without giving the trainee an opportunity to also learn it. I give the trainee an opportunity. Don't get me wrong. Some trainees tell me, oh, I can't, I'm good with that. I'm just going to work. I'm okay getting 50%. Cool. You're getting what you want. But if you really want to learn the business, make yourself available for all the behind the scenes, the illustration design, you know, the application input, the underwriting, the delivery. Be around for those pieces, because those are the pieces that make the difference between, you know, learning how to run the business on your own. You know, imagine that I'm teaching you how to drive a car, right? And, you know, you get into the car while the car's already turned on, it's already on drive, and I'm just teaching you how to go left, how to go right, how to start, how to stop. But I don't teach you how to turn on the car. I don't teach you how to put gas in the car. I don't teach you how to do, you know, its regular maintenance. And then I say, here, it's yours. If you don't know all the components of it, you're still needed. Somebody turn the car on for me because I don't know how to do it. Okay, I'll turn it on for you, but you know, you got to take me here, right? So you want to learn from a trainer in a way where you learn the A to Z, so that at some point you don't need somebody to help you with those blind spots. That's the piece of the puzzle that you want. And that's what I would capture when I worked with trainers. I wanted to know, show me what you're doing. How'd you run that illustration again? Boom, 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 boom. Okay. Show me how you present it. You present it this way? Okay, boom, boom. Okay, I get it. How do you talk to underwriters? How do you talk to the case managers? There's a way to do that. There's a way to talk to underwriters. There's a way to deliver the policy. There's a way for all that stuff. And you got to be willing to say, I want to learn that. That's what will set you apart. And then when you feel like you've learned it, you're ready, go make some mistakes. Go make some mistakes. You know, we'll clock into a job because we know 2 weeks from now we're getting a paycheck. We will. We know 2 weeks we're getting a paycheck. But if I told you guys that it takes 50 solid client mistakes for you to make $50,000 a year, or 100 solid client mistakes for you to make $100,000 a year, are you really willing to go run and make those 100 mistakes fast? Because that's what it takes. 100 mistakes. 100 clients that look at you and say, if I see you in the street, I'm gonna punch you in the face because I had the worst possible time with you ever. You should not be on this earth. 100 mistakes. But the result is you make a six-figure income and now you know how to not make any of those mistakes any longer. If I told you that, how fast would it take for you to go through 100 mistakes? Some people are so scared that they take a decade. Some people are so ambitious that they want to go through those 100 mistakes as fast as they can. See, employment is all about your tenure. How long you've been at the company determines your pay raise. That's how they always start. Mr. Boss, I've been here for 3 years. I deserve a pay raise. Okay, that's employment. Entrepreneurship's not like that. Entrepreneurship says, how many mistakes did you make? How much hands-on exposure did you put yourself through to build your business? Some people take too long. That's just the reality. They take too long and they die out because life keeps punching them in the face. The bills keep punching them in the face. The family needs keep punching them in the face. The quality time with the kids keep punching in the face. So you got to say to yourself, okay, kids, family, bills, you're all gonna struggle for like next 6 months. But if you let me make a crap ton of mistakes these next 6 months, I promise you the second 6 months is gonna be worth it. And that's what it was for me. I made a decision that I got tired of missing every single weekend with my kids. I got tired of missing every single evening with my kids, but I knew I had to miss a certain amount in order to never miss them again. And because of that, I can honestly tell you, a guy like me, who's got really no formal financial education, I just have life experience in this industry, right? That's really all I have, and I had some good mentors. A guy like me can tell you that I built a business that's at 1.4 million in submitted business in 5 months. Where and just so you guys know, out of the 1.4, only 300,000 of it is mine. 1.1 came from the organization, from you guys, right? And it has given me some luxuries and freedoms. It really has. I'm not going to say that it hasn't, and I'm not saying it to boast. I'm saying it because I want to sell you somewhat of the dream. I had to make a crap ton of mistakes, but I had to be willing to make them in a short, compressed amount of time. Like a rocket ship. You can make noise in a rocket ship if you keep it on 50% velocity, but you're never going to take off. Or you could put it on full blast for a short period of time and it'll take off. And once it takes off, you can't stop the rocket ship. It's already taken off. So the question is, if you're going to make noise, are you going to do it at half pace, where you're never going to do anything? You're just going to rumble and make noise and never really take off? Or are you going to put it in full force for a short period of time? Make 100 mistakes in 6 months, not 6 years. 100 mistakes in 6 months will make you 6 figures. 100 mistakes in 6 years will barely make you 10,000 a year. That's the truth. You gotta be willing to fall forward quickly. So take the lessons that I teach, you take the videos, you can watch all the YouTube in the world. Like I posted recently on Facebook, so it was so real. I said, listen, you know, there's motivational quote-aholics. They love motivational quotes. They feel so empowered by posting them. Oh, I watch E. Thomas, the hip hop preacher. I watch Gary Vee. I watch Grant Cardone. And they love it. They can quote it verse for verse. There's YouTube motivational alcoholics. Literally, they just love to watch motivational videos. Sometimes people need to stop watching that crap and go into action. There's people, oh, I read books all the time, but are you implementing? Are you implementing? I read 10x 10 times. Great, but have you actually 10x'd your life? Has your activity gone to the 10x world? Some people need to stop watching motivational videos. Some people need to stop reading inspirational quotes, thinking that makes a difference. Some people need to stop it and they need to start going into action and making the mistakes that they have to make. That fear, oh my God, I'm gonna make a mistake. Stop. Go make your mistake and say thank you after you make it. Honestly, thank you for allowing me to make this mistake. I'll never make it again. Thank you for allowing me to screw up this meeting. I'll never make it again. And have peace of mind in knowing you're not recommending people to stocks and bonds that's volatile and risky. So what's the worst mistake you make? Someone doesn't want to buy insurance from you, so they buy it from somebody else. Someone wanted an IUL, but you sold them a term instead. At least they have coverage. You can always go back and fix it later. But that mistake will pay 10 times over again, 10 times over again, 10 times over again. Difference between me and somebody else is I just made a decision that I didn't need nobody to motivate me. And I was willing to make 100 mistakes as fast as I possibly could. I don't need everybody to like me. I don't need everybody to like me. And there I can tell you vividly my first 30, 40 client mistakes of people that would if you interviewed them, they would tell you Tony's the worst agent in the world. I don't know how the hell you're being led by this guy. But what they don't realize is those mistakes is what also molded me to learn some of the things that I now know how to do. Some of the conversations that I have with people and how I approach it, how I don't approach it, why I do things the way that I do is because of mistakes that I made in the past. But those mistakes are now the lessons that I leverage and use to really max out this opportunity that we call life, we call entrepreneurship, we call financial freedom. And as a result, my kids still, they know that dad has to work, and there's times that I sacrifice. You know what I mean? I have my kids in the summertime 50-50. I have my kids 60-40 during the school year. Would I love to have my kids 50-50 in the school year? I would, but I can't because I work. But I can provide them some of the luxuries that my family wasn't able to provide for me. I can provide them some of the luxuries that people in today's world can't provide. I can. It's 100%. I can. You know what I mean? I dropped my kids off this week at my mom's. You know what I mean? My mom just bought a pool. I helped her set up the stairs for the pool, dropped my kids off. They loved it. Why? Because I'm taking a business trip. I'm flying up. We're taking a business trip, right? This is the weekend that Sandra has her kids. You know what I told Sandra to do on Tuesday and Wednesday? I go, here's some of the benefits of being an entrepreneur. I go, treat your Tuesday and Wednesday like your weekend. Go do stuff with the kids. Because guess what? We're flying out this weekend to Chicago. You can't do that if you work a 9 to 5. Oh, I gotta work. Nah, go. We went to, where did we go? Went to Kamun, Japanese restaurant or whatever, spent like $200 on some good food. Why? Because that's what our kids like to do. They like to go out to eat in restaurants and try foods. You know what I mean? Okay, cool. My kids like to be outside doing different things. So I do different, but I can control that time. I can genuinely control that time. And that's some of the benefits that all of my mistakes now provide. So this is to everybody here. Make mistakes, make them quickly. Don't think watching the YouTube videos, coming to Closers College, coming to Monday night training, don't think that's gonna make the difference. The only thing that should do is it should light a fuse. There should be a lighter on. You're the dynamite now. Are you willing to take that light, go out and apply it, and light that dynamite and have an explosion? Are you willing to? You think today's the difference? Today's not the difference. Today's not the difference. It's Saturday. You know what the difference is? What you take from what you learned today, Saturday, and then make a decision to apply Sunday, Monday, Tuesday, Wednesday, and Thursday when I'm not around, or when your upline's not around, or when you're not in a classroom setting where someone's bringing you lunch. What are you doing in your downtime determines what the scoreboard is going to report. What is it? You know what I mean? Caesar had a $300,000 rollover. That wasn't from one call. That's probably 2-3 months of calling that person and following up on that person. Hang-ups, reschedules, no answers that I don't even know about, but he knows about it. He knows what it took to get those meetings. You know what I'm saying? I remember recruiting Caesar. I remember exactly what I was. I took my family out to dinner. We went to a Mexican restaurant called Amigos, and Puebli says to me, "Hey, Caesar would like to chat." I said, "Okay, cool." You know what I did? I missed that dinner. Remember? I missed it. I told Sandra, "Sandra, you're gonna have to have the dinner with the kids without me. I'm gonna be outside in my car. I'm gonna be in my car. I brought my MacBook, my iPad with me. I'm gonna do a virtual meeting out there." And I said to her, "I don't know how long. It might take 20 minutes. It might take an hour. I don't know. But there's a big player that Puebli tells me I need to chat with." And I missed that entire dinner, right? And then we chatted. I don't know if you remember. I was in my car. We talked. And I told Pueblo, I go, he's like a younger he's a very hungry, younger version of me in reference to what he wants. He wants to build something of his own. Maybe we can partner up and do it together. Right. And that because of that meeting, I missed the dinner. I remember my kids like, oh, Bobby, you missed it. Da, da, da. Like I literally showed up after the meeting. They were already getting to go plates. They had already put their food to go. You know what I mean? But that meeting that I missed cost for all the business that Caesar's been able to do, because Caesar came on board. He recruited a team. He's written business. Right. I believe, Ola, you're a part of Caesar organization. There's business that you've written. None of that would have happened if I didn't miss out that dinner. Right? $300,000 rollover that he and I had a chance to split. He made 10 grand on that commission. I made 10 grand as well on the commission. 10 grand. You know what I did with that 10 grand in commissions? Right? I put $1,000 in her hand, took her to a shopping spree. If you guys saw it on social media, she bought, what'd you buy? I forgot. It's about like $500 worth of makeup. Spent like another 500 as Victoria's Secret. Oh, bras are expensive, y'all. What in the world is going on here? We brought, was it perfume? Well,
it was for her.
Dior, right? We bought her the perfume, right? I did a couple things with my kids as well too. And I remember vividly, I told my kids, they're like, we're going to do this? Yeah. I go, but do you know why? You go, why? Because I missed that dinner that one time at that Mexican restaurant. Remember that Mexican? Remember? Yeah. I was talking to somebody that was a good opportunity for us to talk to. And because of that meeting, now look at some of the benefits we get to reap. Because of that. Those are the stories that you guys need to be willing to say, I want those stories. I want those stories. But you got to be willing to make a lot of mistakes, y'all. Honestly, I'm not here to judge you for the mistakes. On the contrary, you're going to call me up every day, be like, yo, I did this and I bombed it. But I'm glad you did something. Now, don't forget that mistake. It's different if you keep making, it's okay. It's different if you keep making the same mistake. That's different. You keep making the same mistake, like, bro, come on, learn already. Learn the mistake, don't repeat it, go at it again. Learn the mistake, don't repeat it, go at it again. My best trainer ever is life experience. Bigger than any mentor that I've ever had. And in Practice Company, I have had a lot of great mentors at Practice Company. I'm not even going to tell you that I didn't. I genuinely learned a lot from some of the biggest players in that company. You know what I'm saying? I did. And it's fortunate and unfortunate, depending on what side of the fence you're in. But those lessons are lessons that I still use to this day. And it's fortunate for my family. It's fortunate for the people that I'm leading. It's fortunate for the company. It might be unfortunate for the people that taught me, because now they're not in that position any longer where they override it, right? But I can't say I didn't learn. And I guarantee you have a conversation with our former CEO. He'll tell you I learned so much from WFG, and the only reason the company is where it is because of what I learned while I was at WFG. That's why you want to learn. You take it and recycle it. Take it and recycle it, and then build it and do it on your end and do it for yourself. Do it for yourself. I want somebody here to open up an FMO. I want somebody here one day to be able to come and be like, yo, my hierarchy is doing $2 million a year in issue-placed business. We've got a 90% persistency. Can I please have a conversation with UMS about becoming an FMO? Yes. Yes, it validates it. It validates, it works. I want that. And you should want it. But you got to go through the drudgery first. You got to be willing to go through the mistakes, the heartaches, the letdowns. It gets easier. I promise you, it gets so much easier. That saying, it's a cliche and it's annoying as hell. I get overworked and underpaid the first 5 years before I start getting overpaid and underworked. But it's 100% the truth. 100% the truth. It took me 4 years to break 6 figures. And I remember every year I busted my butt to make 6 figures. And then I made 6 figures 1 year, never looked back. And it became easier and easier and easier and easier and easier and easier to do. Easier. And I'm like, holy crap. Now it's like, my conversations that I have now with Sandra is not about making 6 figures. That's $8,833 a month. If I made that right now, this company would not be here. I'd be broke. Automation alone for this company right now costs about $4,000 to run. Alone costs about $4,000 to run, right? I couldn't. At $8,000 a month, there's no way. I closed the doors. Sorry, guys. TKO's not in business any longer. But I had to start somewhere. And that's why I'm trying to say, make the mistakes and learn. Take those lessons and 10x them. Take the lessons and 10x it and 10x it. I met Sandra. Sandra, I swear, she'll never admit it, but I'm pretty sure about this. She wouldn't, I think she thought I was talking bullshit when the first year that her and I met, when I was telling her the kind of income that this industry could make. I think she was just kind of like, yeah, whatever. She came from, she came from, corporate America. I think she was making $40,000 a year in a salary. You know what I mean? And here she is hearing me on the phone talking about 40,000 a commission, 40,000 a month, 40. And she's just going, yeah, you're trying to impress me. Right? Now she's working in the business and she's like, holy crap. Like, the numbers, now we have conversations about numbers and she's like, oh, okay. She doesn't flinch at it. It just became kind of the norm. Scared to death she was when she first got started. I don't know if I can do it. Oh my God. Now she's just, I get it. It's pretty simple. I understand this. I understand that. And all the puzzles are kind of coming in. Everybody here can do that. There's not a single person here who can't. But you've got to make those first 100 mistakes. Please be willing to make the 100 mistakes. Let me bring in our trainer here right now. What I want to train on right now, in all reality, is something that, in my opinion, I don't believe there's even 5% of the people here that are really maximizing what the potential of this is, and that's Jarvis. I genuinely feel like you guys really need to leverage this more, especially the person who has responsibilities like children, especially the person that has a full-time job, because Jarvis to me is a virtual assistant for $50 a month payroll. It does the text messages, it does the voicemails, it does the emails, not for 50 leads that you upload, not for 100 leads that you upload, not for 200 leads, not for 1,000 leads, however many leads. You put 10,000 leads into that system at once, 10,000 people get a text message, voicemail, and email for 12 solid weeks. Seriously. You spend $200 on 100 aged leads and you make one sale, and that one sale makes you $1,000, you just 5x your money. I'm sorry, you spend $50 on Jarvis as well too. I don't believe people are genuinely maximizing what that can do. In my opinion, I put a Ferrari in your parking lot, right? And you take it out with regular gas to go get the mail, and then you come back in. You're not really saying, oh man, I'm gonna take this car for the weekend. I'm gonna put the pedal to the metal on what this bad boy can really do. And so I want to bring Howard up to be able to do this training as another Q&A session. Howard, can you hear me? Howard.
Yeah, I can hear you.
Beautiful. You still have screen sharing ability, if I'm not mistaken. Yes, you are. You are the co-host. I'm going to bring Howard up. And you know what's something I respect a lot about Howard? I asked Howard, I said, did you record the session that you did last Thursday? He said, no. He says, no. Why am I going to record it? If anybody really wants to make a difference in their business and they really want to let technology become the tool that helps them 10x their business, and they should have been on. That's literally what he said. There was one person in my team, direct to me. No, I'm sorry, not in Roger Romance's team, who works in a restaurant who can't make it because he works nights. And so Howard went out of his way again and set up a one-on-one with him and did a Q&A session with him on Jarvis. But he didn't record it. He did not record it in any way, shape, or form. So I want you guys to really capture as many tools and tricks that he's going to give you right now on Jarvis so you can really maximize your potential to run an automated business. Good stuff. Howard, you got it, bro. You got the mic.
Okay.
Howard, some love.
What do you want me to discuss? Jarvis.
I'll tell you what, do me this favor. Pretend you didn't do last Thursday's training. I heard a lot of great things about it, but I'm sure not everybody was on. Go ahead and screen share it and just kind of go through what you would do with Jarvis and how you leverage it and maximize it.
Okay, we actually had an interesting conversation on Thursday night because we started discussing leads and before we even touched in Jarvis. So I don't want to touch on that quickly because I think there's still some people that might need to hear it. Before technology and everything got so complicated, the studies said that you needed to touch somebody and have contact with them about 5 to 7 times before you could make a sale. Now with the way technology's gone and the way everything's increased, they haven't done a complete study on it, but they reckon it's probably 17 to 25 times you need to touch somebody before you get a response or make that sale. And a touch point is anything. It's a text message, it's a phone call, it's an email, a voicemail, anything where this person suddenly says, oh, I remember that person, that makes sense. So that being said, with the price that you've managed to get the leads at $2 a lead, which is just phenomenal, it really allows the people an opportunity to really double what they, or even triple or quadruple what they were going to spend on leads. Now, you kind of need to ask yourself, if I have to touch somebody 17 to 24 times, and I now have quadruple the number of leads, do I really have the time or the energy or even the patience to sit and send these people text messages, 1,000 people text messages 17 times, and remember to do it and do it consistently? Or do I just drop it in the system and let it run and do itself? So, you know, that's really where Jarvis manages to take your stuff onto a whole new level. The other thing we touched on briefly is you know, lead flow and the type of leads that are available. And I was busy explaining that, you know, you're going to get a couple of different leads in the industry. The first type is going to be your instant or your instant internet leads. So anything that comes from Google or Facebook and like that, and the lead is generally 24 to 48 hours old. Those kind of leads, you're going to get some very typical responses from those people. You're going to get, I'm not interested, I already have coverage, I never filled this out, it wasn't me, but you've got those people that just filled it in, so they're ready and they're looking and they're ready to buy. What you will get a lot of, though, is that those people might have filled in your lead, but they also filled in about 7 or 8 other leads. So by the time you call them, you're probably the 12th to 15th person that's called them. And by this stage, their response from, yes, I'm interested, has actually gone to an automatic, leave me alone, I'm not interested, take me off your list, or you're the 12th person to call me, leave me alone. So that's what happens when you get the instant internet leads. Moving away from that, you've got direct mail leads. That's where people get letters sent out to them and they fill it in. It's like, you can save now on your mortgage and protect your mortgage and send this back in. Generally, you've got to pay the mail company upfront to send those leads out. The response on that is, they say anywhere from about 2 to 3% is a phenomenal response. So you're going to pay for 1,000 lead pieces and you'll get 3 people responding back to that, 3%. Your other option is your aged leads. Now, your aged leads generally from a 30-day aged lead to a 90, 180 to 3-year aged lead. Those leads are going to cost you anywhere industry-wide from about $4 to $12 a lead. Obviously, the older they are, the higher the cost. Tico is the only place I've seen them at $2 a lead, and that's for your 30-day plus lead. Everyone else at a 90-day plus lead is going to be at about $4. So the price is really phenomenal. The kind of responses you're going to get from those people is, I never filled this in, I'm not interested, you know, I've already have coverage. What you're not going to get is, stop phoning me, you've already called me 12 times today. What very often happens is, those people have already gotten that initial influx of phone calls and never took any action, and it's now a month later or 2 months later and you're calling them and hopefully nothing's happened. Also keep in mind, when people buy leads, the average person in the industry is buying about 100 to 150 leads per dial day. So if they dial in 2 days a week, that means they're buying 200 leads a week. There's a good chance they're not getting to all those leads. So when you start calling those leads, that person's going to stop calling their leads once they've booked their 30 or so appointments. So if they're buying 200 leads and they're scheduling 30 appointments, you could probably assume there's a good 100 or so people that they never got hold of. Those people just never get called again. So very often you're calling an aged lead and the person's sitting there saying, well, I filled this in 3 months ago, nobody got back to me. And it's not because nobody had the lead, it's just people just didn't have time to get around to that person. So what I generally recommend to people with a lead flow is get a nice mixture. Get a mixture of new leads, get a mixture of aged leads, and mix them together. You know, there's nothing more demotivating and demoralizing than when you buy 10 leads, you spend $20 a lead, and you've now in for $200, and all 10 of those leads you've called, and they've all told you what to go and do with yourself. And you're sitting there saying, damn, there's another 20 bucks gone. There's another 20 bucks gone. You know, if you take $200 and you're buying 100 leads, aged leads, you're now sitting there and say, okay, well, that guy said, no, that's $2. The sting on $2 is a lot less than $20. The other thing to keep in mind is your spend, and the way you spend is there's a relation between how many you need to close. So let's say you buy 10 leads and you've spent $200 on those 10 leads. You need to sell, and let's say for argument's sake, our average sale is probably about $1,000. Let's be conservative. Let's take it down to $500. If you sell one lead out of your 10 and you sell that lead at $500, cost you $200, you've made $300 profit. The problem with that is you need to sell 10% of all your leads. If you buy, let's say 100 aged leads at $2 each, so you're still in for $200. If you sell one of those leads at $500, you've now recovered your money. But selling one lead out of 100 is selling 1%. So is it easier to sell 1% of your leads or 10% of your leads? And let's say you're that kind of person that's really good at selling 10% of your leads, which is the 1 out of 10, and you now have 100 leads. So now you've sold 10 people at $500 a sale. That's $5,000 of a $200 investment. So you can make $300 if you close in 10%, or you can make a hell of a lot more closing 10% just by spreading your lead cost out. Any questions on that? Because I think people want to know about Jarvis, but that's just my side rant. Okay, into Jarvis. When you go into Jarvis, something beeped. Okay, I'm assuming there's no questions.
I got the beeps. Don't worry about it. Keep going.
Okay, as soon as the way Jarvis is set up is Jarvis works off a couple of trigger words. Now, Jarvis is programmed to send people text messages, emails, voicemails, and they all get sent at different stages depending on what happens and where the person is. So as soon as somebody gets uploaded into Jarvis, their name goes into two places. The first place they go into is their contacts. This is their contact list over here. Second place you're going to see everyone is you're going to see them on your dashboard.
Howard, share your screen, bud. We can't see your screen. All we see is you. And as good looking as you are, my friend, we still need to see that screen.
Very demanding. Okay. Can you see my screen?
Yes, sir.
Okay. Let me take a step back. And for those of you that don't understand how funnels work, Jarvis is based on a funnel. And the whole idea is to move somebody from the beginning of the funnel to the end of the funnel. The funnel has different stages to it. So the first part is the person gets uploaded and you start a conversation with them. Then the person responds to you, you're now in an active conversation. Once they've responded to you, you need to find out are they interested or they're not interested. You move them to a different stage in the funnel. Once they're interested, you've got to schedule a meeting. Once you've scheduled a meeting, you'll probably schedule a follow-up. Once you've scheduled a follow-up, you'll need to write them up. So you're moving people through the funnel from beginning to end. Your funnel is always going to be widest at the beginning when you've got a lot of people, and it's going to get narrower as you start closing down on people that are interested. That's what this first graph shows you. This shows you in total the number of people who've been through your system. So you'll see over here, there was 734 people, and if you go closer down to the bottom, there's 22 people that have expressed interest. So starting at the top and going down to the bottom is getting narrower. This graph over here is going to show you where people currently are in the system. So you'll see over here, she's got 330 people that are not interested, that she should drive by and door knock them. There are 45 people she's having a conversation with currently. There are 17 that expressed interest, and there are 158 that she needs to call stop. So there's an overview of where people are in your funnel. As I said, when people come into the system, the first place they're going to go into their contact list. The other place they're going to go is they're going to go straight into a funnel. You can see that funnel by clicking on opportunities. So this is your funnel. Starts on the left-hand side and goes through to the right-hand side. So you'll see there's a person in phone zone, current conversation, all the way through to waiting for delivery, and they're now a new client. Now, when somebody comes into the system, they go into two places. They're going to a text message conversation and they're going to a phone zone, because ideally you want to start sending the person text messages and you want to phone them. That's what these two columns are. Everyone in new lead conversation are people that Jarvis is sending text messages to. Everyone in phone zone are people that need to be phoned. You'll see the number in new lead conversations is exactly the same, 158, 158. And you'll see these people duplicated. There's Leslie McRae, there's Leslie McRae, which means you need to text Leslie and you need to call her. There's Fred Thomas, there's Fred Thomas. You have to text Fred, you have to call him as well. So as soon as these people get loaded up, let's cover it from a text side first, and then we'll look at the phone calls afterwards. As soon as the person gets loaded up, Jarvis starts sending them text messages. And we have quite an aggressive 10-day campaign as soon as it gets loaded up. So if you load the person up on a Thursday afternoon, as soon as it hits the system, they're going to start getting text messages Thursday afternoon. If you load them up on Thursday.
Let me interrupt you real quickly, because this is how I look at this, okay? This column here to the left, the one that says new lead conversation, pretend it's not even there. Just completely forget that it's even there. Focus everything from phone zone to the right, because the only reason it's there on the left is because that is what triggers the automated text messages. But that name on the new lead conversation, it's also on the phone zone batch. So to make life easy for you, just pretend like that new lead conversation column, it's not even there. It doesn't exist. Don't move it. Don't manipulate it. Don't do anything at all with it, because they remove themselves from that list as people respond, or as you put them in the do not disturb batch, which essentially means that you're just working your system. Does that make sense? Yeah. Okay. I wanted the developers to see if they could just completely remove it from even being there, but it has to be there. So for all intents and purposes, just pretend it's not there. Okay. Go ahead, Howard. My bad.
Okay. So first 10 days is quite an aggressive campaign. Person could be getting 3 text messages in a day. You know, we're sending as many touch points as we can to try and get a response from them. The response could be leave me alone, not interested, no. Could be yes, call me. As long as we get a response, we know that there's somebody alive and that they're going to respond on the other side. If the person is if you're sending a message and it's a fake number or it's a landline, the person is immediately going to be taken out of this and go into not interested drive-by, because there's no good keeping them in sending them text messages or for you to try and phone them if their number doesn't work. So Jarvis is actually going to test that number when it sends out that first message and says, yes, it's a good number, I'll keep texting them, or no, it's a bad number, I'm moving that person into drive-by and you need to deal with them now. Okay, so we go for 10 days, we've got a 10-day campaign. After 10 days, if the person hasn't responded, Jarvis shuts down. Jarvis will not contact them for about 30 days. After those 30 days, Jarvis kicks back up again. Now, the idea behind that is you've irritated that person and driven them a little bit crazy for the first 10 days. Now, they obviously aren't interested. We're taking a step back. We're waiting a month, letting things calm down, and then Jarvis starts an entire 3-month campaign. You know, the nice thing about that is when you contacted that person at the beginning, they might have not been ready to buy. In 2 months' time, when you're contacting them again, you don't know what's changed in their life, and now you're back at top of mind, and you're going to keep contacting them continuously. As soon as somebody responds to you, Jarvis is going to move them from new lead conversation and phone zone into current conversation. They're in current conversation because you're having a text message conversation with them, and you don't need to call them anymore. You need to have a conversation with them. When this happens, Jarvis will also send you a text message to say, you know, so-and-so has responded, go in and respond to them. You have a couple of 30 minutes till I respond. Now, you have to keep looking at this, because if it's a trigger word that Jarvis recognizes, Jarvis will give you a certain amount of time and they'll let you know, and then you can respond. If it's a word that they don't recognize, they're not going to respond. They're just going to send you a message and say, listen, you need to respond. So don't rely entirely on Jarvis. There's obviously a lot more development that's going into it, but we're still at I mean, we're a lot further than where we were at the beginning, but there's still a long way to go, which is a good thing and a bad thing. Once that person has responded, as I said, they're going to be moved out of here. They're going to come into this column over here. Now, you can either click on that person, which will open up all their information, and you can type in a response over here, and you can see this person, the message has started May 13th. Message has started going out. Could text the person, what company is this, who they represent, and then no response. And we kept on texting, kept on texting, kept on texting. And again, July 13th, the person asks again, who is this? And Jarvis responded automatically. Now, that's a one way to open people and see what's going on. And then you can go back out and then you can click on the next person. Okay, we're going to go see what Ronald Butler is doing. If you want to send them a text message, you can click over here. If you want to phone them, you can click over here. That's the one way to see it. Once you've spoken to somebody and you've decided, you know what, Ronald Butler is interested, you'll take Ronald and you'll drag him around. So you can either put him in expressed interest, you scheduled a meeting for him, he's not interested, let's drive by. You can put him in a dead lead. For me, dead lead is those people that are just so rude and obnoxious that I really want to have nothing else to do with them. I don't want to bother calling them again, or even if the person is dead. I can't say that hasn't happened before, where you contact the person, it's like, no, sorry, this is so-and-so's daughter, they passed away, they died 4 months ago. Well, you can pretty much put them in dead lead because drive-by is not really going to be applicable. That's how you move people around over here. The other way to deal with your new conversations is if you click on conversations.
I'll tell you guys this for sure. If in a lead, someone passed away, I'm not gonna lie to you, I would do a drop by. Because the family members that are gonna be answering, they just experienced a passing. And maybe there was insurance in place that they were able to see the benefits. Maybe there wasn't insurance in place. But it's a great opportunity to present, introduce yourself, and you might see that some of them will say, listen, I want insurance. My brother passed and he wasn't covered. I want to make sure my family's covered. Or my brother passed and he was covered, but I don't have anything. I want to make sure that my family's protected as well. I would do something like that.
Yeah, so drive by the family, not the deceased. Probably going to get a better response from them. If you click on conversations, you've got two options here. You've got unread, you've got all your recent conversations and all. So you'll see over here, this is going to come up saying that it's unread. Let's click on Meryl, for example. So we started a conversation with Meryl May 13th. She asked what insurance, we responded. Never got any further responses from her. Reached out on May 30th, that's over 2 weeks later. Got a response, can I call you on Tuesday? My dog Ricky has cancer. Now, to get that response, there's been 1, 2, 3, 4, 5, 6 messages that have gone out to her. Once you get a response, you should be sending the person either a text message, or you can send them an email, or you can click over here and call them straight away. You also need to decide where this person needs to go. So the same way in opportunities, we're dragging them around. An easy way to do that is on the right-hand side over here. This will tell you which pipelines the person's in. So you can see they're in phone zone, they're in new lead conversation, and they're in current conversation. Current conversation is because you're having a conversation with them at the moment. Phone zone was because you should have phoned them, and new leads. If you click on this little square on the right over here, you're going to drop down, come up, and you can move them to a different stage. So we can move Meryl to follow-up. So let's click on Meryl, let's move her to follow-up. Let's mark that as red because we don't want that anymore. And if you go look now in opportunities, Meryl's over here in our follow-up. So it's been moved a lot easier than us having to sit and drag and drop and open each person individually, which allows you a much quicker way to get through these conversations. Because as you're going through it, you're like, okay, the person's out of town, let's put them in follow-up, mark as red. Out of town, let's put them in follow-up, mark as read, and then you just move them along, and it's actually works very, very quickly. Let's look. Here's another one. Here's Jose. Not interested, but if you look over here, this took, we started messaging Jose May 13th. 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 22 messages it took for us to get a response from Jose to say, thank you, I'm not interested. And this comes back to what I said at the very beginning. Do you want to sit and send Jose 22 messages to find out that he's not interested? Or do you want to rather let Jarvis do it? This is one that I actually really like, Richard. So you'll see the messages that go out from Jarvis are pretty, they're specific, but they're still generic enough that you can have the conversation. You know, you're not going to say in Jarvis, you inquired about your term life insurance policy. You know, you're rather going to say you inquired about insurance. And we continue sending messages to this person. Here's Richard again, May 13th. Messages kept on going out to him. June 19th, Richard finally responded. And what did he respond to? Hey, Richard, I came past your house today, but there wasn't any answer. I'm being dispatched to a new zip code next week. Can I come by on Friday? What works better for you, mornings or afternoons? Did you go past Richard's house? No, but you were trying to get a response from him, so at least he knows you were there. So Richard responded, you came by the house. You didn't notice it appears that no one is living there because it's empty. I'm up north. When a person sends a text and doesn't get answered, wouldn't that make you think perhaps that person is not interested? Sure, absolutely. But at least now I know I don't need to waste my time driving by your house. So Jarvis has sent you 22 messages. If you weren't interested, you could have saved yourself the time and just responded after the second message, because it hasn't wasted any of my time sending you 22 messages. But what your response has done is you've saved me probably 30 to 45 minutes driving past your house tomorrow to do a door knock. So thank you for that. So there's just some ways that Jarvis works. Keep in mind, I know there has been some confusion with Jarvis sending multiple responses. What happens there, and Tanisha can attest to this, is what sometimes happens is Jarvis works with certain trigger words. So like if the person sends a response that contains the word who, generally asking, who is this? And Jarvis will respond, my name is Howard. I'm a licensed field specialist. I'm in Arizona. Just getting back to you about this. But if the person responds with more than one word that Jarvis recognizes, Jarvis doesn't quite know what to do. So Jarvis might send more than one response back straight away. So if they have a response, say, who and stop. So Jarvis will send a response, my name is so-and-so, and stop is, I'm not a bot, but I'm just getting back. So that's when the person might send a response, I'm not interested, and then straight afterwards they send stop. So Jarvis is now going to respond to the person saying, I'm not interested, and Jarvis is going to respond to the person saying stop. Tanisha had probably the most efficient person I've ever seen, ever. And they managed to get about 7 trigger words into their first response, into their first sentence. And Jarvis was like, screw this, I'm sending you 7 responses. And we looked at that and we're like, there's just nothing we can do. We've never seen somebody get 7 trigger words in one sentence. I've seen 1 or 2, and that was a first. And we've never seen such an overachiever ever since then. So Tanisha holds the record for that. Guys, are there any questions on the text messaging aspect of it? And then I'll go into the phone zone area.
Yeah, so the question is, are we able to customize the messages?
Yes, you can go in here and you can send the person a text message.
You can the automated? No.
You can write out whatever you want. You can send them a love letter, whatever you want, as customized as you want, but you can't customize any of the automation, because then, I mean, kind of by definition, if you're customizing it, it's not really automated anymore, is it? And then you might as well just send them text messages when you've got free time.
Yeah, so to give you a more explanation for it, right? There's formulas to these types of things and trigger words. If we created a system that everybody could kind of customize their own personalized stuff, if you don't understand that type of behind the scenes computer type coding, it won't mesh with the system, and then therefore you're gonna find all types of glitches. So we've created a very robotic type of a response where it's automated, but it's designed not to feel automated. The system, if I'm not mistaken, right, the system still gives the agent 20 minutes or so to respond themselves before it sends the next one. Is that correct?
Yeah, so you'll still get time to jump in and respond. And if you do jump in and respond and you don't want Jarvis to respond any further, just click Do Not Disturb on, and that will turn off any further automation that Jarvis has coming up. When you do click Do Not Disturb, Jarvis doesn't really know what to do with that person. So that person is going to go into
Reclassify.
Oops, it's going to go into this column over here, reclassify, because Jarvis is saying, well, you turned them off. I really don't know what's going on with them. You need to decide where that person must go. And you can then move them into current conversation, not interested. As soon as you move them into one of these sections, Do Not Disturb will be turned off, but there won't be any other automation going out. So, it's turned off in case there was other automation that the developers wanted to build in further down the line, which would be applicable to that person. But now you've turned Do Not Disturb off, they can't do anything, and that person's kind of like stranded. You're in the middle of the ocean and they can't go anywhere. Their engine's broken.
I'll tell you this, guys, how I leverage it. Couple tips for you. When you hit the Do Not Disturb button, you still have to hit save in the bottom. If you don't hit save, the Do Not Disturb doesn't happen. That's first tip. I'm sorry, what? That one person. Each individual person has their own DND. The moment you hit DND, Do Not Disturb, you have to hit the save button. That typically shows up at the bottom in order for it to officially move it into the Do Not Disturb.
That depends where you are. If you're in the conversation screen, you don't have to. You can just hit the Do Not Disturb. I think if you're in the person's actual screen, no, you don't need to click save. You just have to make sure that it's on.
Did that turn off? Because last time it was there. The save button was there. Did they remove that now?
Yeah, I think that's been removed so that it's you don't have to do that extra.
Be on the lookout just in case. What? It depends on where you are. If you're in the text message session, the DND's on the right. If you're in the client file, the DND's on the left.
But he said there were video updates on the website. Those are only updated, training videos.
Those videos, does the training videos take it to the folder for Jarvis, or does it take it to one particular video?
It goes to one particular video. So Jarvis training is down on the left over there.
Okay.
And then, I mean, you might have heard this guy before. He's quite an internationally renowned speaker. And that comes up over here.
With Squarespace, editing and adding pieces on my e-commerce site is
world-renowned speaker. Not yet, but we're working on that.
Oh no,
Right,
sorry.
guys.
This is
good morning, good afternoon.
This is going to
good
Tony's
evening.
training.
You think we can make it so it goes into the folder? That way, when we update videos, there's other videos they can pick from, rather than just one video, but the folder, the playlist.
No.
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 Yeah, we got to do an update video on it. Okay.
I have another question.
Yes, go for it.
You said when talking to a
Mhm.
so what kind of messages are you
Okay, so
that when
here's what I would tell you. If you happen to stumble upon an accountant who's going to give you, 5,000, 10,000 leads, I can make the extra expense and have a customized campaign created for you. It's going to be a lot more simple than the one we have. The one that we have, the developers took a good, I think, 3 months to create the if-then scenario. If it says this, do this. So we can create more of a customized, maybe 2 or 3 text message statement things that can go out specifically for tax professionals. But I really only want to do that and take on that project and that expense if they're really going to give you, I would say 5,000 names or more. It doesn't make sense to go through all that trouble for just 200 or 300 names. Does that make sense? We can then kind of customize it. So if you come across that opportunity, maybe a health insurance agency who can give you access to 5,000 names of their database, or an accountant gives you their database, a realtor that gives you their database. If you come across something like that, we can customize something specifically to that particular list, where we maybe even include the realtor's name or the tax professional's name. You know what I mean? But it'll be more personalized. That makes sense when you got 5,000 names or more. It doesn't make sense to do for 200-300 because it just becomes more maintenance. And I pay almost like an hourly cost to the developers every time they work on it. So trust me, they love when I call them and say, hey, I need you to do something. They're like, of course, turn on that clock again. Like attorneys, they just bill. Yeah, we could personalize something for that. I mean, I don't want to tell you yes or no. I'll judge it on a case-by-case basis. But the general rule of thumb is I don't want to create all the specific personalized stuff for just a few hundred names. It's got to be something that's going to be a big amount. Here's the other thing you need to understand. I pay for every single text and email and voicemail that gets sent out. Every single one of them. So imagine we upload, 5,000 names at once, and they're going to get 12 weeks worth of a text message, emails, and voicemails, and I'm paying for every single one of them, everyone. That's why I tell you, our automation right now is about $4,000 a month, easily. So I have no problem doing it. We're generating the income that allows for it to exist. But this is also why I say to you, I think nobody really here is maximizing the potential of what Jarvis can do. The way I use it, I'll tell you, 12 weeks of automation, I want it for the person that's not responding. The moment that person responds, if I'm a field agent, there's nobody that's going to do a better job text messaging that person than me, or calling that person than me, or emailing that person than me. You should feel the same way about your capacity. So the moment somebody responds, if I'm a field agent, I'm putting them right in do not disturb, and I'm immediately engaging with them, and they are now in my hot list that I'm going to follow up on. Everybody else that's still in the automation are people who just quite frankly haven't answered. So I'd rather let Jarvis handle it for 12 weeks so that I could focus on the people who do answer. That's how I treat Jarvis for personal practice purposes. You respond, whether it's positive or negative, I'm putting you in do not disturb, and I'm engaging. I want to take this to the point where it's mobile. I mean, how many of you guys would really benefit if it was a mobile application on your phone? And actually you download it from your Play Store type scenario. I can do it. There's an added cost. So I look at that and I say either I have to increase everybody's monthly cost, or we have to have more people subscribe to validate for it, because that's a whole different level of development that has to happen. But it'd be pretty cool. We have our own TKO app, right? Our own TKO Jarvis app. I'm dying to get to that level. Right now, the best thing that I would tell you is download Chrome on your phones and log into your Jarvis from your Chrome app, and at least that way, when the person responds, not only does your Chrome app send you a notification, but you'll also get a text message from Jarvis to let you know, hey, go look and see what's happening. Does that make sense? No. If you reply from your phone, it's because you're logged into the browser and you're texting through there. Yeah, it's a voice over IP number. So it's a digital number. You see what I'm saying? Jarvis is texting you, your number. Yeah, it's pretty, I mean, it's a legit system. You just really got to make a decision to maximize it. You gotta feed it leads in order for it to work. And you got to have a routine schedule of checking up on those leads for it to really work. That's why the $2 leads, guys, $2 a lead. You know what I would do for anybody here? $2 leads. I would say, you know what? I'm going to put $200 a week into it. You might think I'm crazy, right? $800 a month. Holy crap. You put $200 worth into it per week. That's 100 leads. You're pumping in 400 leads a month into your system. You tell me you can't find even one sale? One sale pays you back the $800 that you paid in. 2 sales, you just made a profit. Out of 400 names and numbers, you're telling me you can't find 2 sales to at least end up in the positive where you made more money than what you put in? The thing is, some of y'all are just too afraid to make that kind of investment into yourself. That's what it is. Some of you are like, oh my God, but what if I don't? Listen, it's a guarantee you're not going to make a sale if you don't. It's a guarantee you're not going to make a sale if you don't do it. So keeping the money in your pocket isn't doing anything for you. At least try to flip it. At least try to flip it. And the more leads you pump in, the higher you increase your ratios of a sale. They're so cheap. I mean, 100 leads is $200. One sale is $1,000 in commissions. One sale out of 100 leads. Think about it. I'm sorry? I mean, it's a great practice for mistakes. Some of the biggest people in this industry that make 20, 30 grand a month in final expense sales, when you ask them what their budget is on leads, they're spending 4 or 5 grand a month on leads. They just have to make that decision to fall forward. If I told you you put 5 grand and get 20 back, would you do it? Huh? Would you do it? Okay, I'm telling you, you put 5 grand in, you get 20 back. I literally just told you. Question is, who's going to do it now? Who's willing to invest into that? Some of y'all used to invest into 10-pack big event tickets. Some of y'all used to invest into enrollment fees. You know, like some of y'all used to do that stuff. Okay, well, invest into yourself and flip that money. Let Jarvis weed out the people for you. That's what it does. There's 3 categories of people in the lead list. There's the leave me alone, not interested. There's the prove to me you know what you're talking about. Let's sit down and have a conversation. I'm going to make it a little bit difficult on you because I just want to weed out to see if you really know your stuff. And then there's another group of person in the lead list. You know what those people are? Those people have a check stapled to their forehead saying, take my money. They're there. Those 3 types of people are in your lead list. Take my money, prove to me you know your stuff, and no, I'm not interested. What does Jarvis do? It weeds it out for you. That's what it does. It weeds it out. The ones that are interested respond. The ones that are not interested respond. But I'm going to focus on the ones who responded and said yes before I focus on the one who responded and said no. And I'm going to let Jarvis continue to annoy for the next 12 weeks the people who did not respond. So eventually they respond. That's the truth. 100% the truth.
Do those messages come in Spanish too, or not?
Howard, Spanish. Does it translate in Spanish, the Jarvis? Huh?
No.
Not yet? No?
No.
Okay.
Jarvis is English speaking.
We need to build a Spanish team.
No comprende.
No comprende. This is no comprende. Jarvis only in English right now.
If Jarvis was developed in Miami, it would probably be in Spanish.
Yeah. It would be called Javier. It would be called Javier. So, I mean, look, guys, I don't want to take too much longer on Jarvis. People need to leverage it more, in my opinion. In my opinion, they really do need to just make a decision, leverage it more. I've tried everything in my power to find resources for you guys. I found $2 leads, guys. I don't know a single FMO that's found $2 leads. I found a CRM system that is cheaper than anything I've ever seen. And it has an automated dialer in there for you as well too. But you gotta be willing to say, I'm gonna invest into myself. Bottom line, that's what you really, truly gotta be willing to say. And some people won't buy from you right away. I'll tell you right now, there's one person in mind, I'll tell you, and Howard will know exactly who it is. It took 13 text messages for this guy to answer. He finally answers, says, yes, I'm looking for insurance. I'm going through a bit of a credit issue right now. I've got to get some final expense on my spouse, and I've got $100,000 sitting in an account that I need to invest. Howard calls me up about it, tells me the thing. I drive all the way to Miami to go meet with him. It was an hour-and-a-half drive. We met with the guy. The guy has $130,000 that he's trying to figure out a way to invest. However, his attorney's in his ear, telling him to do different things than what we're recommending. I'll tell you the story. He did not become a client. But you know what he is? He's a follow-up on our list. You know what I literally just did this week? I sent him a message in reference to e-commerce. I said, hey, listen, man, just checking up with you. Just so you know, I got a vehicle right now that's making 15 to 20% return within the first year. Guaranteed return of your money back within the first year, minimum, no matter what. Let me know if you want to sit down and chat. You know what he's doing? He responded. So maybe he didn't buy then. Maybe he won't even buy now. But I know that he has a need. It's not a matter of does he have the need, it's just a matter of timing. Eventually, that person will become a client. And if we roll over 100,000, listen, at a VP level, that's $6,000 in commissions. Maybe it's 6,000 now, maybe 6,000 later, but it came from a lead that Jarvis weeded out. Now, the question is, how fast can you push 5,000, 10,000 leads that are all seeds planted. Let Jarvis filter out those that are interested so you can carry them in your hot list. And no, some of them will take action now, some will take action later, but now there's that many seeds that are planted. I've planted enough seeds right now that every month I get at least 4 to 6 people that reach out to me saying, hey, I need insurance, or here's someone that needs insurance. But that's 10 years worth of planting seeds. You guys can get to that same level 10 times faster because of Jarvis. That's 10 years of me manually planting seeds, shaking hands, going to networking events, top 25 lists, field training events. That's 10 years of that. Jarvis says, listen, I could take what Tony did in 10 years. I could do it in 1 year. I could do that in 1 year if you're just pumping enough names and numbers, pumping enough names and number, pumping enough names and number. And at $2 a name, at $2 a number, come on, you just got to pump into it. Even if you just say to yourself, hey, every paycheck, I'm going to take $100 and do it. Don't expect a return, but the return will come. Honestly, like crypto right now. I don't know if you guys invested in crypto. Crypto right now is going through some craziness. You know what I'm doing almost every other week is I pump in some money into crypto. I don't even look at it. The market, like every now and again, I look at it and it's down and it's down and it's down and it's down. And I'm okay because I know in the next year or two, it's going to turn around and boom, come right back up. But every couple commissions, I pump some money into it. Why don't you do the same thing with your own Jarvis? Every couple paychecks, pump in a few $100 into it and just out of sight of the mind, there's the numbers. The numbers are there. I'm not going to care whether I make a return or whether I don't. But if somebody messages me, I'm interested, I'm going to engage. And you don't know what you sell. Maybe it's one final expense that makes you $1,000. Maybe it's $100,000 rollover. Maybe it's 5 referrals into a few IULs or premium financing. You don't know, but you'll make your return. I promise you, you will. You won't make a return if you don't pump any leads into it. You won't. And if you think I'm only going to pump one lead, 200 numbers or 100 numbers, and then if it doesn't work, I'm going to quit. You should have never you should have never started to begin with. This is a numbers game. Work the numbers to your advantage. At $2 a pop, you can't beat it. You just can't beat it. Make sense? You have anything else, Howard, my friend?
I can touch on the phone zone quickly if you want.
I don't think right now. Do we have the time? Let me see. I think what's next was, let me look at the agenda here real quick. What is this? Hang on. Where's the agenda? Goodness. There it is. So right now it's 2 o'clock our time, which is 3. So I actually need to hop over to the next one. Howard, I apologize. We're gonna have to schedule that for another one. Or let me make sure. Nicole, are you on? Nikki, are you on? Nikki. Nicole. If you're talking, we cannot hear you.
Yeah, I'm here. Sorry, I
Awesome.
had a hard time getting the Zoom.
That's okay. Did you happen to create the breakout room? Do we have that?
Yeah, I can create it. It takes 2 seconds. How do you want to do this though?
So this is what we're gonna do next in this next session. Okay, I'm gonna take all the new associates, really my greenies, my novice, have never turned in business into underwriting before, and I want to take you into a different room. Does somebody have a computer here that can go on Wi-Fi? Does anybody have a computer here that they can turn on? You have? Oh, okay, I need one computer. Let's take it into that room over there. And anybody who's novice, never turned in a piece of business, I want you to sit into an underwriting training class with Nicole. If you have turned in one piece of business already, you're going to stay here with me. And the same thing applies to anybody virtual, guys. If you're novice, never turned in business, what I want you to do is I want you to put your name in the chat room. I want you to put your name in the chat room. If you've never turned in at least one piece of business, okay? I want you to put your name in the chat room. You're going to go into a breakout room with Nicole. She's going to train on underwriting, okay? And if you have turned in at least one piece of business, you're going to stay with me because this next sessions are all pretty much with me. I'm going to do an advanced training sales with you guys on premium financing. And then we're going to close it off with everybody together on mortgage protection and final expense. Okay. So that's kind of the agenda. Puebli, the Zoom ID is my phone number. If you can go, if you can log that in, por favor. And Nicole is creating the breakout room. What
Okay,
is gonna be turned in
confirm.
business? What's that?
just to confirm, underwriting session is going into the breakout room and everybody else is staying here?
Yes, ma'am.
Okay.
Yeah, because when you're done, you can close that breakout room and bring everybody back into the training, and then I'll close off the rest of the training.
Okay.
Okay. Hang on, what is this?
So what's gonna happen now, guys, is I have to assign you to the breakout room. And then you have to, a pop-up will come up when I assign you. If you're gonna go to the underwriting room, it'll pop up and you have to click on it and it'll move you to that room. So as of right now, who I have on the list is Gerzo, Marlene, Matthew, Jacqueline, Raul, Jamal, and Cindy.
There's gonna be one more popping on here shortly, which is gonna be here for any agents live with me that are gonna go to the breakout room. We're just getting on the internet right now.
Yes.
Where's the breakout room?
Hey, Tony,
Yes.
Tanisha's asking, what if we haven't turned in any business yet, but sat in the underwriting session last Closers College? Do you want her in underwriting or stay with you?
No, I think they should still go into the underwriting class. It'll incentivize that first piece of business so they could sit in on these advanced training sessions.
Okay. Tanisha,
got
I
it.
got you too.
Some of you guys, it's time that we break the seal and get that first piece of business in. So sitting in and underwriting is still gonna help. Everybody else? Oh, there's a lot of guys that are going into that room. Nikki, you're gonna have a good amount of people.
Who, the I, oh no, I got you. It doesn't matter. You're fine. So I got iPhone. Sydney.
Everybody else, just be patient, guys, if you can. I appreciate you. Let me get myself set up as well, too. Advanced training, guys, just so you know, so for those of you that are missing it, is going to be on premium financing. These are some high ticket sales, leveraging IULs, leveraging lending from banks. But what we're going to close it off with, and everybody will participate on that, is mortgage protection and final expense. So everybody will sit in on that. But this session right now for premium financing, I just want agents that have written one piece of business at least.
Okay, I think I got everybody who's on my list. So I'm gonna open the rooms. And again, you guys are gonna see something pop up and you need to click to go there. Just the individuals who wrote their names.
Awesome. Did you guys get online over there already? Yeah, okay. Did they send you the link? Did they send you guys the invite to join the breakout room? Okay, which person are you over there? Oh, okay, it's Ola, okay. Cool, thank you, guys.
You said premium finance, you're talking about infinite banking?
No, this is infinite banking on steroids. Yeah, you'll like this. You'll like this. Infinite banking leverages whole life insurance. Premium financing leverages IUL and bank's money. So the bank is actually going to physically give you money to invest into your own IUL. Yeah, it's a pretty cool strategy. Are we good? Oh, I think we're good. All right. Let me see as many cameras as possible, because this is the advanced group. This is the there we go. There we go. Let me see gallery. Oh, look at all these sexy people. Man, look, we've gone international. We've got people even from Bolivia on right now.
See donkeys in the background.
Are there donkeys in your background?
Oh,
Que malo. Que malo. Listen, just make fun of him. He's eating twigs and berries. Okay. All right. All right, guys, let's get into it here. We've got, you need me, Nicole? You're talking, but I can't hear you. You're muted. Sorry.
Gerzo and Cindy said they want to be in the underwriting class, but they haven't clicked on the link to hop to the underwriting class. But if they want to stay here, that's fine as well. I mean, I just wanted to hop.
Gotcha. Gerzo, Cindy, Irvin, we can't hear you either, bud.
Yeah, Irvin, I see you waving. Hi, Irvin.
Hi, I'm trying to get into the class.
Oh, you're trying to get into underwriting too?
Right.
Okay, I'm gonna assign you right. You should see the invitation right now.
Got
something
it.
pop up and just join. Okay.
Got it.
Peace.
Gotta love it. Gotta love it. All right, all right. All right, guys. Good, cool. So Gerzo's hopping over as well. Cindy, okay, good. All right. Eber, you've turned in business before. You understand? You familiar with underwriting? Yes? Okay, awesome. But let me see here. Boom, 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 boom. Where is my Evernote? There's my Evernote. Okay. We're recording? Good, we're recording. I like this. All right, so let's talk premium financing. I'd first like to address how to find premium financing before I actually explain how it works with an illustration, okay? As many cameras that can be on is great as well too, please. I appreciate you guys. What exactly is premium financing? Premium financing is a wealth management strategy, okay? It's the process of using an IUL plus the bank's money to max fund an IUL for a short period of time. That short period of time is roughly 15 years, okay? But the whole concept is this. Imagine if you could get 3 times the amount of money that you put in from a bank into your own personal IUL. Earn interest on not only your money, but that other money that the bank gave you. And if you're earning, let's say 6%, right? On the 15th year, you got to give the insurance company back, you got to give the bank back the money that they loaned you plus 2%. What does that mean? Think about that math that I just gave you. You're earning 6% from the bank's money, but you got to pay back the bank their money and 2%. How much do you get to keep? You get to keep 4%, right? You get to keep 4%, and you only have to put up a quarter of the money because the bank put up the other 3/4. That's what premium financing essentially is. This is like infinite banking on steroids. It's the ideal concept of using other people's money to make money. You know, this is something that banks do themselves. Why do you think banks love to offer specials on CDs and savings accounts? And what's their special? We're paying 1% to you guys on your CDs for 90 days or this, that, or the other. It's because they're taking their money, and although they're paying you 1%, they're taking that money and they're flipping it into index universal policies that are earning 6% and 7%. So they get to profit from their clients' deposits. That's why deposits are so huge to banks. It's a huge revenue generator. They don't, the administration is covered by the bank fees, but the profit is made from reinvesting your own money. That's how banks make money. They reinvest. So what I'm showing you how to do is how to bypass a bank and take your money directly to these types of strategies. It's a very common tactic, right? So premium finance, let me give you some facts on it. Number one, there's 2 companies that we have that work this. National Life Group, NLG, and Allianz, the only 2 companies in our platform that leverage premium financing, okay? Number 2, the required minimum to do premium financing cases is about $20,000. I think it's $22,000 is really what it is. $22,000 minimum per year. That's the first. That's the next rule. Third, they've got to be able to pay that first year upfront. So they got to be able to have at least $22,000 upfront to deposit. They can't do monthly payments. They got to pay at least the first year upfront. The next years they can do monthly if they want. Okay? I'm sorry? I believe so, yes. Yeah, but the first year has to be paid up front. Okay? So we know $22,000 minimum. We know that they've got to contribute the first year annually. The next years after that are monthly. They've got to also make 5 years worth of contributions. 5 years. They can't do 4. They can do longer if they want, but they got to at least do 5. At least do 5. So if it's $20,000, if it's $22,000 a year minimum for 5 years, that means the person's total is what? 110,000. Right? I'm just giving you kind of like the fundamentals of how it works. Ideal clients, 20 to 45. You know, these are definitely wealth management type clients. Okay. Now they've got to commit 5 years worth of contributions, but at least 15 years of it sitting in that account. They've got to commit at least, because why? Because on the 15th year, they're required to pay back the loan that the bank gave them. Now, here's what's cool about the loan. No credit check. Okay. No credit check. There is a chance that they're going to ask for income verification. You've got to be able to show that you're making at least 6 figures. That's another prerequisite. And obviously you have to qualify for the insurance under the normal, you know, insurance guidelines. Why am I giving you all these requirements? Because the insurance company is going to underwrite you for your life, your health, but the bank is going to underwrite you for your finances. They're about to loan you 3 times the amount of money you put in.
Can
So
a
if,
business be an owner of the premium finance policy?
can a what?
Business.
Yes, but I don't know if you would want that because they lose the tax benefits. However, a business owner can set one up for himself. You get what I'm saying?
So they can't set one up for their executive.
Yeah, you can.
Like an
But
executive bonus plan.
Exactly,
basically.
100% you can. Yeah, but the owner still won't be the business if they want the tax benefits.
Gotcha.
Okay. Okay. Good question. A couple other rules to this. Trying to think here. Income, 6 figures. We already talked about that. Underwriting requirements, we already talked about that. 22,000 minimum, 5 years of contributions, already talked about that. The bank's going to give you roughly 3 times. So if you put in 110, that means that the bank is roughly going to be putting in $330,000.
I think one of the things was if it's not a minimum of 25,000K a year, you have to have a minimum of $1 million IUL coverage.
Ah, there you go. So $1 million is a face value minimum for under 25,000 in contribution. Okay. You know how I find these cases? Again, I fact find when I know that the person has a decent amount of discretionary money. I say to them, I go, I do an IUL presentation, a normal IUL presentation, right? And I explain to them, I say this, I go, listen, what if I could find you a bank, okay, an accredited bank that's willing to give you 3 times the amount of money that you put into the IUL, and you earn 6% on not only your money, but the bank's money. And when the bank requests that you pay them back, you only have to pay them back the money that they loaned you and 2%, but you then get to keep the 4%. Is that something you'd be interested in? Think about that concept. Imagine earning 6% on all of this, knowing you only put in this much, but you get to keep that earning, right? That's how premium financing works. Now let me talk behind the scenes. What actually happens? You got the insurance company, Allianz or NLG. You've got you, the agent. You've got a trust company. There's got to be a trust company on as well. That trust company, so that you know what the name of the trust company is. It's kind of cool. You ready? Kaizen. What's the name of our company? TKO, the Kaizen organization. The name of the trust firm is called Kaizen. It's pretty cool. They do, if you go into the Call UMS website, you'll see that there's constantly webinars on it as well too. There has to be a trustee company on it as well who is in charge of the administration of all of this stuff. There has to be, which means that the premium that the person is paying in, I want to say 1,500 of that premium on a yearly basis is the fee that the trustee, that Kaizen charges for administering their services. Okay, there you go. Does that make sense? So it's like $1,350 to $1,500 that they'll charge. So if the premium is $22,000, $1,500 of it is going to be taken and given to Kaizen as their fee. The rest of that is what gets put into the IUL. Does that make sense? Yes, no, maybe? Okay. So there's the insurance company, right?
Yes.
You've got you, the agent. You got the client.
Yes.
but there needs to be a trust firm on payroll as well. The trust firm is the one that handles the administration of all of this, the managing of the money, the reporting. There has to be a trustee company that administers and is the middleman to this premium financing case. It's only through them that we have access to the banks. Think about it like that. Because the trustee company is there, they have the relationships with the banks that's willing to loan out the money. But that trustee company, their name is Kaizen, that's the name of the company. They charge $1,500 a year as a fee for doing what they do. So if the premium payments are $22,000, $1,500 of that money is going to go towards them as the fee, and the difference is what goes into the IUL. Does that make sense? Okay. Yes, but you're still only stroking one check. They're taking their funds out before the IUL gets paid. Correct. When you set up premium financing, your payment's going to go directly to Kaizen. Kaizen then pays NLG or Allianz, whatever company you use, and then keeps their fee. Correct. You need a trustee company. There has to be one involved. Okay. The trustee has all the relationships with the banks. They do the underwriting for the banks. That kind of stuff is already there. Here's what's cool about underwriting. Credit has nothing to do with this loan. Collateralization has nothing to do with this loan either. It's pretty cool. Here's the $1 million question a lot of people ask, people who have a lot of net worth. Do I need to borrow money from the bank to do this? No, you could do it with your own money, but there's a benefit in doing it with other people's money. It's always a benefit to doing it with other people's money if you can, right? Some people, however, have that pride or that chip on their shoulder that I don't want to borrow money. I want to do it with my own money. Okay, we can do it with your own money, no problem. But, I just figured you might want to do it with the bank's money. It's what the Wealth of America does. They leverage other people's money, okay? This is great for that person that is in that intermediate bracket where they're not really middle Americans that are, they're making a really good amount of income, but they don't have millions and millions of dollars. It's perfect sweet spot. 22,000, contribution. Question.
Tony, so go back to the executive bonus plan. So if they do that, does the employee still have to prove 100,000 of income if it's an executive bonus plan?
Yeah, but they should have no problem. Well, wait, I see what you're saying.
So like if they make 70 or 80,000, but then the company is going to write them a check every single year of 22 grand, 23 grand to dump into there.
But technically then that's not an executive bonus plan.
Because they're not an executive.
Because they're not an executive. That's a key man plan.
Key man. Okay.
That might be a little difficult.
Okay.
Because the insured go ahead.
I think that 100,000 minimum is only for one of the companies.
One of the what?
It's only one of the companies has that $100,000 minimum.
Well, that'd be good to know. I thought it was both across the board. It'd be good to know that.
I think it's one. We
Okay.
need to check, but there are all the other criteria as well that they've got in having $1 million or minimum 20,000 a year.
Okay. I know Allianz has a 50K minimum to do IULs. And Allianz is one of the companies as well. NLG is the other one. So 100K for whatever reason. I remember that sitting in on a training, it was 100K minimum. But what you're talking about is not an executive comp plan. An executive comp plan would be easy because I'm sure that because the executive owns the business can show more than $100,000 of gross revenue easily, right? But if it's a key man plan, key man is not executive of the company, so it's their payroll, their salary. So that might be a little tricky at that point. Okay. But we can also double check with Howard saying that there might be one of the two might not require 100K of income. Okay. Cool. Got it. All right, cool. Any questions in TV land? I like calling it TV land. All right, so I'm going to open up a premium financing case. We're going to show you what the illustration looks like. It's similar to an IUL illustration, except for the fact that you get a couple extra columns to show what happens to the money from the bank. Where are you?
Tony, the other thing people need to be aware with our premium financing is it doesn't get financed according to your timetable when you want it to happen. They've got specific days in each month that that the financing goes through. So if you're like on the beginning of March and the next tranche date is April 15th, you've got to wait till April 15th for everything to get processed, assuming you've got everything lined up before then.
Correct. That's more internal stuff for you to know. You don't want to give, if there is such a thing as information overload to the client, but you need to know when the policy can go in force needs to fall within a specific cycle of the financing company. Those are called tranches. And so, like, just because a policy might have gotten approved and ready to go on the 1st, that tranche might not, but that tranche date might not be till the 18th of that following month. So nothing can really start until then, but that's just something you need to know. Okay. Commissions, how does it pay out? That's a big one you need to know. 35% of the target goes to the trustee company. So 65% is what stays with you. That 65% gets paid out to you over a 5-year period. So it gets divided up over a 5-year period, which is pretty cool because you're still dealing with some pretty big numbers. So your commissions are still going to be, you know, in the $6,000 category, but you know it's going to happen on an annual basis for a period of about 5 years. Does that make sense? So here's the other good part. The dollars that the bank is putting also counts towards the target. So you might get a client that puts in 20 grand, right? First year, but the bank put in 60 grand. So now there's a total of 80,000 in there. The target could be 50,000 target. Could be a 50,000 target case. Take 35% of that, which is 17.5 from the 50,000. And that still leaves you with what, 32.5 in target? 32.5 target, that's legit. Now you're gonna get the commission on that divided up over 5 years, right? So just for easy numbers, right? Did you guys see what I just did? You understand it? Okay. Yeah, so, you know, 20,000 is what's put in from the client. The bank puts in 3 times the amount, so 60,000 is put in from the bank. 60 plus 20 is 80,000. It's gonna be an overfunded IUL, so that all won't be target. If it's 80,000 total funding in, chances are 50,000 of it is target, roughly speaking. What happens out of the 50,000 target is 35% of it goes to the trustee company. That means that 32,500 is your cut. Out of the 32,500, okay, let's say you're on a VP, you're at a 95% contract. That's $30,875 in commissions. That money gets divided up over 5 years. So every year you get a $6,175 commission. Every year. That's pretty sick. You do a good, 4 sales of these a year. Let's just say 4 sales, and you're making 24 grand a year in salary for 5 years just from all the business that you've done. You can kind of build yourself a pretty legit residual stream of income off of that as well too. Does that make sense? So you need to understand how that pays out. Okay. Questions in TV land. I see Mr. Bolivia there looking like the cartel. He's like this. Good. Okay, cool. All right, I have an illustration here we're going to show you. Here it is. Okay. So let me open this up. Good. Comparte la página, por favor. Host disabled, participate, share. No, don't tell me I can't share screen. Who's host? Oh, wait. Why did the host disabled participant sharing? Oh, she might be sharing, but that's not. Do you know if that's accurate, Plebs? So she needs to.
Maybe she disable you as host.
Oh, it's because Howard is a co-host. I think there can only be one co-host and one host. Okay. Can you hop in there real quick and see if she can hop over mine and make me a host?
See now, you can share your screen. Try now.
Like that? Say it again.
Try share it now.
No, you're not sharing at all.
No, you share.
What?
Then you share.
Oh, yes, I can. I love my team. God, I love my team. I got it. I'm good, Plebs. Can you guys see the screen? All right, good. Cool. All right, so this is what a presentation looks like. Let me give you some other things about the presentations. It takes it takes 72 hours for Kaizen to put together an illustration. If you want it to be, they have certain templates already pre-made, but if you want a specific one based on specific dollars, specific person, it takes a good 72 hours for them to put together this. So don't think it can happen right away. You've got to be well planned on this, okay? Kaizen, love it. Here we go. So let me change this view to continuous scroll. That works. Zoom it out. Come on. There we go. Let me zoom in a little bit more. Okay, good. So this is a scenario of a 39-year-old female, okay, preferred non-smoker, 1.5 million of insurance. Okay, let's look at the pictures. I really like the way the pictures operate. So this blue little man represents the client. This green represents the bank's money. So the way that they're always structured is the client makes 5 years worth of payments. The bank matches or gets close to matching for 5 years as well. But then after the 5th year, the client doesn't put in any more money and the bank doubles how much they put in for another 5 more years. So in this scenario, the client's putting in $24,500 for 5 years. That's a total contribution of $122,500. Follow? The bank for 5 years puts in $18,200 right alongside your 24, but then from year 6 to year 10, they put in $41,000. So you as the consumer total $122,250. The bank totals $300,000. You see how that's pretty close to 3 times the amount of money, right? If you notice, I'm a very conceptual seller, right? That means that the total amount of money going in is $419,000. How much of that money is yours, Mr. Client? 122. So now imagine if you're earning 6% on 419. This is how I do this, just so you guys know. I'll take 419 on my calculator. I'll multiply it by 6%. That's $25,000 worth of interest. But how much of that money was yours? 122,000 is yours. So now think about this. If your 122,000 can generate you 25,000 a year in interest, how much are you really making? Are you making 6% or are you making more? You're making a heck of a lot more. I mean, if you take that interest and you divide that among the 125, you're making a 20% return because you're leveraging the bank's money. See what I just did there? That's how you inflate the value of the money being earned. Does that make sense, Elizabeth? Okay. So, correct, exactly. I need them to understand that. Once they start getting that, they're like, holy crap, wait a minute, I get it. I'm making money off the bank's back, not my back, right? Okay, so let's go right to the illustration. Here's the illustration. This column right here represents the client's money, $24,500 for 5 years. Boom, 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 boom. This column right here represents the bank's money, right? 18.2 for 5 years, and then 41,000 for another 5 years. Boom, 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 boom. Total amount you got to pay back to the bank on the 15th year is 405. 405. So they loaned you 300. The bank is only in business to make money. They're going to make 100,000 of interest, which is roughly about 2% of what you've been earning the entire time. You got to pay back 405. Okay, so let's show the next column, right? So let's see here real quickly. So illustrated end of year projected cash value. This here represents your cash value. And this here represents your end of year cash value surrender value, estimated cash surrender after bank loan. Okay, so here's the surrender value. Here's how much you have after you pay back the bank. Because here's a question people ask all the time. Their questions are, let me zoom into, sorry. The questions they ask is, well, what if the client doesn't pay for the full 5 years? What happens? If the client doesn't make their payment, then the bank stops their agreement and they take back the money that they borrowed out of your cash value. So let's do a scenario. First year you put in 24.5. The bank puts in 18.2. You technically have 35,000 in cash value. But if you don't make your second year payment, the bank says, give me my money back. How much do you owe the bank? You owe the bank $19,367. So what's left in your account is $16,008. The bank will always protect themselves first. This technically, under the eyes of the bank, is a collateralized loan. They are collateralizing it based on your cash value of your insurance. Does that make sense? That's how the bank protects himself. Now, how do you as a consumer work with the bank to make money? If they're making money, you're making money. Okay, second year, you do the same thing. You put in another 24.5. Bank puts in another 18. You now have 74,000 in cash value. If you quit, however, the bank's gonna get back their money. Their money is now 38,000. That's what the loan is worth. And now you have 35,000 remaining. Do you see how this is not a short-term investment? You've technically put in more money than it's worth, but that's how all IULs work. This is long-term, okay? Now you go 5 years in, right? And the bank now continues on your behalf afterwards for the next 5 years. If you fast forward 10 years in, you now have 491,000 in there. Mr. Klein, how much money did you put in? 122, and it's worth 491. I just 5x'd your money. You see that? If you quit and you say, Mr. Bank, I want to pay you off, you pay the bank off on the 10th year and you have 143,000 remaining. The amount you got to pay the bank is 348. You have 491. So the remaining amount that you get back on the 10th year is 143,000. Did you make a profit? You did. Not a big one, but you did. You did. You made a profit. And the entire time, you also had $1.5 million worth of life insurance protecting you and your family. The entire time. I'm sorry, what? Whoever you want to assign as a beneficiary. Assign themselves as a part of the beneficiary just for the loan balance. The loan balance always gets paid off. That's why there's a trustee company. That's called a collateral assignment, which you guys probably learned about that when you were getting your license, but you've never used it. That's how you use it. So the bank is always going to protect themselves from anything. If you don't pay, they get their money back. If you pass away, they get their money back. But think about it this way. 1.5 million of coverage, you pay back the loan on the first year, 35 grand, your family still walks away 1.47, tax-free. So it's still a good plan to protect you and your family. With the right company, you still have living benefits as well. Follow me? Okay. So let's go back to it again. So 10 years in, total amount that the bank has now contributed plus interest is 348, plus your money means you've got $491,000 in cash accumulation. If you pay the bank off, it's 143,000 remaining. You let it sit for another 5 more years because I told you this was a 15-year plan. On the 15th year, it's now worth 625,000. How much did you put in, Mr. Client? 122,000. That's not bad. I mean, you're close to 6xing your money in a 15-year window. You pay back the loan. The bank wants 405,000. When you pay back the loan, your money goes from 625 to 238. It took you 15 years to make $100,000 out of your 122. You went from 122 to 238. All right, you doubled your money. It took you 15 years to do that. That's a pretty good return if you think about it. Now, you don't have to pay back the loan with money in this cash value. You could say, Tony, I have other assets. I love what this is doing. This is making 6%. This is phenomenal. I want to pay back this 405 with other assets that I have. If you do that, then your money stays at 663,000. If you use this money to pay back, then your money drops to 238. Everybody follow me so far? Okay. Here's where it becomes attractive is after the 15th year. Remember, you only made 5 years worth of payments. You've been letting this sit. After the 15th year, you have the peace of mind of knowing, the bank just got paid off. I kept all the net interest after I paid them off. I'm just gonna let it sit and continue to grow. If you used the money in the account to pay off the bank, you got 238 remaining, but look what happens the next year. Now you got 260. What did you make? You just made $21,000 in interest. The next year after that, how much do you make? You got 282. Now you made 30,000 in interest. The next year you got 306. Now you made 40,000 in interest. So every year you're making 30,000 in interest, 40,000 in interest, 50,000 in interest, 60. You see that interest kind of compounding over and over and over and over and over. Let's say on the 20th year, Mr. Client, you're now 59 years of age. If you retired at that age, notice how much your money goes up by. You going up from 362 to 394. You're making 30,000 in interest, completely and utterly tax-free. How much did you put in, Mr. Client? 122. That means you get back all your money in 4 years. Let's say you don't retire at 50. You retire at 65. At 65, you now have $531,000 in your cash accumulation. And you could turn this into a pension that'll now pay you $60,000 a year tax-free for the rest of your life. How much did you put in, Mr. Client? 122. How many years does it take for you to get back your money if you pension this at 60 grand a year? 2 years. Think about it. You put in 122, you're making 60,000 in interest. That means after 2 years of pension money, you've gotten back the money that you yourself put in, and then everything else is profit. Mr. Klein, do you know what $60,000 a year for 25 years is? Let me show you. Well, let's be exact. Let's use 59,000. 59,000 for 25 years. That's how many years this pays out. $1.475 million. You ready for the sexiest word ever? It's 2 words. Ready? Tax-free. So you put up $122,000 in 5 years. Let it sit there until you hit retirement, and at 65, you draw out $60,000 a year, guaranteed, tax-free for the rest of your life, which is a total of $1.475 million. And if you pass away at 90, you're still leaving your family with another $842,000 of death benefit, tax-free. Out of your, how much again did you put in? $122,000. This is what the Wealth of America does for long-term thinking. This is what the Wealth of America does. So as long as, Mr. Client, you are not a short-term investor, this is a strategy you should more than certainly take advantage of. Oh, and by the way, if you pay off that loan with other assets and you let that money sit here, I mean, look, at 65, it's already worth 1.3 million. And then the very next year after that, it's worth 1.4. So that's $80,000 just in interest that you could take out every single year. That's a whole different ballgame. Now we're talking, 3 million, 4 million of money that you get to tap into versus 1.45. But either scenario here, Mr. Client, you win. You win. Collateralized, creditor safe, lawsuit protected strategy that the Wealth of America loves to leverage. That's premium financing. Does that make sense? Is this not an attractive, sexy concept? This is what, so when you come across people that have those types of assets, you can talk to them either about e-commerce, you can talk to them about premium financing, you know what I mean? Infinite banking to me is a strategy more for people that want to do big numbers, but they're on tighter budgets. Because infinite banking is all about us showing clients how to take their monthly expenses, make a profit before they pay their monthly expenses. You get what I'm saying? Premium financing is people who have assets. They've got 20, 30,000 put away in a savings, and they can easily put away 20, 30,000 every year for a 5-year period without a problem. Show me something. Show me one thing that over a 25-year period can make $1.45 million out of a $122,000 investment.
And obviously, they got to be able to pass an AKG and a fully medical.
Full underwriting. They have to go through full underwriting, yes. We're not talking $800,000, $900,000 of an IUL. We're talking $1 million, $1.5 million, which guarantee they're going to request a medical. So they got to have the health for it. And they've got to be able to say, this is my set it, forget it type money. That's how I look at it. Set it and forget it. If I get, and so once I show this, I say this to them. I go, no, now look, let me bring it down to layman's term.
They also have to show that they make at least 6 figures.
Yes, yes. Howard is telling me that there's companies that don't require that, but I don't know that as of just yet. The 2 companies we use for this is NLG and Allianz. We'd have to figure out by a phone call figuring out which one doesn't require 6 figures. But to my knowledge, they do require that they verify they make 6 figures. Yes, Lizette.
What if they had it for 100,000 and they put it out front for 5 years?
Yeah, of course. You know how?
Premium fund account.
No. You can, man, I can really curl your toes here. What if you put it into a SPIA? Put it into a single paid, put it into an annuity and tell the annuity to pay for 5 years that. So now you get paid on the annuity side and on the premium financing side. Oh my God. My God. I hope you don't become allergic to money. You do not want to be around me. Think about it. Put $100,000 into an annuity, make $6,000 in commission, have the annuity pay this for 5 years. And then commission on this as well. You get paid twice.
Just like somebody sells a property and put it to speed.
Guys, oof. That's how you do it. That's 100% how you leverage. So after I've done this presentation, here's my talk track. It's simple. Mr. Klein, you're 40 years old. If you gave me $122,000 right now and I could secure, by the time you turn 65, a $60,000 pension for the rest of your life, tax-free, and $800,000 worth of life insurance to your family as a legacy, would you do it? Listen to that statement. You give me 122 now, I give you $60,000 a year for the rest of your retirement, tax-free. $60,000 a year tax-free is like making $90,000 in a salary because it's clean money. And I give that to you from 65 all the way to age 90. That's $1.5 million tax-free, and you still leave $800,000 to your family as a legacy. But you got to be willing to say, I can give you 122 now. Would you do it? Can you forget about that 122 for the next 20, 25 years until you hit retirement? How good does it feel to wake up? If you could wake up next month, stretch out your arms and say, wow, my retirement is at least $60,000 a year set. Would that feel good? It does? Do you have 122 you could provide? Yes.
So
Let's talk.
if the parent doesn't have the health, can they use one of their kids for that?
It's going to be hard. It's going to be hard because remember, on a kid's policy, the hardest part about a kid's policy is getting a high face value.
Well, let's say if they're like 20, 30 years old,
Yes.
35,
But here's the problem. The kid has to show 100K.
just so there is.
So that's always going to be your
Only there's an 18-year-old minimum age.
18
Can't
years
do it
old.
if you're
There you go.
under.
You can't even do premium financing on kids. I don't know the answer to that one, but that's a good question. If they have the money up front, then maybe, and they can show that the money's going into an annuity and automatically being assigned, then maybe there's a way to go around it.
They gotta be proof.
Yeah.
Funds. So
Yeah. Because the biggest reason the trustee company wants 6 figures is because they got to be able to show that the person can afford it. So if the person has the money up front, then maybe they don't have to show that. So I'm sure there's stipulations around that. Those types of underwriting requirements are not insurance underwriting. That's trustee to bank requirements, which is a very different type of underwriter. But I have a feeling that we could probably find a green light on that scenario.
That meeting we had.
You're allowed to put everything in upfront as a lump sum if you want.
There you go, lump sum. There you go. Then you don't got to show income. We just answered it for you. Yes, Caesar.
Well, that meeting that we had yesterday,
There you go.
it may not be her, but it may be her daughter.
I don't recommend this as a strategy for the 50-some-odd-year-old person. Look how long it takes for it to really gain that profit. You're talking about 15 years pay off the loan, 20 years before you start drawing money out. A 50-something-year-old's already in their mid-70s by then. Like it just, but for the 35, 40, that's why I tell you, this is perfect for the 20 to 45-year-old. Because 65 for retirement is still a decent amount of time away, which allows for it to really just really pick up some speed and really compound. Yes. Now imagine doing that and you $6,000 a year in commissions up front. Guarantee, no problem. You ready for this one? It's non-charge backable too. Because they're collecting money up front. Advanced, boom, hey, non-charge backable, baby.
There's still residuals on that too, right?
Yes, there is residuals as well on top of that.
Should be probably.
Elizabeth?
$2,000 a year.
It's just that everything is just.
Go for it, it's all good. TV land, anybody have any questions? Anybody's toes curling just from this whole concept? I see Eber, he's breathing heavy. Eber, unmute yourself, bro. I can't hear you. I cannot hear you, Mr. Eber.
You gotta help us with this training more often. Like this is,
yeah.
I got chills like all over my body right now.
This is wealth management, guys.
Ruby
Here's
still
the,
looks like he's gonna kill
here's the
someone.
mistake you don't want to do. This is not a conversation you have with every client. You got to know that they've got those types of assets to start digging into that world. If not, why talk to somebody about something that you know they can't do? Would you present a Ferrari to somebody only making $30,000 a year? No. No, I'm going to sell the hell out of the Lexus though. You know what I mean? Like present what you know they can financially afford, but these are the strategies that you can do. But to start, to get your feet wet, know how to find these types of clients, you know, tell them enough information where they salivate a little bit, they're interested in learning more, and then set up a joint meeting with someone who can have this type of talk track. So what are you looking for? You're looking for people that can put up at least 22,000 the first year, that can afford to do 22,000 for another 4 more years after that. And the talk track you're having with them is this, Mr. Client, if in the next 5 years you can come up with 125,000, and as a result, I can come up with 1.5 million 25 years from now, would you be interested in learning more? See what I just said there? Mr. Client, if you could come up with 125,000 in these next 5 years, and as a result, I can give you 1.5 million 25 years from now, tax-free, would you be interested in learning more? Of course I would. I want you to talk to my specialist. I want you to talk to my wealth management advisor. He works with clientele that can do these types of long-term strategies. Look how simple it is. Now what is it? Don't give them anymore. You just give them a taste of the cookie. Don't give them no more. Ladies, you guys know what it is to date. You make them work for it, damn it. Make them work for it. Okay? Make them work for it. I'm serious. Give them enough that they want to go on a second date, but don't give them too much. Don't give them too much. If you give them too much, they won't come back for a second date. Damn it. Give them enough that they want a second date. Same concept. It's true. That's sales. It's the truth. Mr. Client, if you can come up with $125,000 in the next 5 years, paint the picture in their head. You're 40. That puts you to 45. You come up with 125,000 in the next 5 years. And I return back to you 25 years from now. So if you're 40, that makes you 65. 25 years from now, at 65, I return back to you $1.45 million, tax-free. Would you do it? In a creditor-safe, tax-free environment? I would. What the hell are you talking about? Would you do it? Yes, I would. Let's set up a time to sit down and talk. I don't want to tell you any more because I'd rather you talk directly to the specialist. Hear it from the horse's mouth. What? Game over. What? It's okay. When she finishes, she's going to bring everybody on over here, and I'm going to transition to the next part of the training. Does that make sense? That's pretty legit. Wouldn't you agree? Now you know how to find it. What do they need? They need 22,000 minimum first year up front, and they got to be able to afford another 22,000 for 4 more years after that. They got to be between the ages of 25 to 45. I would say 20 to 45. Okay. And they have to be able to qualify for insurance. Now you know what characteristics to look for. You know what questions now to ask. You don't even need to know how to present it. All you need to do is how to find it and then schedule a joint work meeting and learn in presentation. Learn in presentation how to do this. This is what the Wealth of America does. This is what banks do. You know, if you need third-party validation, okay, go look up the benefits package for General Electric. Look up the benefit package. It's on PDF. It's a 180-page document on Google. You can find it. And you'll see there's 5 main board members inside General Electric. GE, that's a big company. Would you agree? That's a Fortune 500. 5 of them. They're putting between $80,000 to $300,000 a year into, you know what? IULs. What strategy are they doing? Premium financing. But they're only putting in $9,000 a year into their 401ks because they're required to. So if the Wealth of America knows this and puts $80,000 to $300,000 a year into these strategies, but only $9,000 into their 401k, why are we as middle Americans so concerned about putting more money into our 401ks? Now you just third-party validate. Wait, CEOs do this? I want to know what they're doing. Yes. The number I'm giving you, this is minimum.
So within this entire time, 20 years, they can keep putting in money.
Yeah, and they can pay the bank off sooner if they want to. They have to pay the bank by the 15th year. Have to, but they can pay them off sooner if they want to. They can make more payments if they want to.
They don't make any, they're not required to make any payments to the bank during those 15 years.
No, they got to pay back on the 15th year or before if they want to. Yeah.
And Kaizen is
The trusted.
1,500 every year and 35% of inflation.
Yeah, but that's internal. That's stuff. That's conversation you have amongst you.
No,
That's something you know.
not to
Yes.
share, just so I take everything.
Yeah. So 35. Kaizen takes 1,500 a year of the premium towards their fee, and 35% of the commission.
And they apply for the bank loan. They're the one that handle all of that.
They handle all of it.
So we are working with
Kaizen.
not NLG, not the bank.
Both. We work with NLG for the underwriting of the insurance, but we work with Kaizen for the approval of the money. Pretty cool, right? Yeah, buddy. These are some legit cases, guys. I'm showing you. All with that simple, easy life insurance license that we acquired for a few $100s. That was a 39-year-old female. Yeah. Ideal, in my opinion, that's where you're going to find the most success, because let's be real, 20-year-olds don't have that kind of money. 25-year-olds don't have that kind of money. 30-year-olds are typically brand new parents, and they're freaking dying, starving, because they just became parents. It's that 38, 39. I can even tell you, me personally, with my life, you know what I mean? I've made six figures for a number of years, but it's not until recently that I have more discretionary dollars to do with it, because I don't have that burden of my children, 1, 2, 3 years of age, the daycare cost, the this cost, the that cost. I'm not still trying to figure out my career. Like, yes, you might find that 1 or 2 person in their 20s making multiple six figures, but that doesn't come often. So if you're going to go searching for people, realize that this works great for 20 to 45, but the sweet spot, because this is the age bracket where they have that kind of money and that kind of responsibility, right? That part is at about 35 to 45 years of age. That's where we start really, at least me, that's where I start saying, what the heck do I want for my retirement? You know what I mean? Like in my 20s, I'm just kind of like, nah, man, I made 20 grand. I'm gonna go get a car. I'm gonna go buy a fat ass whip. I'm gonna put some rims on it, take a vacation. What? In my 20s, I blew through money left and right that I wish 37-year-old Tony could talk to and be like, stop, don't do it. It'd be in a different situation, but it is what it is. It's life. You live and you learn. I would tell you not to look for this over 45. Remember, it's not that there's an age limit. It's that there's a 20 to 25 year waiting period before you really maximize it out. So somebody in their 50s might not want to wait till they're in their mid 70s to start leveraging it.
So, but maybe it's not that. It's working on.
It could be, again, objectives. When someone does something like this, 9 times out of 10, it's not leave behind. When someone does something like this, 9 times out of 10, it's I want to make a crap ton of money. Because I'll be honest, if you show me a 60-year-old that has that kind of money, or a 50-year-old that has that kind of money, and their whole objective is leaving something behind, I'm not selling an IUL. I'm selling them a GUL. Honestly, I'll sell them 2 million, 3 million of GUL. At that kind of target premium, easily. And it's a guaranteed product. Set it and forget it. You ain't got to worry. You see what I'm saying? Oh my God, you guys miss so much. You guys miss so much. For those of you that just hop back on, oh my God. Listen, for those of you that were on, just give them like 30 seconds if you can. Tell them, give them a taste. Remember, ladies, like I talk about that first date, give them a taste of what they missed.
Submit business first and you learn.
Hey! Submit business first and then you learn. Yeah, for real. So, all right, how many of you guys can use a break? TV land, anybody got any questions? Anything they want to touch base on? Everybody's good? Everybody's good? Okay. So I just finished that advanced training. Okay, good. Awesome. So it's 3:06 Central Time, 4:06 Eastern. Let's take a quick break. Let's be back by 4:20 Eastern Time, which is 3:20 Central Time. Okay, that's 14 minutes of a break. We'll be back, and we're gonna finish it off the last hour and a half with final expense and mortgage protection. Good. Awesome. Do we have people? The most flexible company I've ever seen with health is Mutual of Omaha. I've been able to get people with bipolar disorder, obesity with Mutual of Omaha. Now,
no, that point is good. I
and now
got
it will be fully underwritten, and they're probably going to be heavily rated, and it's going to be a little pricey, but I can get them approved here.
They didn't approve me because I was Mexican.
They didn't approve you because you had twigs in between your teeth. All right, guys, let's get this bad boy started. Turn on some cameras. We're gonna close this bad boy off. Finish off the day strong. There's my man Gerzo. Gerzo, you a good looking Mexican, bro. You're in North Florida, ain't you? Ain't you like Pensacola right now or something like that? Oh, we can't hear you, brother. You are muted, my friend.
Yeah, I said I'm in Pensacola right now. I'm at a Panera Bread right now.
Ah, okay, yeah, he's North Florida. Yeah.
That's south for me.
So, it is. So, Ola had a good question in reference to, what companies to go for when you're dealing with clientele that has severe medical issues. The most flexible company I've ever seen thus far from an underwriting standpoint with medical issues is Mutual of Omaha. I'm not going to tell you that we don't have others, but from my experiences, they've been the most flexible with things like diabetes, bipolar disorder, obesity, things like that. It is going to be underwritten. You don't want to go simplified. Fully underwritten with Mutual of Omaha does not have all the living benefits. It has the terminal illness rider, and it has the chronic illness, which is long-term care pretty much. It just doesn't have the critical illness, which is like cancer, strokes, heart. That doesn't have that. They have an IUL platform, they have a GUL platform, and they have a term platform. And they have a final expense platform. So you should be able to hopefully find a solution there. If they get declined there, I don't know where else to go other than talking to Neelam. Honestly, guys, look, a lot of the reasons why UMS as our IMO, really our sponsor that allows us to be an FMO, a lot of the things that I love about them is their back office resources. Genuinely, my biggest fear, if you ask Sandra, when making this decision to take this plunge and really open this up, was I cannot be the only solution for everybody. I felt like I would do you guys a disservice if I'm your only solution to an answer. And so you pray about things the way, and you ask for solutions, and what does he do? He always answers he always answers your requests. He answers your prayers, right? And so he presented me with an opportunity to meet with Marianne, who runs UMS. And they are the best back office support system I've ever had the pleasure of working with. I don't say that as a bias because obviously, you could think it that way, but no, in all reality, when I compare it to Northwestern Mutual's back office support, WFG's back office support, PHP's back office support, they are the best by far when it comes to back office support. The names you want to know about, just so you guys know, is, and actually, you know what? I remember they did send me something that I want to be able to show you guys. You know what? No, because we'll be short on time. I don't want to do that to you guys. I'll do that in another training. Neelam with an N is Nancy Neelam. She's your case manager, guys. She sees every single case that you guys turn in, every single one of them. She's almost like your free case manager. She'll help you with underwriting. She'll help you, this is what you need to do. This is what you need to do. This is how you do it. This is the form you need. You can do that with every single company. You have to do it with North American, just so you guys know. You will not get the ability to talk to a North American underwriter. You got to go directly through Neelam. So whenever you get North American business, it's typically Neelam forwarding it to you. Okay. But she's also your risk management manager, which means if you have someone that has medical issues, you call her up. She'll typically email you a questionnaire of whatever the medical condition is. All you got to do is get those questions answered. It's an internal form, so you don't got to worry about, I got to send it to the client. They got to sign it. No, you don't need none of that. It's just a questionnaire of things that you want to ask the client. You send that back to Neelam. What Neelam does is she shops out the market. She shops out every company that we can sell, talks to their underwriters, and figures out which one is the best one to go with. So email you an Excel sheet report that says, hey, this is what Prudential said. This is what Nationwide said. This is what North America said. This is what this company said. This is what this company said. This company will approve at a table 3. This company will approve there. This company won't even look at you. Like, that's a lot. That's a great resource. I've never had that resource before. That's what Neelam does. Donna handles annuities. I have yet to draft up one annuity illustration. One. You know what I do? Hey, Donna, here's what I got going on. Can you email, I'm thinking this company. Do you agree? And if you do, can you send me an illustration? Sure. Boom, sends it. Literally, boom, there it is, sends it. Boom, there it is, sends it. Every single guys, we've done 1.4 million in annuity business. I've put my hands on at least 800,000 of it as far as helping, with the case designing of it. I've yet to do one single illustration. She does all of those. Sometimes I'll call her up and say, hey, Donna, this is what I got going on. I need a short-term annuity for a 60-year-old client, state of Florida. What do you recommend and she's going to ask you, are we trying to grow income for lifetime? Or are we trying to grow lump sum income for investment withdrawal? What are we trying to accomplish? And she'll give us a recommendation. This is the company I recommend. Boom, boom, boom. That's Donna for you, right? Leverage that as your resource. John Countryman is the only male in the office, so you guys know. The only guy in the office, God bless him. I think he takes a lot of vacation on purpose. But he does everything that has to do with illustrations. You need an illustration designed, he'll do it for you. You know what I'm saying? Oh man, I'm not contracted with Allianz yet because I need a paper application, but I want to go see the client. I want to show them an IUL. Call John, he'll do it for you. He'll do it for you, no problem. You know what I mean? He'll put those illustrations together and send it over your way. He'll even give you a recommendation on which company to use, how to design it, how not to do it. The only thing I would tell you about John is when you come in, have 30 minutes extra to chat with him because he's going to be a talker. He will take up your time.
That's just the hello.
What's that, Howard?
That's just the hello.
Yeah. It's 30. Yeah. John is like technical on steroids. No lie.
John's kept me on the phone before for over 2 hours.
Yeah. He likes it. He does. I swear. But John, so you know what I do every time? I'll tell you, John, listen, I'm about to walk into a meeting, but I need this real quick. I might not be walking into a meeting, but I'm walking into a meeting according to him because he's a talker. He will. But he'll get you what you need. He will. And everybody there just genuinely wants to help. Everybody there's there as much, to help this organization grow. We're in partnership. They want us to do well. Obviously, for financial reasons, they want us to do well. But, I can tell you this. I've built a really good relationship with Marianne. I built a phenomenal relationship with her to where she's more of a mentor to me from the business, but even on the personal side. You know what I mean? She really helps me balance my life out. Sometimes it's, because she knows what it's like. She knows what it was to open up her agency 36 years ago. She'll call me up every now and again and be like, hey, listen, do me a favor. Tonight, just unplug. Go get a drink with Sandra, go chill for a little bit, but you needed that. She's like, I know you're focused. I know you're this, but just, you got to go unplug a little bit. You know what I mean? So she's really been there a lot to help guide me, even with some of the things that have happened with Practice Company, and this transition, she's really been there heavily to guide. They're all there to help us grow, Trisha and Eileen, and there's another new girl. I don't know her name. That new girl was hired 100% because of us, just so you know. They handle licensing and guys, when I tell you we keep them busy, we keep them busy. Those are the only people that I would tell you this. Licensing team. Go through Sandra first before you go directly to licensing. They're busy. And they know to really genuinely communicate directly with Sandra about things because they don't know if the agent is direct to carrier. They don't know if that agent is LOA. They don't know if that agent's an associate, a field manager. They don't know where you are. So 90% of the times they're going to redivert you back to Sandra. So when it comes to licensing, go to Sandra. And Sandra goes to them and then they go. They get their marching orders and they go, no problem, right? That would probably be the only department that I would request that out of. With John Countryman, I want you to respect his time. If you know nothing about insurance or very little, first go to your VP. He's not there to give you an education on how insurance works. He's there to take your orders of how you want the IUL or the whole life or the infinite banking case to be designed. He's not there to teach you how to design it. You should know what you want and just be able to tell him, here, I want it to do this, 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 and this. If you don't know that yet, reach out to your VPs first. Same thing with Donna. Have an understanding of it. A lot of the times, and I work with you guys, and I'll sometimes tell you, hey, do me a favor, call Donna, tell her to do this, 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 and this, and you know what I mean. They're there to help us with speed, but they're not there to do the ABCs of insurance. That's our jobs as field underwriters. That's our job. It's my job to train you. That's your VP's jobs to train you on that. You know what I'm saying? But those are the departments that you really want to focus on. Tori, group benefits. Okay, that's a whole nother world. Trish also handles long-term care and Medicare Advantage, which, that's something that we're going to touch base on later on down the line. Disability insurance and long-term care is something that It's a good market for it. You have the licenses for it, but it's a whole different education. It really is. And there's a lot of opportunities there, but I first want to get people really strong in the life game before we get into that space. Because if not, you won't be successful in that world without having a good foundation first. But all of those department heads, they're there for us. I'll give you this as a tentative date. Okay, be prepared. I'm looking to host a big event. Okay, at UMS's home office. I'm looking to do this sometime in October. We're gonna call this a symposium. Jersey, New Jersey. This is looking to be sometime in October, so be on standby for those dates. Okay, UMS hosts this thing called the symposium, and what it is, it's a 3-day clinic where the carriers fly in and they do workshops, where some of the best FMO producers come in and they do workshops. We've been invited to be one of those speakers as well too. It's kind of cool, right? We're the rookie FMO inside of UMS's IMO. We've been requested to come and speak in this event. Treat it like a big event. They typically have 3,000-4,000 people at these types of functions. But this is not what this is not, you know what I'm talking about. Yeah, this is not gonna be, whoa, no. This ain't that, you know what I mean? This ain't, let's make all kinds of noise, jump on stage, listen to hip hop and pretend to have fun like we're making money. You know what I mean? This is not, this is, New Jersey? It's in Jersey. This is professionals that are coming, CPAs, financial advisors, RAIs. These are legit guys, and they're looking to run different workshops, different trainings, different how-tos, and we've been invited. So I'm meeting with Marianne this week to discuss it, to figure out the dates, to come up with, a rally around it. Let's really show up and create a big splash. Let everybody know, hey, we're a new FMO, but we're here to play. Because here's another thing I'll tell you. A lot of IMOs would not think that us, coming from the background of where we came from, could get serious and run an FMO to this capacity. You guys know what I'm talking about. You know what I'm saying? They wouldn't. Nah, those guys are just pretend financial guys. They're not really there. They're just there for the rah-rah. No, we're not. We're here to make money. We're here to be professional. We're here to be known. So I want to be able to show up in a splash. That's going to be this October in New Jersey. No, there's not a cost for convention and things like that. It's not going to be there. This is not one of those you have to stay in this hotel. No, there'll be a location. I'm sorry? Sign up sheets? 10 packs? No, this is not that. This is not that. Here's the dates. Here's the 3 days. Right, business casual type scenario. This is not, are we there at 5 a.m. sleeping in an airbag at the front door? No, this is not that. Whereas this is professional. It's professional. Let's find I'd love to be able to get a group rate for a hotel, right? I'd love to know, hey, we've got roughly 20-30 people coming, so that maybe Sandra and I can then call and get some type of a group discount from one hotel so that we could still at least be together as a unit. This is not going to be one of those, $1 million P that you're going to miss, and we're going to be here till 1 a.m. in the leadership meeting no. This is a real professional environment to learn more from some of the greats in the industry. October's the date. I don't have the exact dates yet. It's going to be called the symposium. I'd like to maybe do some type of initiatives around it. I think that's important. You know what I mean? Maybe a couple of things where I cover some of the flights and some of the hotels if X amount of production is done. Who knows? But be on the lookout for that. And like I said, I would love as many of you guys as possible to come. I genuinely would. I think it'll be a great experience for you to go and really just get refreshed on really what is the purity of this industry. What is the true concept of what this industry can do for you in your lifestyle? I admire Marianne, guys. A woman 36 years ago, guys, 36 years ago, this industry was not for women. They weren't respected. She was and a Latina woman at that, just so you guys know. Marianne is Latina, she's Nicaraguan. Doesn't speak a lick of Spanish though, just so you know. But she's Nicaraguan. But wonderful lady, honestly, wonderful lady. Her husband, just so you know, has been wheelchair ridden from an injury or an accident over 20 plus years. He used to run a property and casualty agency. So it's been her taking care of him, being basically the head of the marriage for all that time while building her FMO. or her IMO, I'm sorry. And she's done a great job at it. It's based in Jersey. She's a snowbird. So right now she's in Jersey, right? But then when it starts getting cold, she comes back down to Fort Myers where I live at. You know what I'm saying? And she drives. She won't take a plane because her husband can't get in one. So it's a drive. And she's the driver. You know what I mean? But trust me when I tell you, she sells you the dream. Where she lives, I mean, it's a resort where she lives here in Florida. It's a resort where you're just like, man, I vacation in places like you live. She will sell you the dream of what it is to build yourself a company, And the great thing about that is she knows, I know what the numbers are. You want to run your own FMO? 2 million a year of issue-placed business, 3 years in a row. You want to get an opportunity to build your own FMO? 2 million issue-placed business, 3 years running. 90% persistency. You do those numbers and I can put you in contact with her. You can have a dinner with her and have a conversation about what it is to run an FMO and have all those amazing conversations that I had a chance to have with her. And then you can take on a lot of those same stresses that I took on. But that's there. This is a true business. Anyhow, be ready on those dates, okay? Couple incentives that are gonna go out. Let me see if I can find it. And I'm gonna have Sandra send it on the group chat. Babe, I'm texting you right now, the PDF. Okay, we're gonna do a contest. And I'm gonna initiate the contest before I initiate the training on it. The contest starts today. And it's gonna go, we're in July right now, it's gonna go to the end of August. So you technically have roughly, a month and a half, okay? It's a very easy contest. Personal issue-placed business. You have from now to the end of August to submit the business, and then you have September to issue the business, get it approved and issued, okay? It's a 10,000, 20,000, 30,000 contest. 10,000 issue-placed business. 10,000 of issue-placed business will get you either a tailored suit, a spa treatment, or for the ladies, a Coach bag. Oh, can I? You're right. Let me do that. Man, telling you. Hold on, wait a minute. Let me put some, okay, how about? Come on, where you at? Escape, okay. Let me do this. Let me share screen. Could ladies get custom dress? Yes, correct. So the idea behind this contest is you get to pick. If you win, you get to pick what it is you want. So let me share that bad boy there. Can you guys see it? All right, there's the contest right there. So you have from now today until August 31st to submit it. You have all of, August, yes, you have all of September to issue your business. 10,000 issue-placed business, you get your choice. Either a custom tailored suit, male or female, okay, a spa treatment, male or female, or a purse. I can say male or female, but I think it's more female than anything. Don't get me wrong, you can get a Coach wallet if you want, guys. I just don't know if that motivates you. If it does, it does. All of that is up to a $500 value. So this is not going to be a cheap suit. We're talking about full tailored suits, nice stuff. 20,000 of issue-placed business. 20,000 issue-placed business. You're going to get a weekend getaway. Okay, we'll put you up for 4 days at any kind of a destination that you're looking for. Or you can do some red bottom shoes, male or female. Okay, or you can get yourself into an iWatch. I will not sponsor or support anything Android or Google related. I apologize. It is against my religion. I'm trying to promote your business to grow. I apologize. I'm just taking some light shots. It's okay though. Okay, this is about $1,000 value, guys. 20,000 issue-placed business, a weekend getaway, wherever. You want to take a 4-day trip to California, in the redwoods of California. You want to take a 4-day trip to Marco Island, Florida, go to a resort, do something nice, whatever. It's about $1,000 value. Some red bottom shoes. I know some of the ladies like some red bottoms. Maybe some of the gentlemen too. Maybe some iWatches, right?
Bloody shoes.
I'm sorry?
Bloody shoes.
Right. 30,000 of issue-placed business. And I'm gonna take you on a cruise. I'm just gonna take you on a 5-day cruise. Or if you want to invest back into your business, we'll get you one of the brand new iPads that you can use for your business. This is roughly a $1,500 value. Okay. So what does that mean? That means if you qualify for the cruise, but you gotta, you got 5 kids at home, a wife, 3 dogs that you want to bring with you, I'm gonna cover about $1,500 worth. The rest of it, you better cover with your issue place business. Okay. But I mean, look, whatever motivates you. If it's income, if it's cash that motivates you, if it's incentives like this that motivate you, this is me kind of throwing out a nugget to see if I can spark a little bit of fire with whomever it is, with whomever essentially it is. But it's personal issued business. You have now till the end of August to submit. You have all of September to issue the business. It needs to be timestamped to count. Does that make sense? Or does anybody have any questions about it? Good, good, good. All right. So who's motivated? Who's excited about some of this stuff? Yeah? Navala's excited. Caesar's excited. Okay. Elizabeth is excited. Good. Listen, I would love it. I would love every single person here knock out that 30,000 issue place business. We'll take over an entire cruise ship if we need to. We'll do a TKO cruise event, right? But yeah, that's what we have going on right now. So submit the business from now to August 31st. Business must be issued in place by September. Babe, did you get this picture? Good. Can you post it on the Voxer for flavor? And I'll tell you this, for the builders here, VPs or the builders, it's your job now to promote this and talk about this. You got to remind your teams about this. Some of the biggest contests that I had a chance to win was because my uplines kept on reminding me over and over and over and over about it. And make every single day count. If you're that person that you got a family that you're sacrificing with time and energy, tell them, hey, babe, listen, for the next month and a half, I'm going to put my head down. I'm going to go to work because that cruise right there, I haven't taken a vacation because of COVID in a year and a half. That cruise right there would be really nice. I'm going to get that for us. I'm going to get that for us. We're going to do that. You know what I mean? Aim for that 30K. Don't aim for 20. Aim for the 30. Aim for the 30. Go after something. Do something that you've never done before and you can really figure out what your flex capacity is. Flex your muscles. Some of you have more potential than you think you do. And some of you guys, I wish that you could see yourselves how I see you through my eyes. Honestly, I genuinely sometimes look at you and I'm like, bro, if you could see what I could see. Because I know where I was. I know where I was. I didn't have half the potential Ola has. I just didn't. I'm not saying it to boast. I didn't have half potential you did. I wasn't consistent when I was in my 20s in this industry. I just wasn't. This was a game to me. Making 75K, I thought I was living like a god. Really, it was nothing because I still wasn't married, didn't have kids. Like I just didn't know. You know what I mean? The potential is enormous. Juancito, I keep talking to you the same thing, bro. You got potential galore and you've got a why bigger than most people do. I hear about your autistic child. I hear the stories. I know you got a big why, man. You just got to put the head down and make it happen already. Time doesn't stop. Stop thinking you have the time. Genuinely, stop thinking that you have the time because I'm sure all of us can look back 10 years and go, man, that was a blink away. I remember blink 10 years ago. You know what I'm saying? Blink 10 years ago. Blink 10 years ago. You get what I'm saying? It happens that quick. But you got to just make a decision to say, I'm going to max out today. I'm going to max out tomorrow. I'm going to max out the next day. Because it's real easy to say, I'll just do it tomorrow. And then you blink and tomorrow, a lot of tomorrows have passed. A lot of y'all. You know what I mean? Caesar, you got potential galore. You know it. You know, now it's just a matter of you flexing. Really, really, truly, genuinely flexing. The thing about Caesar is he just got natural talent. So sometimes Caesar could rely on natural talent. Natural talent is good and bad. And then you know why I say that? Because I'm sometimes victim to that too. I have natural talent in this industry because I've been doing it so long. So sometimes I can afford to have lazy habits because of my natural talent will hide it. It'll hide it. It really will. I know that if I actually put my head down and I go on a 90-day run, like I went on a 90-day run a couple years ago, oh my God. Oh, with this type of contract, this type of environment. But sometimes my own lazy habits get the best of me. And I got to remind myself, I got to get out of those habits and flex. Same thing applies to every single last one of you guys. Every last one of you guys. Jimmy, I want to see you more, bro. I haven't seen you in a hot minute, man. You got so much potential. You got such a big why to prove. And I see all your stories. I see how proud you are of your little brother. Bro, build a path that your brother can say, I want to walk down that path because my big brother did that. Build something that your little brother's gonna go, it's easier for me because of the heartache of what my big brother did. I'm gonna go, I'm taking it, I'm going in, I'm going in. Build something that all the haters and all the doubters and everybody from the past can go, damn, they proved us wrong. Because all they're trying to do right now, guys, honestly, they're saying, they're gonna prove us right. They're gonna validate why they should have never done anything. Don't prove them. Something that someone said to me, I won't tell you who said it, one of the top leaders in the company. They said it to me and I took it to heart. They said, Tony, we know you're gonna succeed wherever you go. This is who you are. We know it. But it was an indirect message. You know what the message was? Tony, you'll make it, but nobody else that goes with you will. That was the message. We know you'll do it because you know how to do it, but no one else you go with you will. So I have a chip on my shoulder to prove to everybody that I could take some of the people that no one ever thought could make it and I could blow them up. I could take them and just light a fire under them, let them do things that they never thought they could do. That's the chip on my shoulder. It's not about my success. It's about yours. I could have built an FMO and made it similar to PHP, start people off at 30, 40, 50% contracts. And I probably could have recruited half of you guys into that world anyhow, but I didn't want to. I'd rather it be an independent contract. I'd rather it be a contract that starts you off high. I'd rather you be fully vested direct to carrier. I'd rather not just try to push one product. I'd rather say to you, hey, these other strategies like premium financing, like infinite banking, these are accessible and you guys have the brain capacity to be in that space. You know, they say keep it simple, stupid. Yes, but you know what? Sometimes in finances, you need to have some smarts and everybody here has got the smarts to be able to provide these solutions. These initiatives, these incentives, guys, they motivate you. Hopefully, I'm glad. I want them to. But I want you guys to live a lifestyle where you could do this stuff on the regular, not because of a contest, but just because it's the kind of business and capacity that I run. And this business lets you do it. It genuinely lets you do it. Does that make sense?
Sure.
Anybody on TV land? See if there's anything here. Stop share. Good, good, good. Let me see who's on TV land as well too. Hold up here. Let me see here. Gerzo, bro, you got talent galore. Gerzo was hitting me up for like a year and a half before I opened up TKO, just so you know. He was hitting me up left and right, left and right, left and right, telling me about the books he was reading, about the this he was doing, about the that he was doing. He's got talent galore. He's got talent galore. He's ready to go. Rubiel, look, Rubiel's gonna make more money than any other Colombian cartel. I know it. I know for a fact he will. He's gonna have carretas full of money hidden in little holes somewhere. And this was my term sales. This is my IUL sales. This is my premium financing sales. I'm telling you, he's got that kind of talent. Some of the prior MDs, I heard stories about the text messages that they were sending you guys. And I got mad for you. I got upset for you that people would actually come at you and disrespect you in those ways. And I literally, the chip on my shoulder is, bro, I'm gonna prove every single one of those MFers wrong. Every one of them, I'm gonna prove them wrong. Every one of them. But you guys gotta believe in yourself more than I believe in you. And I believe in you guys a lot. Trust me, I do. I'm banking my livelihood on this company. Genuinely. Sanchez doesn't work another job. We do the sole income that provides for 4 kids, 2 dogs, our house, her and I, is TKO. Is you guys. It's you guys. We put all our chips in. Boom, there it is. Trust me, I believe in every one of y'all. Every single last one of y'all. Who else do I got on here right now? Let me see here. Marlene, you got so much passion, girl. I hear your stories left and right. You got a pretty big why as well, too. It's just a matter of not flexing the muscles. Jamal, Tennessee, same exact thing, bro. Same exact thing. Irv, you've been with me now for a little over 2 years, man. You know what I'm saying? I'm ready to see Irv flex his muscles and tell wifey, hey, baby, I just made 10 grand. We going out. We're going to South Carolina again. Let's do it. You know what I mean? Everybody here's got that potential, guys. Genuinely, you guys do. And that's just from me to you guys to the heart. And I just want to throw the incentive out because I would love to be able to treat you guys with those types of things. And full disclosure as well, too, so you know, the VPs have committed to covering half of this cost as well. This isn't just me. So if your VP is public and you happen to be that, she's committed to taking half that cost and contributing to that as well too. If your VP is Rubiel, whoever your VP is, they've committed to that type of, to saying, hey, I'm going to cover half that incentive as well too. Let's get a lot of people qualified for this bad boy. Okay. All right, let's finish this bad boy off here. Let's talk about mortgage protection and let's talk about final expense. I'm going to go through a dialogue of what that meeting is like, because we can all listen to scripts on how to schedule the meetings. We can all listen to trainings on how the product works, but what the heck does it look like, you know, when you're inside the meeting? What does it look like when you close that door and you're inside the person's house? There is a psychology to that too. And there's certain things that I always want to make sure that I do in meetings that help increase the sale. 3 things you're selling in a meeting. I want you to know this: the company, the product, and yourself. Which of those 3 you think is the most important? You. So for those people that think, oh, I need to know the ins and outs of the product, no, it's not. That's not what's going to make the sale. Is it good too? Yes. So yes, I'm not telling you that you shouldn't get educated on the product. You should, but don't feel like, oh, I don't know every nook and cranny of it. But you do need to understand emotional intelligence. Whatever books you guys can get your hands on with regards to emotional intelligence, it's massively beneficial for you guys. Emotional intelligence is 100%. If I had to tell you one skill set to sharpen, is emotional intelligence. You could be dumber than a bag of rocks at numbers. You could be dumber than a bag of rocks at presenting products, at recruiting. But if you've got enough emotional intelligence to be able to read people's body language and understand kind of what their body is saying, oh, it's such a big thing for you, emotional intelligence. EI. Read as many books as you can on that. So a couple things that I do with the psychology of sales. When I go into a meeting, and we're going to talk about face-to-face, and I'll talk virtual as well. If it's face-to-face, I always wipe my feet at the door, and I make sure they see me wipe my feet at the door before I come into the house. Psychologically, that shows that you have respect for their home. Number 1. Number 2, I'm going to request that the meeting be in a location where I can have a table and I can sit down and actually converse and conduct business. Why do I want that? Because that's 90% of the times where they talk about their bills. You know how they say psychologically you should not work in your bedroom or on your bed because it's hard for you to sleep? It's the same. It's why is because it's true. If all you're doing is working on your bed, if you're working from bed, when you lay down and you rest, your body, your psyche recognizes that's the same location that you're working, so you have a hard time sleeping. That's why they recommend you work somewhere else from where you sleep, right? Same concept. Where do most people talk about bills, talk about important things? The dinner table. So you want to go to the dinner table, have that, because it changes their psyche. Now, don't get me wrong. Sometimes you can't avoid it. We had a meeting yesterday, where we had to do it in the living room because we were limited. So I'm not telling you for the black and white people, this is not black and white. That's the thing about emotional intelligence. It's not black and white. That's a whole lot of gray. You got to understand the tonalities of gray. You know what I mean? It's very much a roll with the punches type of mentality. But you want to try as much as you can to create as much of the scenario as possible. I try to go at the dinner table. I always request to go to the restroom first before I begin. You know why? I want to give them a couple minutes to kind of breathe without me being there. Sometimes people get worried. Sometimes people feel like you're judging them. You're judging their home. They just let you into their home. That's their sacred castle. Whether that castle is up to the standards of what you live in or not, they still let you into their very vulnerable state. So go to the restroom. You know what I mean? And you yourself even. I'll tell you something that I tend to do when I go to the restroom. I say a quick prayer before I go back in. It's just my habits. I just say a quick prayer. I try to make sure that I be selfless in my decisions that I make and try to put them in a better position before I leave. But I want to give them a couple of minutes to just breathe. If they offer you a drink, you take it. You say yes. Don't be that person. No, I'm good. Psychologically, they want to know you feel comfortable. And if they know you feel comfortable, they feel comfortable. They've just exposed themselves again to you. They've exposed their house to you for you to judge. Is it clean? Is it not clean? Is it up to standard? Does it have the brands that the people think of financial guys like us, and they think that sometimes we might be a little bit prissy and bougie and we only want the fancy. I'm not that guy. I'll tell you that for sure. I'm so laid back when it comes to that world. I could care less about name brands. You know what I mean? But that's how they think. That's how they think we are. We've got to show them that we're not like that. We've got to show them that we're not like this. So if they offer you water, if they offer you a drink, accept it. If you're, certain diets, can't do certain things, accept water. It's okay. Even if you just take one sip of it. You know what I mean? If you're that person, no, I only like bottled water. Listen, take a sip of the tap water, man. Shut your mouth. Take a sip of the tap water. One sip, it ain't gonna kill you. You'll be all right. Right? Friday nights, you're sucking on hookah, you're drinking vodka. And don't tell me that you're all about, like, take a sip of water. It's okay. It's okay. You know what I mean? But there's a psychology behind that. Okay. Ask them how much time you have to chat. I ask them, I tell them, I go, listen, I've got us down for about 45 minutes to an hour to talk. Is that good? Or do we need to have a hard stop? If they're only giving you 10, 20 minutes, you're not going to make the sale in 10, 20 minutes. But you can uncover needs in 10, 20 minutes and set up another meeting. You can definitely do that. But if they give you the 45 minutes to chat, you'll go for it. I promise you, it'll work. You'll get the time that you need. Ask more questions than making statements. It's going to take you a long way too. Your first meeting is a fact finder, guys. Learn. Just want to learn about you. What motivates you? What moves you? Why are you looking for coverage? What are you trying to cover? I make my sales on dime analysis. Some of us were taught to lean into the IUL as the one-stop shop for everything. It's not. It's not. I want to make my sale. I want to make my sale an emotional sale because it's easier to make it. It's much more sticky when you make an emotional sale. So I sell on dime analysis. That's where I make my sales. I sell on the peace of mind of having those specific things covered. That's big for me. So when I'm going into my first meeting, it's a fact finder. I just want to learn about you, Mr. Client. You'd be amazed at the psychology that there is in someone telling you their story. We live in a world where everybody's using this and very few people use this. So no one feels important any longer. No one feels special any longer. You know what I'm saying? For my couples, you know how powerful it is at the end of the day just to have a debrief? Just a debrief, how was your day? Talk to me. And just let them word vomit for a little while. I'm serious. It's true. You know, it took a little while for Sandra to understand it, but there was times in the beginning when I told Sandra, Sandra, sometimes I have such a crazy day. I just need to unload it. I don't need you to be the problem solver. I just need your face to say that you're concerned and listening, even though you might not be. Lie to me, I don't care. But I just need to unload for a little bit. You know what I mean? Because in the beginning, I would unload on her. And she would take it in, like internalize it. And I'm like, no, it's not for you. It's not you. It's not. I just been smiling all day long. Some of these aces, I want to choke the life out of them, man. And I just been ha. I got to unload somewhere. She's like, oh, so you don't need me to fix it? No, I just need you to just hear me out for a little bit. Put a fake smile on. I don't care if you got a Bluetooth in your ear and I don't see it because you're listening to music and I'm okay with that. But people want to be heard. People want to be heard. So when you go in that first meeting, it's all about fact finding. Have what I call an approach language. Approach is your elevator pitch. Do you have one? And if you don't have one, you need to get one. And if you do have one, can you say it on command? That's how you know you have one. You have to have one. It needs to humanize you, number one. It needs to not be so detailed, number two. And it needs to be done in less than 3 minutes. It's an elevator pitch. You know why they call it an elevator pitch? Anybody know why? Short. Between rides, right? Oh, you're on the 5th floor. You got from 1st to 5th floor to kind of talk. You got a short, quick, boom, right?
30 seconds.
Some people call it 30-second elevator pitch. It's never 30 seconds. It's not. But try to stay, minute and a half, 2 minutes. Don't feel like you got to word vomit. You got to give them a 50-foot bird's eye view. How many of you guys have heard my intro? How many of you guys hear me say let me give you a 50-foot bird's eye view of what I do. I say that all the time. Here's my elevator pitch. I've been using it, oh my God, 12 years maybe, something like that. I go, look, I want to give you my 50-foot bird's eye view of what it is I do. And based on that, you tell me where you want to lead the conversation. Fair enough? Yes. I do 2 things. One, I specialize in protecting your biggest assets. Most people tell me that their biggest asset is their ability to pay the bills, their income. You see how I'm nodding my head? There's a psychology to that, because if I nod my head, every one of y'all do too. You see what I'm saying? If I don't nod my head, you don't do it. I can control how you emotionally react based on how I react. It's like a mirror effect. If I lean back, they lean back. If I lean forward, they lean forward. If I nod, they nod. If I go no, they go no. I promise you. It's the way it works. Let me get back to my approach. I want to give you a 50-foot bird's eye view of what it is I do. I specialize in 2 areas. The first area I specialize in is protecting your biggest asset. Most people agree with me that their biggest asset is their ability to pay the bills. Would you agree, Mr. Client? Yes. I want to make sure that against any exposure, that asset is protected. We're talking insurance now. If you die, you need life insurance to protect your family. If you become disabled, you need insurance to replace your income. And if you need a nurse to take care of you, you need insurance to pay that nurse and replace your income. Now, if you're a believer of insurance and you have already, great. I love working with people who have insurance. Let's talk about that and make sure you're getting the biggest bang for your buck. That's what I do on one end. The second side of what I do, the second thing I specialize in, okay, that's a sexier conversation. That's retirement planning. I want to know about what the goal is. At what age do you want to retire? What do you want that to look like? But more importantly, I want to know what you're currently doing today to get there. Let's reverse engineer it and make sure you're getting there the most effective way, because there's two topics that very few people talk about when it comes to retirement planning. Number one, how do I avoid Uncle Sam tapping into my nest egg? How do I grow money tax free? And number two, how do I make sure I can never outlive my money when I hit retirement? Because nobody wants to retire and then have to go back to work because they ran out of money. So, Mr. Client, based on those two things that we just talked about, which of the two interests you more to talk about today? That's my pitch. If you time it, it's probably a minute and a half. But that's my pitch. A lot of what I'm doing is asking questions because I need them engaged. Okay? A lot of it is that. Facts tell and stories will sell. So you want their story. I got to ask questions, and he who leads questions leads the conversation. If I ask questions, I know they're engaged and they're paying attention. If I'm just talk, I'm going to lose them. They're mentally gone. Physically, they're there, and they might be nodding, but they're gone. But if you ask questions, it forces them to engage with you. So imagine, I just gave that pitch. What's the next thing they're going to say? Right? Honestly, how did I end it? I ended it with a question. The question is, which one of these two topics you want to talk about today? Right? And now, if it's a lead, they're going to typically say, what? Well, I want to talk insurance protection. Okay, perfect. When you inquired about this lead, you mentioned mortgage insurance. So talk to me. Tell me your story. What leads you to feel a need for insurance? And just listen. Listen. You're going to respond based on how they talk, what they say. They might tell you, well, we just got this house. We're very excited about it. My wife and I, it's our first home. I just want to make sure that it's protected in the event that I pass away. Okay, I understand. Do you mind if I ask you some questions? Yes, of course. How much is the mortgage? $300,000. Okay. Who works? Are you the primary breadwinner or do both of you work? No, we both work. Oh, cool. What do you do for a living? I do this. Okay. How much income are you earning? I'm earning this much. I'm earning that much. Okay. Talk to me about your kids. Tell me about your children. There is absolutely nothing better than asking a parent, tell me about your kids. You want to build rapport with them? Ask them that question. Tell me about your kids. You asked me to tell you about my kids. Bro, I'm telling you about Siggy and Nikki with a chip on my shoulder. You want to know about what? Bam, go. You want to compete? You know what I mean? Their parents want to tell you about their kids. Listen to them. Listen to them. I got a badass 19-year-old right now, man. Responsible as all hell, making pretty good income for his first time ever. He's got a pretty decent girlfriend. Super structured, likes to cook. Cooked salmon for us not that long ago. Remember that? Damn, I can't wait to go back. He needs to cook me some more salmon. You know what I mean? I got a 14 that knows more about sports than anybody in this room. Guaranteed. Will out-eat anybody here in burritos. You know what I'm saying? Parents want to talk about their kids. No lie. I got a daughter that's a replica of me, 10 years old. I guarantee you she's a little mini Tony. In personality, in her joke, everything. She's little me. Little me. I got a son that's got a heart of gold. Super innocent. Super innocent. Great athlete. Natural talent. I'm talking about like parkour type kid. Literally. So much talent. Parents want to do that. You see how I just did it? I just took 2 minutes of training just to tell you about my kids. When you do that, tell me about your kids. You'll see them, and you're changing their psyche. You're changing that. You know what I'm saying? Right? Then I hit them with the question. They might have came here talking about mortgage insurance, right? It's a mortgage insurance conversation. All right, I'm going to shift it into a full financial analysis. Here's what I do. I go, listen, let me ask you a question for a moment. I'm going to get serious for a moment. I want you to forget about numbers. Forget about numbers. I want you to forget about how much debt you have, how much income you make. I want you to forget about I want you to forget about numbers. I want you to tell me the story. And here's what I mean. I'm gonna ask you a question. I just want you to tell me what's in your heart. If something happened to you this afternoon and you're no longer here, knock on wood, you're no longer here, but I gotta come by later on this evening and I gotta knock on this door and I gotta talk to your wife and tell your wife that you are no longer here. Tell me what story I'm telling her you made sure that you left behind. And before you give me the answer, let me tell you what my clients tell me. You know what my clients tell me? They tell me, if you're knocking on my door tonight and you got to talk to my wife, okay, I want you to tell her that the house is paid completely. I want you to tell her that my paycheck, that income that I bring into the household, it's being replaced for 5 to 10 years. I want you to tell her that all the debt that we have is completely paid off, no longer, that's all gone. I want you to tell her that my 2 children that are at home, their college is covered and she ain't gotta worry about it no more. And I also want you to tell her to call my mom up and leave my mom with $50,000 and my brother with something as well. That's what my clients tell me. So Mr. Client, do me a favor, tell me something. If something happened to you today, this afternoon, and I gotta come back tonight on July 17th, 2021, what exactly am I gonna tell your wife, Jeanette, or your wife, Lisa? And I use her name. What exactly am I gonna tell her? And then I shut up. Let them tell me the story. Stories sell. Right? Facts tell. What are the facts? Well, I got a mortgage, $300,000. I make $50,000 in salary. I got 2 children I love to take to Stanford. No, that's not gonna sell. Facts? No, but the story will. I want the story. You know what 90% of the clients do when I say that question? This is their first thing they do. Ready? They do this. Whew, that's a tough question. And then they start thinking, I would want to do everything. Honestly, I want to do everything. Okay, well, let's talk about that. Let's talk about it. If you notice the question, the example I just gave is a dime analysis. I just didn't do dime. That's too technical. There's no emotion behind it. Right? I want to pay off all the debts. Great. I do my fact finder. I fill out my F&A through a dime analysis. Because I say, okay, well, let's talk about it. You say you want to pay off your debts. Talk to me about your debts. And I take out the sheet. Debts. I got this much debt and this much debt. This credit card and this auto loan. And what are you making payments on? And do you have any collections? Credit repair opportunity. Right? Okay, boom, boom, boom. There's my debts. Next, income. What do you do for a living? Oh, I do this for a living. How much do you make? How long have you been making it? Right? Do you do anything else on the side? Does wife work? And I'm filling out the occupation side of income. How many years of income do you want to replace? You want to do 5 years or do you want to do until your youngest is 18? Look how I did it. I give them 2 choices. Do you want to do 5 years of income or do you want to do until your youngest is 18? Simple. Boom, boom, boom. Go. Right? You said you wanted to pay off your mortgage. Tell me about this lovely house. How much would it be to pay off this house right now? Boom, boom, boom. Do you have any other assets that we could help use towards this formula as well? You have 401ks, IRAs. So now I'm filling out the asset section of the F&A. Note, look what I just did in the dime analysis. I filled out liabilities through the debt conversation. I filled out occupation questions through the income conversation. Now I fill out the asset section based on the mortgage. Education now lets me talk about kids, their aims, their dates of birth, how many kids. Do you want more kids in the future? Tell me about your wife. What's her name? So now I'm filling out demographic of people, right? And then legacy is phenomenal for referrals. Who outside of your family would you like to leave something behind for? If any at all. Is it a church group, a charity group? Is it a sister, a brother, a mom, a dad? Right? I mean, would you? Right? I guarantee you if I ask that question to Sandra, she tells me, well, I would love to leave something behind for my sister and my brother. Tell me about your sister. What does she do? Well, she works for a non-for-profit organization. She also runs a credit repair company. By the way, Natalia is her sister. Right? What was my brother doing? My brother, he's an AC repairman, but he's got 2 beautiful children. I'd love to leave something behind for them. Well, where do they live? They live in Hialeah. How old are they? They're da-da-da-da and da-da-da. I'd love an introduction. Referrals. Boom, boom, boom. I'd like to leave something behind for my mom and my dad because they're retired in Colombia right now, but they're on fixed income. I'd like to leave something for them. Really? Talk to me about them. And now I'm branching. Through legacy, I'm branching. But once I figured out the facts of the story, I now add it up. Mr. Client, it shows here that the amount of insurance that you need is $763,000. Notice, I like to personalize the amount. I don't want 500,000. You know why? Because next week somebody's knocking on their door with a $500,000 illustration in the back pocket. I want a number that they can personalize. They can own that number. That's my number. That's my number. And somebody took a lot of time and energy to figure out that number. They didn't just randomly come up with a number. They gave me my number. Or on the contrary, I gave them that number. They just did the math. So there it is, boom, right? And then here's what I ask them. How does that number feel to you? That's such a powerful question, guys. The feel, felt, found questions. Oh my, you want to talk about emotional intelligence? You need to know how that number feels to them. How you know if you don't ask? They might be scared. That seems kind of high. Or, no, that's okay. I need to know. I need to check your temperature on that. How's that number feel? No, it feels pretty good. Or, I think it's going to be pretty costly. Now you know you're fighting that doubt in their head of budget. I need the emotional intelligence behind it. Well, Mr. Klein, are you aware that there's 3 or 4 different types of insurances that could help meet this insurance need, from very cost effective to very valuable? Let me take a couple minutes to share that with you. Right? What do you think I'm doing next? Anybody know? Yeah, the 4 types of insurance presentation. Right? I'll explain how term works. Here's how term insurance works. When I'm presenting the 4 types of insurance, I'm personalizing it to them, just so you know as well. So for example, if I'm talking to Jimmy, right? I'm gonna say, Jimmy, how old are you? Jimmy, how old are you, bud?
28.
28, okay. So mind you, I have a yellow legal pad, right? Why yellow? Anybody who's visually impaired. Visually impaired people see better on yellow paper than they do white paper. Black Sharpie, thick black lines. Always have that ready, okay? But I take that out and I begin my presentation. Now, how do I do it? Right, simple. I'll say, Jimmy, you're 28, right? Okay, so I have one product. It's called term life insurance. We're gonna call that the Toyota Camry. And if you're 28, it's gonna protect you from 30 years. So you're gonna be protected from 28 to 58. I personalized it to you. This presentation is catered to you now. I didn't do 30 to 60, 40 to 70. No, I did it to a 28-year-old. 28 to 58. For 30 years of your life, you're covered. Okay? For 30 years of your life, I just want you to know you're covered. 500,000 as an example would probably run you about 30, 40 bucks a month. As long as you make the payments every single month, you're covered from 28 till when? I asked that question that way. I want to make sure they're internalizing it. It's a repetition, right? Now, you know what happens at 59, Jimmy? You have no more insurance. What else am I doing? I'm using their first name basis. We're now friends. I'm personalizing this whole presentation for you. Jimmy, at 59, you have no more insurance, brother. At 59 years of age, you got to go find more insurance and you're not going to get back any of the money that you put in. So what's the benefit to this plan? Bro, it was super cost effective. Jimmy, would you agree that 30, 40 bucks a month is probably something you blow every single month unexpectedly, right?
Yeah.
So 30, 40 bucks a month to give you peace of mind for 30 years, right? Yeah. You know what I just did right there? I'm getting him in yes mentality. I'm asking the yes questions. I want him to get used to yes, 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 yes. Because when I ask for the sale, you know what's gonna happen? Yes. Ah, hey, that was easy. If you're asking for a yes to get the sale, but you haven't gotten a couple yeses prior till, you're shooting yourself in the foot. So I'm getting him in yes mentality. Yes, that would make sense. Yes, that would benefit. But here's the negative. After 30 years, there's nothing left. You have anybody in your family that's lived past 59, Jimmy? Yeah. So now what is he thinking? Holy crap. What if I live that long? Indirectly, he's already thinking that because I planted that bug into his head. I go, Jimmy, we have another type of insurance. This next one is called the Lexus. Okay, the first one, it'll protect your mortgage. But after 30 years, there's nothing left, right? This second one is called the Lexus. Now this one will protect you till 100. So Jimmy, you're 28. 28 to 100 is, oh my God, that's 72 years of your life. So instead of 30 years, I'm giving you 72 years. That's a longer period of time, right, Jimmy? Let me ask you something, Jimmy. Is there a higher probability of something happening to you between 28 and 100 versus 28 to 58? Of course there is. Of course there is. So because we're protecting a longer period of time, it's going to cost a little bit more money. This is called the Lexus because it has a little bit more features than the Camry. The first feature, it lasts until 100. You got to pay a little bit more. This will run you about 100, 150 bucks a month. Okay? But I'm protecting a longer period of your life. But here's another pretty cool feature. 20 years from now, you're 28. That means at 48, right? You have a 30-year mortgage, right? So at 48, when you have 10 years left of that mortgage, you could cancel this insurance and get a full refund of all the money you ever paid in. You know what you could do with that money? You could pay off the remaining balance of your mortgage. Now you just turned your 30-year mortgage into a 20-year mortgage. I give you that ability at 20 years, but also on the 25th year. So you can do that twice. So at 48, you can do it. And at 53, you can also do it and pay off that mortgage faster if you wanted to. You would be canceling the insurance if you did that, but maybe you don't mind. Maybe you want to leave the house as the asset, not the insurance. That's okay. If you don't cancel it and you keep making the payment, you'll have this insurance until age 100. Jimmy, do you know what type of people keep their insurance till age 100? The wealth, right? But you say that because you're from the industry. Middle America doesn't say that. Middle America says why, right? Why? I'll tell you why. Because they want to make sure in their 80s and 90s, if they need a nurse to take care of them, that they could tap into the money to pay for the nurse so that their kids don't have to become their nurses. Because these insurances that I explained to you have this thing called living benefits, which means you can tap into the money while you're alive. Both the Camry and the Lexus do this. Right? Jimmy, let me ask you a question. If you and I are in a car lot right now, and the only thing I have to show you is a Camry and a Lexus, which of the two, based on your current budget today, can you afford and are more interested in? What I just did right there, guys, that's a trial close. I want to measure him out. Because if he says to me, after that presentation I just gave on Lexus, that he's still interested in a Camry, why on earth am I going to present an IUL? Why am I going to talk about a Ferrari to somebody who can't even see past the Lexus? No point. There's no point. There's absolutely no point. So you know what's the last thing I'm going to do? I'm not going to bring the Lexus. I'm not going to bring the Ferrari out. I'm not. But if he says to me, I really like that Lexus. Okay. I got one more that I want to talk to you about. This is the, Jimmy, what's your favorite car, bro? I mean, if money wasn't a problem and you could put yourself into any car, what car would you be driving, Jimmy?
Maserati.
A Maserati? Okay, this is the Maserati. You see how I personalized it? Right? In a generic training, I call it the Ferrari, but if I'm in a real meeting, what is it? It's a Ferrari. Look, I just did a meeting on a guy who told me if he could drive any car that he wanted, it'd be a Denali truck. Some people don't get motivated by Ferraris. They can care less. They actually look down on people with that. But if they can see themselves in a Chevy Denali, on a lift, on 26, you know what I'm saying? That's different. You know, look, Irv already likes it. Irv's like, sell it to me. Sell it to me when you get back here. But you see how I'm personalizing every step of the way as much as I can? As much as I can. There's an emotional intelligence to that. You got to really, practice that. I didn't pick this up overnight. This is part of the 100 mistakes that I had to make. This is part of that 100 mistakes to make six figures that I had to make to be able to do it at the level that I'm at. So I say that to you because I don't want you to go practice and be like, man, I suck, man. I can't do this. Tony's way better than me. I'm supposed to be way better than you right now. I'm not saying it to boast. I'm saying I got 16 years head start. I'm supposed to be. But I'm the future of what you can look towards becoming. And you could become me a lot faster. A heck of a lot faster than I did it. You can. So look forward to that. Don't look down on that. Don't compare. Compare yourself to who you were a year ago. Don't compare yourself to the person training you or mentoring you. Okay? But if he says to me, no, listen, I like the Lexus. Okay, great. I got another product I want to talk to you about then. Okay? This is that Maserati you talk about. Now, the Maserati, I just want you to know, this is an asset, not an expense. These other two products that I just talked to you about, the best that you're going to get back is the money you yourself put in, which is the Lexus. So that's not really an asset. You're just getting back your money. It's like putting money in a savings account, but having insurance ahead of time. This is an asset. This means you're going to make more money than what you put in, but under two conditions. Number one, you pay yourself first. And number two, you're not a short-term thinker. If you could think like the wealth does with their last name, not their first name, this works for you. This is a long-term set it and forget it type of environment. This will cost you about $250, $350 a month. But you'll have insurance that'll last you forever, guaranteed, till 121 years of age. Jimmy, can you live to 121? Right? Most people go, I hope not. That's what most people answer. That's okay. I just want you to know, if you do, I got you covered. I don't have you covered if you go to 122. I'm sorry. At 122, you got to find another agent, man. I mean, you're dust by then, but I can get you to 121, right? It'll be covered by then. Now, here's what happens. The money you're putting in, part of it pays the insurance premiums that are protected till 120 what? 21, pretty good. Now, the other part sits in an investment account. Let me tell you about this investment account. Number one, it's creditor safe. You can't be sued against it. Number two, it's going to earn about 6% interest. Number three, you can't lose money because of the market. And number four, are you ready for this one? It's tax-free. You're going to pay taxes on this money. Jimmy, you told me earlier that you work for, Jimmy, what do you do? What do you do for a living? You drive trucks. Okay. Now, when they pay you, do they pay you W-2? They take out taxes before you get the money, right? You ever looked at that pay stub to see how much they take out every 2 weeks? Never? Why not?
Yeah.
Exactly. Exactly. Why look at something depressing? Right? When they tell me no, you know what I say? I go this, if you don't mind sharing. If you don't mind sharing, give me a fake number. Jimmy, how much do you get paid per hour? 12 an hour? And you work full time? Okay. So 12 an hour, 40 hours a week, and you get paid twice a week? Okay, so roughly, you're making $960 every 2 weeks. How much do your paychecks look like? Mm-hmm. 6, 7? Let's go 650. That means $310 every 2 weeks is taken out in taxes. Is that right? That means once a month, that means $620 is taken out once a month, right? Jimmy, what would you do with an extra $620 a month right now?
What?
Right? At the end of the day, would an extra $620 do you good? It could be a car payment. It could be more savings. It could be maybe a better house or a better apartment, right? At the end of the day, are you happy Uncle Sam is taking $620 from your paycheck every month? So what if I can make sure that your retirement is tax-free and all the money you're earning is completely utterly tax-free? You get to keep every single penny of it. That's what this does. That's what this does. 2 limitations to this plan. 1, not short-term. If you do something like this, you got to give me a 10-year commitment. And second, you still have to medically qualify. This is an elite program. You've got to make sure the insurance company has to approve you getting in here. So before I go any further, Miss, out of the 3 that I'm now sharing with you, which one are you more interested in? Alexis? Okay. See, that's okay. That's okay because I just did a $732,000 amount of insurance that he needs. Let me tell you, Alexis at $732,000 face value, you're getting $200, $300 a month in premium. Still a decent case. But I'm letting him steer the ship. I never want my client to be like, oh, you forced this into me. No. Which one are you more interested in? I just educated you on the pros and cons to each of them. Which one do you feel that brings you more value? Bam. Make sense? That's my process. Literally, that's my process for mortgage protection leads. So these $2 age leads, that's how you do it. If it's a virtual meeting, a couple things you want to make sure. Your background needs to be professional. Okay? Put your camera up against a wall. Okay? Put it up against a wall. Decorate that background. Put some pictures up, family pictures, plaques, trophies, whatever. Okay? Have a decent light in front of you so that the light aims towards you. That way you don't look like you're in a shadow. Okay? Put on a button down if you need to, and boxers down at the bottom. I don't care. Underwear, I don't care. But, you know?
Don't stand up.
Don't stand up. Don't stand up. That's right. Invest into yourself a little bit and get yourself a 1080p camera. Okay? One thing that I would tell you is this. Have a camera on a tripod, not on top of your desk. You know why? Watch this. Look at that screen there. It's vibrating? That's not good in a meeting. And that's going to happen because you're using your desk to talk, to write, to take notes, to click on the computer. I have my camera on a tripod off my desk so that it's still crystal clear. I got to make that environment virtual as professional as I possibly can. People around me know when I'm in a meeting and they've got to try to keep it down. You're selling virtual, guys. You gotta show them that you're legit. Too legit, too quick. Hey, hey. No, anyways. But you get what I'm saying? Have a digital version of your license ready to present if you need to. In case you need to give them, yeah, are you really licensed agent? Well, look, here's my license number. Have the website, the Department of Financial Services website ready so you can log in and show them if you need to. Again, you're working in leads. This wasn't referred, you're working in leads. Referrals are very different. You don't need to show that because there's somebody that's vouching for you. But in the lead, there's nobody vouching for you. You have to have that kind of credibility. You have to have that kind of credibility. I still ask the question, right? I got us down for 45 minutes to an hour. Is that going to be enough? That's still important in a virtual meeting, no matter what. My first meeting is still going to be fact finding. For mortgage protections, fact finding. First meeting. Unless I see that person's emotional intelligence, you can see that there's an urgency in them to take action right away, and all they really want is a term policy, I'm probably going to go into a second meeting. Because if you want a Lexus, you know what I want to do? I want to put together some of those numbers for you. All right, when can we move back up sometime tomorrow? What time works best for you? Because I want to look at my carriers. I'm a broker. I represent over 50 companies in the market space. I want to see which one's going to give you the biggest bang for your buck. What time can we meet tomorrow so I can put together some numbers? Even though you might already know exactly which company. 90% of the time, I already know within the fact finder what company I'm bringing to the table. But I still prefer to do a second meeting because there's a psychology behind that. People feel good when they hear someone say, let me get back to you. I'm going to talk to my team. I'm going to shop out the market, see which is the best option for you. Oh, wow, I got somebody checking for me. Right? Yeah. You know, they call their brother up. Hey, you know that State Farm insurance agent you try to push my way? Tell him to piss off. I got somebody checking for me. Mm-hmm. It's a psychology, guys. There's a psychology behind that. When you come back in the next meeting, in your second meeting, you know what you do? The first thing you do in your second meeting, you review the first meeting. I just want to make sure we're still on the same page. In our last conversation, you told me this. Is this all true still? Yes, it is. And this is, yes, it's perfect. And you're still the Lexus? Yes. Okay, great. So I'm going to show you some numbers today. This is all conceptual. As long as you understand how it works, we can scale these numbers up. We can scale these numbers down. I do that every time. As long as you conceptually understand how this works, we can scale these numbers up. We can scale these numbers down. Is that okay with you? Yes, it is. No problem. Perfect. And then I start showing my presentation. The person's already sold by then, before illustration. Some of you guys make the mistake in thinking that you're going to make the sexy part where they're going to go, oh, is looking at an illustration. Let me give you a tip. We are the only crazy ass people in this world that get excited over looking at a piece of paper with a bunch of numbers. It's only us. They could care less. But if you hit them with their emotional intelligence, you hit them with that, you'll make the sale. You know, it's one of the trial closing questions that I ask. I go, look, it shows here you need 723,000, whatever that number is. It shows here that your budget is about 150. Mr. Client, if I can get you an insurance policy and stay within that budget and get you the 720, scale of 1 to 10, what's the probability that you'll do business with me? If they say 10, I'm in. If they tell me 4, they were never in to begin with. But I'm going to trial close you right then and there. I am. And if I can't fit a full GUL or a full IUL with their budget, then I'm going to make sure that I get them as much that I can. And I'm going to offset with a term policy. I'll get them 200,000 of GUL and then 500,000 of term. Right? And here's how I closed my first meeting to go into my second meeting. Because I make sure I get a budget in the first meeting. Right? Like in your scenario, you just told me, hey, listen, I'm interested in the Lexus. Okay, great. What's your budget? I don't want to go over 150. Okay, perfect. Mr. Client, listen. If I come back in the next meeting and I can get you the 750,000 that you need of coverage, but instead of 150, it costs 160, 170, 180, and I'm over by 30, 40 bucks. Is that a deal breaker? Or is that enough for you to still take action? Because I'm gonna try to get as close as I can, but you know, if I can't guarantee it, but I'm still within a $30 margin, would you allow me? Yeah, sure. Cool. You know what I'm now gonna do? I'm gonna do the 150 that your budget is into GUL. And that extra 30 bucks that you're allowing me to do, guess what I'm going to do with it? Term to fill the gap. Term to fill the gap. That's how I fill the gaps. That's how I do it. No lie. That's my mortgage protection meetings. My final expense is a lot easier. Remember, limited income, budget, limited on what you can bring to the table. You're not presenting IUL to final expense. You're not. You're not. I'm telling them, I go, listen, you're here because you're looking for final expense. I appreciate that. I commend you for protecting your family. Okay. Let me ask you a question. What is it on a monthly basis that you can afford, or do you know how much insurance it is that you're looking for? They're going to tell you, oh, I'm looking for 10,000. That's a more black and white conversation. I'm looking for 10,000. Okay. Let me explain to you how final expense insurance works. You get life insurance. You're protected until the last day that you're here, as long as you're making your monthly payment. Very black and white. Very simple. Very simple, very easy to understand. If you've paid into the policy, the moment you've paid into the policy, the same 10,000 that you signed up for, you no longer have to make payments. So what am I really doing with this insurance is I'm basically prepaying your life insurance. You make your first payment, I give you 10,000 of insurance. Once you've paid in $10,000, you no longer have to pay, but you are always protected from day one, because you and I both don't know when that day is going to come. Would you agree? I agree. Okay. Let's run some numbers. That's final expense meetings right there. That's it. Let's run some numbers. If they say, no, I really want like 100,000 or 200,000, Mr. Client, I have no problem. I have a solution for you. It's called the GUL, and I can explain how it works. But I just want you to know, at your age bracket, $100,000 of coverage is going to cost you an easy $400 a month minimum. And if you see that they don't flinch to that number, okay, great, let's go. Going in the meeting. But 90% of them are going to go, oh, I can't afford that. Oh, but I got this thing in the mail from my banker, and I can get $250,000 for $30. Mr. Klein, I just want you to know that's just a teaser. What they're probably going to sell you, if they sell you anything at $250,000 for $25 at your age, is probably an accidental insurance policy. So unless you're still, you're still paragliding or bungee jumping, that might not be the solution for you, because that means that your death has to be because of accident, not because of a medical illness. Oh no, I don't want that. I understand. But they just wanted to give you a teaser to get you in the door, so that then they can do, unfortunately, what's called a bait and switch. I'd rather just tell you black and white what I can and what I can't do. And I represent the entire market space here. So whatever it is you're looking for, if I can't find it, chances are nobody can find it for you. What's your budget? Boom, run a quote. Simple, transactional. Final expense, you do sell in first meeting. You do sell in first meeting. Unless they can do an IU, if they can do a GUL, then second meeting. But if they're limited income, I don't want to pay more than 75, it's a transaction. Here's the quote, here's how it works. Take apps, 5-minute approval, next. Build rapport still, because you want contingent beneficiaries. You want to run fiduciary meetings with those contingents. But for the most part, guys, it's transactional. It's transactional. Mortgage protection is the one that allows you to build even more. Neurolinguistics programming. Could the ladies
For the final expense, will be Americo fast.
Americo, Aetna, Oxford, all of those are fast.
So is there like
Mutual of Omaha, super quick.
Is there one preferred, just budget, or how would you choose?
How would I choose? Americo is the most lenient when it comes to underwriting requirements. Oxford's going to be most cost effective when it comes to price, but they're also the most stricter on underwriting requirements. Aetna is more of a recognized name brand. So if you're dealing with someone that wants a little bit more recognition, where they're like, I don't know Americo, I don't know what that is, go to Aetna. Yeah. Mutual of Omaha has also got a pretty good reputable name as well too. Right. But honestly, any of the four, man. Any of the four work. Really. The price difference is, marginally $7 to $10 differences type stuff. Like, honestly, it's whichever one you want, whichever one you feel more comfortable with. And in the same token, I'm going to talk to you now as well too with regards to your pocketbook. If they're all roughly about the same, go to the one that pays you the most too. It's not like you're charging the client a consultation. The insurance company's paying you a consultation. So you might as well. What is going on there? Can you guys hear me?